Supply.
Two of the mega cap tech names moving lower this morning. Apple taking a hit on reports that China is considering a probe of its App Store practices. Alphabet down on a revenue miss. Joining us now, Dan Flax, Neuberger Berman's senior research analyst. Dan, thanks so much for joining us. Lots to talk about this morning. Let's start with the Alphabet earnings. A lot of the street looking, I guess, at the cloud slowdown as the reason, but I wonder if it was more about the cap spending and what the prospects are for AI right now.
Good morning. Good to see you. I think the market is a little bit concerned in the near term on the CapEx increase. But when I step back and think about what's going on here, the cloud business, which, as you note, missed a little bit, they're capacity constrained. And really the most important thing, in my view, is that they're executing well in search. You're seeing good monetization within AI overviews. They're continuing to evolve the experience. When we speak to advertisers, they really like a lot of the benefits that they're seeing from generative AI. And so you put it together, you have search, it's healthy. YouTube, I think, has good growth prospects. Cloud at 30% growth remains attractive. And so I think the investments make sense from a longer-term strategic perspective. I think the company remains well-positioned, and I think the stock is attractive at current levels.
That's interesting you say that they're strong in search, because a lot of what we hear from experts right now is that Google search is being made obsolete by AI, that when you do search things, more and more people are just going straight to their AI apps to do searches. So how are they strong there, and why are we seeing so much ad spending going to a business model that's quickly becoming obsolete?
I think the money is going there from advertisers because it drives an attractive return on their investment, and that is why they continue to spend. I think the competitive landscape is fluid. Clearly, there's competition from a variety of both established platforms and the startups. But what we're seeing from Google, similar to the transition to mobile several years ago, is that they have the intellectual property, they have data, they have models, they have the balance sheet to invest, and they're evolving the experience. The younger users, which are particularly important, are seeing a lot of value from AI overviews. Circle to search is another example. And so the search market is growing, which is very important. And Google, I think, can grow and continue to evolve its experience. And so I actually think search is a very attractive market, and I continue to think they're well positioned.
Yeah, we see those shares down about 7% pre-market. Apple also down. There's that news, I don't know if you saw it this morning, Dan, about the Chinese government launching an investigation into the App Store. What should we make of that?
I think it's a continuation of investigations and probes that we've seen around the world around the App Store. I think you'll see a continuation of additional payment methods that Apple and Google Play, for that matter, will allow in their stores. I think the alternative stores will continue to evolve. What's important, though, as an Apple shareholder, and when I think about the Apple ecosystem, it's incredibly vibrant. And so even with this probe in China, we'll have to see how that plays out. The install base for iPhone is growing. In markets where they've rolled out Apple Intelligence, they're seeing solid demand for iPhone. And so you take the iPhone franchise, which in my view is durable. Services, I think you'll see strong growth. I think that will lead to better growth for the overall company over the next 12 months. And so I continue to like the name here.
All right, those shares down about a little over 2.5% this morning. Dan, thanks so much for joining us. We appreciate it.
Thank you.
It is 7 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Mike Santoli and Robert Frank. Among our top stories this morning, Americans may have to pay more for items that they buy from Shein and Temu after the U.S. Postal Service says that it will temporarily stop accepting packages from China and Hong Kong. That move coming after the Trump administration slapped new tariffs on Chinese goods and also revoked an exemption that used to allow packages worth less than $800 to be shipped duty-free. Walmart is eliminating hundreds of jobs and asking workers to move to central offices in Arkansas and California. The retailer is asking some staffers in New Jersey and other smaller offices to relocate, according to a memo that was seen by Reuters. And the Treasury Department says that Elon Musk and his Department of Government Efficiency have not rejected payments for things like Social Security and Medicare as a part of its review of that department. The Treasury also adding that Musk aides have only been given limited access to its systems as part of the review. Read only is what they're saying, not write over or allowed to change or decide on any of these sort of payments. Senators Elizabeth Warren and Ron Wyden, the top Democrats overseeing the Treasury, are asking the Government Accountability Office to open a probe into the administration's decision to give Musk access to that system.
All right, Uber just out with quarterly results. The ride-sharing company reporting earnings of $3.21 per share, revenue coming in at $11.96 billion. That topped estimates of $11.77 billion, adjusted EBITDA of $1.84 billion. That's in line with consensus. Uber reporting mobility and delivery revenue that topped estimates as well. Looking ahead to the first quarter, Uber sees adjusted EBITDA in the range of $1.79 billion to $1.89 billion. That's against estimates of 1.85. The consensus is right in the middle there. Uber CEO Dara Khosrowshahi will be joining Squawk later this morning.
EBITDA on the futures this morning, we are continuing to see some red arrows, although the Dow has pared its losses. It's now down by about 35 points. S&P futures are off by about 26. And the NASDAQ, it's where we've seen most of the damage. It's indicated off by about 175 points. Let's get over to Dom Chu. He's been taking a look at the market's biggest pre-market movers. And Dom, what's on your radar this morning?
All right, so Becky, Robert, Mike, U.S. listed shares of Novo Nordisk are climbing roughly about 3.5% after the Danish pharmaceutical giant reported better than expected earnings and soaring demand for its Wegovy obesity drugs. Those sales are increased by 107% compared to last year, but we're actually slightly below analyst estimates. Now, investors were pleased. The share is up about 4% or so keep an eye on that. Now, for more on the quarter, more color and context, tune in next hour for a Squawk Box interview with Novo Nordisk CEO Lars Jorgensen. It's going to be a must-watch there on the state of GLP-1 drugs. And we'll end it out with shares of Snap. They're down roughly 2.5% despite earnings, revenue, and daily active users all beating consensus estimates. Shares were up as much as, say, about 12% in after-hours trading yesterday morning. Analysts at Morgan Stanley are now downgrading the stock to an equal weight from an overweight rating, saying that the app's redesign is taking longer and ad revenue remains stubbornly below industry levels. So Snap shares just about flat on the session. For that and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers get full access to detail and analysis guides behind all of those big calls and stories. Becky, Snap, a lot of volatility. I'll send things back over to you guys.
Oh, Snap. Don, thank you. Good to see you. We'll see you in a little bit.
Ferrari shares racing higher yesterday, up 7% on that earnings and sales beat. It's selling more expensive models like the new F80 that cost $3 million per car, and it's making more per car from personalization and customized paint colors or customized seat leathers. Ferrari is now worth more than Ford and GM combined, with a market cap of $87 billion. Now, the cheapest Ferrari starts at around $350,000, so even a 10% tariff could be big. The CEO telling CNBC yesterday they are waiting for the actual policy to determine the impact.
We are trying to understand what is going to be the percentage and when is the starting date. In Ferrari, we have Ferrari, we have the dealer, we have the client. We'll see how to manage. We do not want to impact only one of the three players. We will manage. Let's wait when this is becoming a fact.
Ferrari owners, they can afford it. So unlikely to be a big impact, but on a dollar basis, that's going to be significant.
Well, the good thing is that Ferraris are not very large in the CPI inflation basket, so I don't think it's going to be.
That's true. That's true. Won't move the Fed.
It reminds me almost of Apple services, though, where you get them with the car and it's all the customization that you can really hook them up with.
100%. That's right.
Yeah, nobody would be seeing, just riding
The
around
standard,
a base model
regular.
Ferrari. Come on. All right, coming up, Disney reporting quarterly results a short time ago. The stock right now reacting positively, up about 1.5%. It was a beat on the bottom line. Disney CFO Hugh Johnston joins us next to break down the quarter. And later, Financial Services Committee Chair French Hill will talk crypto regulation, debanking, and Elon Musk's access to Treasury's payment system. We'll be right back.
Insurance.
Mattel is considering raising prices for Barbie and Hot Wheels toys to offset the cost of President Trump's tariffs. Mattel's CEO says the company will first try to make its supply chain more efficient or relocate some production before deciding whether to pass on the added cost to customers. Mattel sources about 40% of its products from China. Stock up about 4%, or 14%, excuse me. And we are ready with our Disney reaction.
We are. We've been looking through the numbers on this. Disney out with its earnings just in the last 10 or 15 minutes. Been taking a look at that, and the stock is indicated higher this morning after the release of those numbers. The entertainment giant reporting better than expected earnings and revenue. Actually, it looks like it's indicated down by about 0.6%. I've seen it up by as much as 2.5% over the course of the morning. Joining us right now, first on CNBC, is Disney CFO Hugh Johnston. And Hugh, good morning. Always great to see you, but especially on an earnings morning. So thanks for being here today.
Yeah, happy to be here with you, Becky. Obviously, feel great about the quarter, well in excess of expectations, and most importantly, broad-based growth. The entertainment business came in very strongly on the back of Moana 2, as well as Mufasa. And the experiences business performed very well, in excess of where we expected, despite the fact that we were dealing with hurricanes and the startup cost on a ship. The business actually, ex those costs, grew 6% in the quarter, which was a little better than we expected. So we feel like we're off to a great start to the year.
Yeah, and I will tell you right now, Disney shares are up by about 1%. They have been bouncing around a bit this morning. For anybody who hasn't seen the numbers yet, they came in at $1.76 a share. That's up from the $1.22 a year ago and compares to $1.45 that the street was looking for this most current quarter. Let's start with the experiences, Hugh, because there had been some questions about whether the park was going to feel pressure from either consumer spending or from inflationary costs. You point out that experiences, which includes the parks and cruises, did have to deal with some hurricane activity, and that cut into things. But where did things come down just in terms of overall? I know you've been looking for that division to grow by 6 to 8% for the operating income for the fiscal year.
Yeah, that's exactly right. So it came in, as I said, a bit ahead of our expectations. We knew that we were going to see a build across the year, driven by some timing on some factors in the previous year. And in fact, the consumer is a bit stronger than we would have expected. Broadly with the consumer these days, I think what we're seeing is consumers are just very value focused. And if you deliver value to them, they're willing to pay the price for it. And obviously a Disney vacation is great value. So experiences came in well in the domestic parks. Internationally with Paris grew quite strongly. And the cruise ships continued to perform well. So really across the board in experiences, we saw more strength from the consumer than frankly we had expected.
I think the other surprise was, even though you raised prices for your streaming costs when it came to Disney Plus, ESPN Plus, Hulu, you didn't see as many consumers drop the service as you had expected internally. What happened there?
Yeah, same basic story. It's funny, Disney Plus just continues to be a stronger and stronger service. The bundle with Hulu is working quite well. As you know, in December, we added the ESPN tile, and that's off to a great start. And obviously, ESPN Flagship, which will be a really terrific ESPN digital product, will be coming sometime early this fall. So I think consumers are looking at it and saying, this is really a platform that we need to have in our household. It's kind of a must-have service. So despite the pricing, we think we're delivering enough value there as well, as consumers want to stick with us.
Although, Hugh, the guidance is for perhaps a downtick in subs for the current quarter because of that increase in expected churn, I gather. And just more broadly on the streaming strategy, do you think that there's kind of the potential for consumer confusion? What's your vision for down the road, having the multiple services where some of them are all bundled and yet they also can operate independently? Where's that headed?
Yeah, I think you're going to see us make the product more and more focused over time. I think that your observation is very much a fair one, that there oftentimes are so many options, it does lead to a bit of consumer confusion. So the direction of travel we're heading in is, how do we make this as easy and as simple as possible for consumers, particularly to bundle, because we think that's where the best value is, and that's where they can capture the broadest array of entertainment that we offer. The way to think about Disney Plus in the future, I think more than anything, is it's going to be the portal into all things Disney, and something you're really going to want to turn on 24 hours a day, 7 days a week, when you're not watching CNBC, of course. But beyond that, we certainly feel like it delivers entertainment, it delivers news, it delivers sports, and in the future may deliver many other things as well. So I think you're right. We're going to be simplifying the service to just make it easier for consumers and make them want to do the broadest possible bundle.
Simplify meaning they're all going to get combined, and it's no longer a bundle. It's just
Yeah, that's it, Big. I think you'll see less rather than more options in that regard, because that's what consumers are indicating to us they want. They want less confusion.
And where will the pricing be for something like that?
Well, right now, I think we've got pricing that's going to be in place probably for the next 12 months. I expect this as a product that will continue to increase in price gradually over the course of a number of years. And then obviously ESPN Flagship, which is a much bigger and broader product, will bring its own separate pricing attached to it. But I think you'll see pricing steadily increase, not dramatically increase.
You know, Hugh, the profit line for Disney Plus, Hulu, and ESPN was $293 million. That was up from a loss of $138 million a year ago, and it's more than $100 million greater than the profit that the street was expecting. So what happened? What were the levers that worked there?
Well, it was a couple of things. And if you think about where we were just a few short years ago when we were investing in building the business, the business was losing several $1 billion a year. Now this year, our expectation is for it to make more than $1 billion. It's a combination of we've made the product better in terms of recommendation engines and all of those things that make it easier to use. In addition to that, because we're adding such terrific content, both on the movie side with the aforementioned movies, as well as terrific content like Shogun and Abbott Elementary and High Potential, it's a more compelling proposition. So the churn is going down and the stickiness is a little bit higher than what we had expected. And then on top of that, we found the right balance in terms of the level of investment that we need to put into content. So from that perspective, we have costs, I think, in a better situation. So you add all of that up, it's turned from a business where we need to invest in to a business where we're going to continue to invest, but at the same time, we'll continue to drive the margins that we'd indicated earlier and grow subs simultaneously.
How do you know that you continue to get the content right? I mean, it's great when the content that you're producing are hits and that there are things that really want to drive people in, but the way that subscribers can drop with these things, if you don't have a constant stream of new and exciting programming, I mean, that's the issue. How do you know you've conquered that formula?
Yeah, I think it's actually one of the advantages, so to speak, that the Walt Disney Company has is we create so much of our own content relative to perhaps some of our competitors. And that's based on all of the investments that we've made over the years in IP, like Pixar and Lucasfilms and obviously the Disney franchises. So by virtue of us creating 4 or 5 big tentpole movies a year, and then on top of that, smaller movies, by virtue of the fact that we're connected to ABC, so we actually can produce programming that both runs on linear and runs on streaming. We actually, I think, have a better feel for what we need in terms of content that perhaps someone might be who has to license more of their content.
And Hugh, you just mentioned linear, that was down 7% in the quarter. We've seen Discovery, Warner Discovery looking at maybe sort of splitting off the cable networks. Obviously, we have SpinCo with our parent company, Comcast. What are your thoughts right now? What are the company's thoughts for the linear side and what structures might work for the linear business?
Yeah, great question. We're very happy with where we are right now. And I think part of the reason we're happy with it is because we do have this integration between what we're doing on the streaming side and what we're doing on the linear side. In a sense, we've really created a perfect hedge. If consumers want to stay in linear, we're perfectly happy with that. If they want to move over to the streaming side of how they receive their programming, because of the incremental margins per subscriber on streaming are quite high. It's almost like a software business in a lot of ways. We're happy if they move. So we've actually kind of positioned ourselves quite well, and we think that integration works well for us. Now, I know those other companies are following different strategies, and those are probably things that work for them, but given the size of our streaming business, we actually think what we've built right now is well hedged and therefore gives us the best outcome.
Hugh, thank you for joining us this morning. It's really good to see you.
Great to be with you guys.
Take care. Hugh Johnston.
All right, coming up, 3 stocks that you might want to watch to consider for your portfolio. And later, the art of the trade deal. Rockefeller International Chairman and Breakout Capital founder and CIO Rashir Sharma joins us. Squawk Box. We'll be right back.
Time now for today's Aflac Trivia question. What professional baseball player was born on this day in 1934? The answer when Squawk Box returns. apply. And now the answer to today's Aflac trivia question. What professional baseball player was born on this day in 1934? The answer, Hank Aaron.
Welcome back to Squawk Box. Chipotle executives shaking off tariff fears during the company's conference call last night, saying they don't expect costs to rise much, even if there are tariffs on imported ingredients go into effect next month, noting that only about half of its avocados, this is surprising, come from Mexico, because I think 90% of all avocados in the U.S. come from Mexico, so that's interesting. If tariffs aimed at Mexico do go into effect, Chipotle expects that its cost of sales would rise about 60 basis points or 0.6 percentage points. So not much. I don't know where they're getting around. Must be California or something, or maybe other countries.
Yeah.
All right, when we come back, Financial Services Committee Chair French Hill will join us to talk crypto regulation, debanking, and Elon Musk's access to Treasury's payment system. Right now, though, as we head to break, let's check out Bitcoin this morning. It's barely budged. $98,643 is the latest tick. Squawk Box, we'll be right back.
You got this.
Let's get to markets and some Squawk picks. Joining us now, Sarat Sethi, DCLA Managing Partner. Sarat, good to see you.
Good to be here. Thank you for having me.
Really quick, I mean, I think the cliche is it's actually now a stock picker's market. Does it feel that way to you?
It does. It feels a lot more, just because if you look at the index, and we've talked about this at length, you know,
Yeah.
the 10 stocks, etc. But you go below and you pull back the curtain, there are a lot of companies out there that haven't done anything in the last 2 to 5 years. You know, and if you take an example, you know, a J&J, it's been flat.
Yeah.
Trades at 14 times earnings. It's got 5 to 7% earnings growth with a 3% dividend yield. You know, you're looking at a 10% grower if the multiple stays where it is at 14.
Yeah.
I mean,
Which
there's been reasons for those companies, like a Johnson & Johnson with some of the litigation that was overhanging.
Right, so you got the talc overhang, right,
Yeah.
which we hope by the end of this year is done, because it's been a couple of years, and we all know majority of the time when that overhang goes, that multiple starts expanding, or even if it doesn't and stays at 14, you're still going to get a 10% growth with a AAA balance sheet, right? So you've got M&A activity now that you can have, that you did have in the last administration. So I kind of look at the margin of safety, strong balance sheet,
Yeah.
potential overhang, a catalyst, and then, where do we want to go from there?
Yeah, I mean, the market's only wanted Lilly, basically, among the U.S. pharmacists. So we'll see if that
Yeah,
changes.
so it was, it's that bifurcation in
Yeah.
tech, right?
Yeah,
We
exactly.
only want AI stock. So, hey, if you want to play AI, look at a Workday. Right?
Yeah, I was
Workday-
going to say that one's moving this morning on a restructuring plan.
Well, that's the interesting. Our thesis on that is the margins were at 27%. The goal is to get to 30. But one of the ways you do it is to cut people. So they just announced this morning that they're cutting it in 0.5%. Now, that's one way to do it. The other way is to also grow into it, which we think Workday's going to do. They've got a huge addressable market. International is growth. That's ERP software for
Yeah.
human resources and financial systems. And the potential there is that's where you can use an AI, right? That's where you can use data management and you can use all the analytics on there. So there's a company we think that has a big, long runway ahead of it.
Is the perceived risk that somehow AI can let you kind of leapfrog those entrenched providers of something like a Workday services?
Well, it would be, but the thing is you need the data first. And Workday has the data. It's like Oracle, Workday. It's very hard for companies to say, as we all know, whenever a company does an ERP movement, probably don't want to touch the stock for two quarters. So a lot of them stay with there, and then if the information's there, it's just application software, and then companies like Workday can charge more for it. And the higher margins, recurring revenue. So that's it. But and if the application's there, then the incumbents are hard to do because you've got to get the data on that.
Thermo Fisher is a name you like. This is one that's been, the story has been a little bit dislocated for a while, right? It used to be this massive kind of, melt up type of name. Everyone loved the model. What's happening now?
So COVID came, stock went through the roof, and then, of course, after COVID fell off. It's the premier life science diagnostic company. You go there for everything. And really, in the last couple of years, nothing was going on. You didn't have
You're
any.
talking about like lab equipment,
Exactly.
the tools and
all
stuff.
the tools that you need to do the research on biologicals, to do more research in medical, the whole industry. And really, so the company's now on the offense. It's going to do acquisitions. It's an acquisition machine. It's growing double digits. And really, it doesn't matter whether it's Novo or Lilly or J&J. It will win no matter what. And it's not dependent on China. Only 8% of its revenues are in China. So that's another thing we want to be careful going into it. It doesn't mean you have to avoid it. It also means you can have a lot more volatility with some stocks that have more exposure. So again, beneath the big market, there are opportunities out there. It doesn't mean you don't have to own the big boys, but you can own a lot of these other companies, solid balance sheets, growers, and then you have margin of safety along with it.
What makes them attractive now? Why now versus over the last 3-4 years?
Well, Thermo, just because it had the COVID bump and kind of came and sold off. You also have in these places, these companies can do acquisitions now, which we really didn't do. So I find that attractive with solid balance sheets. They're not dependent on the credit markets, so you want that as well. So if rates move up or down, it's not of any.
Do you do the next derivative down and look for the companies they might be acquiring and say those would be attractive?
I will tell you, in doing this for 25 plus years, I've never been right on those, right? Because if you think so, the company's going to get acquired and it doesn't, and they have something, because sometimes those premiums are built in already, especially if the rumors are going.
Right.
So I really like to be with the leaders that are going to integrate them. And look, if it happens and a company gets taken out, great. But that's a very different game to play then.
Obviously, we got a lot of sort of pinball with the earnings reactions we're looking at this morning. I mean, Uber, it looks like it's going to back off. Is this one that you've tracked for a while?
We've owned it for a while. We sold half our position last year. Then the stock went down to the 60s, so we said, okay, let's back off. I mean, it's a great company. It'll be interesting to see. I haven't seen what they've said, but it's cash flow positive. There's growth there. The fear is always, can the autonomous driving come there? So I do like it. It'll be interesting to see, but I think them and Lyft, but they're the premier player in this area, so and they've got international growth as well.
It's always wild to say this like $160 billion company is going to trade up or down a few percent in a given day because maybe down the road there's going to be a fleet of Tesla.
It's amazing how that information can move in Uber. And Uber is one of those stocks in your portfolio that's high beta. So you're not going to get a 2-3% move on earnings anyway. It's normally one of these will go up 5-10 or down, and it'll settle in. And it's had a lot of different investors in it. It went from momentum investors to value investors to now where are we actually? So you have to watch that.
Yeah, it kind of did nothing for years. Yeah. So Rod, thanks a lot. Good to see you.
Thank you.
All right, coming up, Rashir Sharma of Rockefeller International on the Trump tariff battle and why the world won't wait for a deal with the U.S. And we are counting down to private payroll data from ADP. The numbers will hit at 8:15. Full market reaction is straight ahead. Squawk Box. We'll be right back.
Supply.
President Trump's crypto czar David Sachs, along with House and Senate financial leaders, have announced the formation of a bicameral working group that will focus on advancing crypto legislation. Joining us now, House Financial Services Committee Chairman Fred Schill. Congressman, thanks so much for joining us. We appreciate it. So there's been a lot of hyperbole and questions around what exactly DOGE is doing, what power they have, what authority they have, whether they're actually cutting off funding or whether they just say they're cutting off funding. What is your take right now on what DOGE is doing and what authority they have or should have?
Well, I think Elon Musk and DOGE are looking for government efficiency in all the cabinet agencies and across the government. This is at the direction of President Trump. I think it's a good idea, as I've said many times before. After years and years of building up government and government spending, it deserves to have a good, fresh, outside look With that said, anything that reflects something that takes statutory approval, of course, Congress has to be involved in. But we expect DOJ to give good recommendations to the Congress on things that require statutory work. And if things can be done by executive action as opposed to how they determine what contractors are in the agency or whether they need buildings or leases or have a way to upgrade their IT system, I think that's perfectly appropriate for the executive branch to do internally.
Yeah, you mentioned that he's there to suggest things, but he tweeted, or X'd, I guess, on Monday, he said, "We spent the weekend feeding USAID into the wood chipper." And he's taking polls on X saying, should we go after the IRS next? It does seem at least he's giving himself credit for actually stopping funding for these programs.
Well, we've got some big personalities out there working on DOJ, and certainly, but look, Marco Rubio, the Secretary of State, former chairman of the Senate Intelligence Committee, someone who's a skilled foreign relations person, understands that AID needs a strong look. As President Reagan warned us many, many years ago, there's nothing closer to eternal life than a temporary government program, and USAID was created by executive order back in the 1960s, and it's now 10,000 employees and an enormous scope. I think President Trump and Marco Rubio are saying, let's see exactly what it does, how it exactly spends money. Is it in the interest of the United States? The contracting basis, the work it does, is it really out saving lives and providing badly needed services? And we know that they are. And our chairman, Brian Mast of the House Foreign Affairs Committee, is on that job too. So I believe that while Mr. Musk can take credit for that, you still have Secretary Rubio, as to whom the USAID organization reports, and he's responsible for the reform and any direction that it needs to be, whatever direction needs to be taken, and what changes need to be reported to Congress if we need statutory changes.
Chairman Hill, just to go back to USAID, because we've had a few people talk about this morning, how it was created by executive order. It was by Kennedy back in the 1960s, but the liberal bastion that is the Wall Street Journal editorial page has said that this is Congress's domain and Congress's only, pointing back that in 1998, Congress enacted a law establishing it as a distinct entity. How do you read that? Because this is going to be played out through the courts, I would imagine.
Well, I think it's technically reports to the International Assistance Organization inside state. And it's been suggested that it report directly to Secretary Rubio now, which I think is still within the state jurisdiction. And if they want to change spending or direction in spending, and some of that was done by appropriations, then they'll come and make those recommendations in this appropriations bill about how they want to change those priorities. If they have discretion on how those grants are awarded to contractees in different areas under a broad direction by Congress, then that's an area where I think Marco Rubio could take a decision that we're going to continue this kind of spending and discontinue this other approach. And that's all within the confines of how that agency operates.
And going back to crypto, Chairman Hill, what legislation or what regulation do you think is needed right now? I mean, if you look at the crypto markets, Bitcoin is soaring. The overall market cap of crypto right now is over $3 trillion. There are something like 172,000 crypto millionaires in the world. There isn't any evidence, at least clear evidence, that the crypto market has been choked off by excessive regulation in the U.S. You look at the Bitcoin ETF market, that's flourishing. So what exactly would regulation do that currently investors in crypto can't do?
Well, I mean, what you say there is just, not true. The reason we have an exchange-traded product in Bitcoin, for example, is because people went to federal court to compel the SEC to do it, because their arguments in court blocking it for years were incorrect. And so we have the courts to thank for Gary Gensler's bad regulation by enforcement.
Yeah, but he's gone now. So he's gone now.
Yeah, he's gone. Sure. Okay, well, look, he's gone. That's true. But that doesn't change the fact that crypto has been under assault by the SEC over the past 4 years. And so the reason for legislation is to have a regulatory clarity that directs the SEC and the CFTC exactly what they need to do to protect investors, encourage innovation, encourage companies to use blockchain,
And that's what we're going to do. We're going to pass regulatory clarity. And I was so pleased yesterday that David Sachs, representing President Trump, my friend Tim Scott, chairman of the Banking Committee, G.T. Thompson, chairman of the House Ag Committee, and John Bozeman, chairman of the Senate Ag Committee, we all came together yesterday to talk about our priorities to move regulatory clarity for digital assets in the U.S. so that we can have fintech and digital assets be a premier area of innovation and technological advance right here in the U.S. instead of what Gary Gensler left us with was people moving out of the United States, moving offices to London, to the EU, to the Middle East to work on blockchain programs. That's not the right way to operate, and regulation by enforcement is a bad way to go. We should ask that they use an open process through the Federal Register to propose new rules, which Gary Gensler did not do, and to work with Congress to make sure that we have clarity for innovators up and down the capital formation arena.
Yeah, and one of the concerns about crypto has been that it's used for tax evasion. And I think that the regulation starts this year where the crypto exchanges will be required to file the 1099 forms with the IRS, so there'll be more transparency of what people have and are trading on crypto exchanges. Do you still support that regulatory change? And do you think that that will come under fire in this, whatever they design as new regulation?
Well, a digital asset, a crypto asset, is an asset, and therefore it needs to have clear rules and clarity around what the tax obligations are for capital gains purposes, ordinary income. And so I think when we look at the extension of the Tax Cuts and Jobs Act during 2025, we ought to make sure that we have digital assets taxed in the right way, just like we do any other asset class. But I think between having a dollar-backed stablecoin legislation here in the United States for clear rules of the road of how that payment system could work, as well as I say, rules for the SEC and the CFTC, will bring innovation and investment back to the United States, and we'll make sure that we're leading in this fintech niche in innovation across the country and the world.
All right. Chairman Hill, thanks so much for joining us. We appreciate it.
You bet. Good to be with you. Thanks.
All right, when we come back, why Ruchir Sharma says that the world will move on to trade without the U.S. He's going to join us right after this. Check out the futures this morning. You'll see right now we're still in the red. Dow futures off by about 46 points. S&P futures down by 25. The NASDAQ down by 165. Squawk Box will be right back.
Washboarders.com.
All right, welcome back, everybody. Volatility over tariff policy could be leaving the United States behind the rest of the globe. In his recent piece for the Financial Times, Rockefeller International Chairman Ruchir Sharma says the world is moving on to trade without the U.S. He joins us right now. Ruchir is also the founder and CIO of Breakout Capital and the author of What Went Wrong with Capitalism, which, by the way, is a huge defense of capitalism. Ruchir, thank you for being with us this morning. What do you see that's happening in the world of trade that you think the U.S. is being left behind?
Well, Becky, this has been a trend that's been going on for the last decade or so, that if you look at the 10 fastest growing trade corridors in the world, only 2 of those involve the US now, and 5 of those involves China. And China has clearly become the world's largest exporter, and also its share of global manufacturing is at a new high. So I think what's going on here is that countries are quietly nodding to what the US wants when it's brought to the negotiating table, as we saw with Mexico and Canada a couple of days ago. But beyond that, what they're doing is striking trade deals with other countries because they still view trade as a very essential part of their ecosystem. So therefore, the US share in global trade has been declining over the past decade. It started off with Trump's first term, continued through Biden's term as well, because remember, he also carried on with the policies of tariffs against China and other countries. And now I think what we're going to see is that that movement is only going to accelerate and gain further pace under Trump's second term. So I think that this is something the US just needs to acknowledge and deal with, that yes, today it is the indispensable nation. It runs the world's largest trade deficit. There are a lot of people selling into the US. But I think a lot of countries are quietly moving on, realizing that they just can't be that dependent on the US. This is happening on trade. This is happening even with bilateral payment systems of currencies. And that, I think, is eventually something that could come to hurt the US economy as well.
You know, Ruchir, this is something that, look, it's a movement that both parties have embraced. When Trump was elected back in 2016, he was running against Hillary Clinton, who was also opposed to TPP, the Trans-Pacific Partnership. So it wouldn't necessarily have mattered whether a Democrat or a Republican was in office. These are movements that have been populist movements that have really spread across the country. I think it's the feeling of workers who felt like they've been left behind, that manufacturing jobs have left. So what's the country to do when that sentiment is so rife, when you look and feel like you're on the losing end of some of these things? And what do you think the longer term implications would be?
So you're absolutely right, Becky, that so therefore even I made the point that under Biden, these policies continued, including the tariffs against China. But in terms of what have been the results over the last 8 years of these policies is something worth evaluating, and then also seeing about what else can be done to help increase US share in global manufacturing if that's the ultimate aim. One thing which clearly doesn't help is a stronger dollar. That the US has had a very strong dollar over the last 8 years. In fact, by some measures, the dollar today is the most expensive that it's ever been in its floating rate history, which goes back to the Bretton Woods system ending in the early 1970s. So under that environment, the US is very uncompetitive, and that doesn't help its cause. And every time there is news of tariffs, the dollar only tends to appreciate, which is counterproductive and something that's happened over the last 8 years. So that's a very important policy tool the US also needs to keep into account. And secondly, as I said, that even though tariffs have gone up, US share in global manufacturing over the last 8 years, US share in global trade over the last 8 years, all have come down. So this is not helping as yet. So I totally agree with you that the sentiment is that something needs to be done here because of the hollowing out that's happened in lots of America because of so-called globalization. But the policy tools so far haven't helped. I think one of the fundamental things that we don't acknowledge is that the US consumes too much and China produces too much. That is just a fundamental issue. And when the US runs a budget deficit, as we have discussed, of 6 to 7% of GDP, there's a result of that. You have a current account deficit because you're consuming too much of over 4% of GDP. And China, on the other hand, is running massive trade surpluses. So the basic problem of the China producing far too much and US over-consuming and running a very low savings rate is an economic identity that is very hard to explain, but that's the reality that's driving these massive trade deficits, and also the dollar being so expensive makes the US very uncompetitive.
But Rashir, you just mentioned overconsumption. I mean, all of what you just said about the trade deficits is just a signal that the U.S. Economy is extremely strong, especially relative to the rest of the world. What evidence is there that the U.S., by not participating in all these trade deals, is losing out economically? Because right now, the U.S. is the envy of the world when it comes to economic growth.
Yes, so you're absolutely correct about that. And so therefore, the U.S. also that also leads to some hubris and arrogance, right, when it comes to negotiations, because you think that the world needs you and so you can demand whatever you want from the world. But the two negative consequences, as I said, one is that the US may look like the envy of the world, but remember, it's running a budget deficit of 6 to 7% of GDP, far higher than any other country, and that's what's also helping keep the US economy levitated. And the second thing, as I said, that these are very long-term consequences. Trump himself is concerned about the fact that nations are trying to create their own reserve currency or reduce the dependence on the dollar as a unit of exchange, something that also happened after the Russian sanctions. Now, remember that the US, to fund its massive budget deficit, relies a lot on the rest of the world's savings. And so far, because of the AI boom, you've had a massive inflow of capital into the US, which has funded the huge budget deficit and the resulting current account deficit. But if the rest of the world gets much more concerned about that, that'll become difficult to do. And let's say that the world starts to move to alternative payment systems, and we've seen the rise of gold and even Bitcoin for that matter as sort of anti-dollar plays, that sort of will reduce the US ability to run these massive budget deficits and keep printing these very high growth rates. So, these are the consequences that the US has to think of, that there are the law of unintended consequences, really.
Rashir, thank you. Some deep thoughts on a pretty complicated subject matter. We appreciate your time.
Thanks, man.
Coming up, the latest read on housing, plus what financial regulatory changes may come under President Trump. QED Investors co-founder Nigel Morris joins us to talk IPOs and the investing landscape. Squawk Box will be right back.
Supply.
Weekly mortgage apps are out. Diana Olick has those numbers. Diana, I would guess with the 30-year still hovering around 7%, it's tough out there for buyers, I would imagine.
Yes, Robert, definitely. Mortgage applications were actually mixed last week as rates really didn't move much. Demand from home buyers dropped 4% compared with the previous week. That, according to the Mortgage Bankers Association's seasonally adjusted index. Demand was flat compared to the same week a year ago. The average rate on the 30-year fixed for conforming loans decreased to 6.97 from 7.02. That's for loans with 20% down. It was the lowest level in 6 weeks, but really not a huge move. We've seen rates really not move from that 7%. Applications to refinance a home loan rose 12% for the week and were 17% higher than the year before. But the percentage increases are big because the fact is that the volumes are just so low. You see these big percentages. Now, most borrowers today have rates well below what is being offered out there. But back to buyers, demand from them is now 39% lower than it was this time in 2019 or pre-pandemic. Home sales are running at about a 30-year low, while home prices nationally continue to hit record highs. And in November, the annual price gain on the S&P Case-Shiller Price Index was bigger than it was in October. So more sellers are offering price cuts, 15.6% in January, up from 14.7% of sellers in January of last year. That's according to Realtor.com, but that's still not a lot. And the supply of homes for sale is up 25% from a year ago. New listings, though, only up 11%. So a lot of that gain is that the homes are sitting on the market longer. Nobody's buying. The average time to sell a home at the end of January was 54 days. That's the longest since March of 2020, when the pandemic was just hitting. That's according to Redfin. Now, as a comparison, supply of homes for sale is still 25% below where it was pre-pandemic. And this, guys, as we're going into the spring market.
All right, Diana Olick, thanks so much.
A lot of that has to be because people have been waiting for mortgage rates to come down and they just haven't.
Yeah,
so
yeah.
Prices aren't coming down even if they're sitting there, and home buyer and homeowners are bringing down their prices. It doesn't matter. All right, it is 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Mike Santoli and Robert Frank. Joe and Andrew are off today. Among today's top stories, a potential casualty of new U.S. tariffs on China. Bloomberg says that the country is looking into investigating Apple and the fees that it charges local app developers. The report says regulators think those fees may be, in their words, unreasonably high for Chinese app makers. Shares of Apple off by about 2.2% on this news. Disney beating analysts' first quarter profit and revenue estimates. The company saw Disney Plus subscriber losses because of price hikes, but fewer people actually dropped the streaming service than Disney was expecting. And profitability was $100 million more for streaming than the street had been expecting. Disney CFO Hugh Johnston joined us in the last hour.
So I think consumers are looking at it and saying this is really a platform that we need to have in our household. It's kind of a must-have service. So despite the pricing, we think we're delivering enough value there as well, as consumers want to stick with us.
Shares of Google parent Alphabet also falling in the pre-market. The company missing analysts' revenue expectations for the fourth quarter. Google Cloud revenue also came in light, and CapEx spending guidance of $75 billion for 2025 would represent 47% year-over-year growth. Wall Street was only looking for an 18% increase in CapEx growth. That stock down by 7.25%, and that's a big part of the problem with the NASDAQ futures this morning, too.
For sure. Let's get to Dom Chu with a look at some more of this morning's pre-market movers. Dom.
Hey, good morning, Mike. Good morning, Robert. Good morning, Becky. Well, let's start with Uber shares. They're down roughly about maybe 4% or so right now. That's despite reporting a beat on revenues for the quarter. Earnings per share came in at $3.21, but it is not, well, the question is whether it's comparable. Right now, it doesn't appear comparable to analyst estimates. There is also a $6.4 billion benefit from a tax valuation release, which is adding to the comparability issue, so we'll keep an eye on that. But mobility delivery sales both beat estimates for the outlook for the current quarter. Bookings fell short of consensus, so on balance, what you have is a 4% drop in shares of Uber Technologies. Meanwhile, Harley-Davidson shares are slipping after the motorcycle maker reported a big miss for the fourth quarter. They posted a loss of 93 cents a share compared to estimates for a 66-cent share loss. Revenues fell 35% year over year. The company's CEO said that the high interest rate environment has impacted consumer confidence, Shares have lost more than 20% of their value over the course of the past year. They're currently down 3% in the pre-market trade. And we'll finish with Capri Holdings. Those shares are down roughly 3% right now after the parent company of Versace, Jimmy Choo, and Michael Kors and other brands reported Q3 results below expectations. Total company retail sales declined in the low double digits, while wholesale revenues decreased in the low teens. Capri CEO John Idle said the company is disappointed with those results. It's reevaluating its strategic initiatives to improve current sales trends. Those shares have lost half their value over the course of the past year. Remember, Capri had been trying to merge with Coach and Kate Spade parent company Tapestry, but that deal was called off after it was blocked by the Justice Department in the Biden administration. So, Mike, Capri Holdings down about 2 3/4%. I'll send things back over to you guys.
All right, Tom, thank you. Our next guest is here to talk about the markets, but also about the second Trump administration's possible impact on fintech, the consumer, and IPOs. Joining us now is Nigel Morris, co-founder and managing partner at venture capital firm QED Investors and co-founder of Capital One Financial Services. Nigel, thanks for coming in.
Good morning.
To see you this morning.
Morning.
Let's talk about this interplay of, policy, the markets, IPOs. It's interesting when you see how few IPOs there have been relative to the size of the market, given S&P's up 20% 2 years in a row. Technology's been the leadership sector. Is that because of anything going on with regulation, or is it just that the very largest companies have been where all the excitement and action has been?
Well, you're quite right that it's been actually a paucity of IPOs. In 2021, there were 61 fintech IPOs. Okay. And in the last 3 years, cumulatively, there's been 6. So it's been really not much happening there. The truth is, though, we have now a whole generation of fintechs that are now preparing for IPO. There's a number of companies that have filed their S1s. We have Klarna, we have Chime, we have Stripe that's very big that hasn't filed an S1, I don't believe. But these entities now are very profitable. They passed the Rule of 40 test. They're growing really well. They've got grown-up management teams. And I think they're all waiting now in the wings to see how the economy behaves itself over these next few days and weeks. Of course, this has been incredibly tumultuous the last 2 weeks, but I think we'll see in the first quarter the market being tested by these generation of fintechs. And I would remark that Service Titan went public 2 or 3 months ago, and their stock has behaved very well. So that's a good litmus test, I think, of how responsive the market will be.
Fintech is so interesting. I sometimes glibly say, like, either fintech doesn't exist or everything is fintech. Like Visa's fintech in some respects, JP Morgan's fintech. What do you mean when you suggest that there's some separate subsector called fintech?
You know, the way I think about it, Michael, is that you've got incumbents, the old traditional banks, and then you've got these innovators. And in some ways, Capital One was, I think, the first generation of breakout fintech now 30 years ago, and then followed by PayPal. But if you look at fintech, and this is a study that we've done with the Boston Consulting Group, fintech revenues added up worldwide represent 320 billion on a base of 14 trillion. So fintech, as measured by these attackers, these challengers, represents 3% of total revenue worldwide. So it's still very, very early days. And I think we're seeing, as I mentioned earlier, these companies now coming through that are real companies that have real management teams and are real threats to the incumbents.
One of the more clear potential policy movements seems to be lighter regulation on those traditional banks. I mean, that's what the market has sort of celebrated in advance. Does that change the competitive equation for these upstarts, or is it, it's still going to be kind of open season?
I think you're quite right. There's a very much a pro-growth environment from the regulatory front. We've seen the CFPB head move off stage and Treasury Secretary step into that role. And I think we're seeing a much more benign orientation in regard to financial service regulation. A CEO I was talking to yesterday said the gloves are now off in the deployment of AI across financial services. The CFPB had certain reservations about what you could do with AI, which I think, by the way, is alchemy. It's magical. But we will see, I think, less friction. We'll see more inclusion. We'll see more bank consolidation. I mean, we have 4,500 banks and 4,500 credit unions in this country, and 8,950 of them are subscale. So we will see that starting to come together.
Nigel, who benefits in this new world? Is it the big get bigger and bigger because they can take the AI gloves off, they can deploy more capital towards that, they can buy smaller competitors? Is it the new startups that are going to be able to run roughshod around that? Like, who wins in this environment?
Certainly in the shorter and medium term, my take is that it is the advantage fintechs. They're smaller, they're more technologically adroit. They can build these models out of the ground really quickly, both in terms of management of their costs and writing code. The incumbents will take longer. They will evaluate AI, then they will determine where in the organization AI will be managed, and then they will have a vendor list that the organization can buy from, and then they will start experimenting. I saw a data point just the other day that said 16% of banks in the US are experimenting with AI. Virtually every one of our portfolio companies, we have over 100 active companies worldwide at QED, virtually every one of them now is deploying AI at scale. And
So
any pitch that you hear from any company now starts with, here's how we're leveraging AI.
But so are the big banks. I mean, they're not just playing with AI. They've been investing and playing with it and using it at large scale too. Do they buy all of those startups, the fintech startups that are there?
You know, it's been this has been an interesting phenomenon, how we've seen more fintechs buying fintechs and amalgamating them than we've seen banks buying fintechs. And I think there's a real schism occurring in the incumbents, where Capital One, JP Morgan, Citi, Chase, Amex, Fifth Third, Key, off the top of my head, are very much leaning in to looking at the fintech universe and saying, what can I buy here where I've got product market fit, I've got clear unit economics that make sense. It'll take me a long time to develop it myself. I will just buy my way in. Whereas I think the vast majority of the 9,000 banks and credit unions are still focusing on how do I buy things that look more like me and smushing them together.
Can't all these companies just tap the private credit market? I mean, when you look at IPOs, I understand why investors like you, private equity, venture capital, they want exits. But these companies, you look at the fundraisers by the big AI companies in the private capital markets, which are now a $2 trillion market, they don't need to go public. They don't need IPOs.
I think that's exactly right. We've got, over the next 2 days, I've got 15 of my portfolio companies off-site where we are putting together an IPO readiness seminar. These are companies that over the next 2-3 years, if the window's open, could plausibly go public. And a discussion there is, why would you want to go public? Here's some of the positives.
Everything.
Yeah, you've got Sarbanes-Oxley. You're in a fishbowl. You are very focused on short-term earnings management. Your board will change dramatically. And the private markets are very vibrant, as you say. So I think that if we talk to our investment banker friends, they'll always tell you that it's a good thing to go public. And of course, liquidity is an important thing, and that's been a huge issue in venture and private equity these last 3 years. There has not been that liquidity. So it's very attractive, and in the Capital One days, going up there and ringing the bell is a wonderful milestone to enjoy. But the trade-offs are more complex, and you should not automatically assume that you should go public.
All right, Nigel, great perspective. Appreciate the time today.
Thank you very much.
All right, coming up, ADP private payroll data for January. That's coming up next. And later today, don't miss Uber CEO on Squawk on the Street. They break down the company's earnings. Squawk Box. We'll be right back.
Raza.co.
All right, welcome back to Squawk Box, everybody. We are approaching January's ADP private payroll report. The futures ahead of that, Dow down by about 67, S&P futures down by 25, the NASDAQ off by 160. Steve Leisman is here, and he joins us with that number.
Betsy, thank you. The January ADP private payrolls estimated 183,000. This is the private payroll company ADP with its estimate of national private payrolls. And you can see there, goods not doing so great, but it's all in the service sector, 190,000. And there's the non-farm payroll estimate in and around exactly where ADP is at 169,000 for this Friday. They revised up December from 122 to 176. That's a little closer to where the government was with the BLS report. And then pretty good distribution across business size here. 39,000 for small business, 92,000 for medium, and 69,000 for large business. And then pretty good spread again across different industries again, but all in the service sector. Trade, transport, and utilities up 56, leisure and hospitality up 54,000. And education and health services up 20,000, with professional business services up 14,000, and there's manufacturing taking that a hit. I'm not sure exactly what's going on there. Maybe we'll ask Neela Richardson in a second. Key though here, these medium annual wage changes, job stayers 4.7. That's steady, and job changers up 6.8%. Just very quickly, some headlines from Tom Barker from the Richmond Fed this morning. He says he still leans towards cuts this year, expects 12 months inflation to come down nicely, but he says there's a lot of uncertainty. It goes beyond just tariffs to immigration, regulation, and other issues. Becky?
All right, thanks, Stefan. You called me Betsy at the top. I've only known you 25 years, Steve. You did. You called me Betsy at the top. These guys heard it. I know she's your producer. They took him away. Oh, now I feel bad. Steve doesn't get to play back with me. Anyway, joining us right now is Neela Richardson. She is ADP chief economist. Neela, let's run through these numbers. What jumps out at you? What should we be really paying attention to?
First of all, hi, Becky. I'll say it again. I think we should first of all underline the strength of the labor market. Now remember, the January report for ADP and the numbers that you'll see Friday from the government have been re-benchmarked with a QCW number that it pulls the numbers together for January. And so what I think you'll see from both ADP and on the Friday report is strength ending the second half of 2024 that carried over into the first month of 2025. But as Steve pointed out, you'll see that dichotomy between goods and producing and services. This is very much a labor market where hiring is led by consumer-facing industries, namely leisure and hospitality. So we're going to be seeing if that carries over through the whole year 2025, or if manufacturing can have a chance to rebound this year.
Hey, Neela, we have talked so much about how DOGE is in effect. The government is looking to try and cut back on spending, cut back on employees. They are offering buyouts to lots of people throughout the government offices. I know you focus on private payrolls. Is there going to be a point where ADP does not necessarily match up with what we can anticipate from the Friday jobs report, because government numbers are going to be such a big factor in this? Usually government is a plus and an upside to adding to those jobs reports, but we could see it really coming down in the weeks and months to come.
We've actually seen in the government numbers, not the government jobs, but the government numbers, a turn towards the private sector. Government and healthcare was carrying the BLS report for a lot of the months over the summer and the fall. But if you look at the end of 2024, it was really the private sector that was taking off and accounting for the majority of the job gains. And I think you still see that momentum in January. So clearly, I think for the first initial months of this year, it's really going to be private sector dominance, and that should be consistent between the two reports.
Okay, and if we were to look for any outliers throughout these numbers, what surprised you, if anything?
Construction. We're still in need of residential construction. There's still powerful trends when it comes to data centers and fueling AI, and that leads back into real estate. So I'm surprised to see the construction jobs were so short, only 3,000 this month. I really think it's tied to a labor shortage, not a shortage in demand. And so if we're going to see that support for housing, and remember, Becky, housing feeds into inflation if we don't have enough housing supply, then we really need to see more job gains in construction to support that industry.
The median change in annual pay up 4.7% for job stayers, up 6.8% for job changers. That seems higher than some of the numbers I had seen recently. Is that an indication of inflation potentially coming back?
Yeah, so we've seen that job stayer number not budge really from 4.7%. And new this month, we actually increased our sample size by 5 million workers that we can uniquely match through time. So that's a 14.8 million sample size. And so there's a lot of data that has a very rigorous underpinning to that 4.7% number that we haven't seen a lot of movement in. And yes, that is much higher than it was before the pandemic. So wages are still elevated, and there is reason to be cautious about the future moves of inflation because wages are that bridge in terms of labor costs between the jobs market and inflation on the other side. So there's a right to be cautious here.
Okay, Neela, thank you very much. Great to see you.
Thanks for having me.
All right, coming up, an interview you don't want to miss with the CEO of Ozempic and Wegovy maker Novo Nordisk on the company's latest results. Stay tuned. You're watching Squawk Box on CNBC.
Restrictions apply.
Novo Nordisk reporting better than expected fourth quarter net profit this morning, but the company did forecast a sales slowdown this year. Joining us right now to talk more about it is Novo Nordisk's CEO, Lars Fjørgaard Jorgensen, and our CNBC Health and Pharma reporter, Angelica Peebles. Angelica?
Hey, Becky, good morning. And Lars, it's nice to see you. Thanks for joining us on this busy morning. Now, this morning on the call, you said that you're seeing about 200,000 weekly prescriptions for Wegovy in the U.S., and that's double what you saw last year. But there's a lot of concern out there about your ability to stay competitive with Lilly and if we're seeing a slowdown. So what are you seeing, and how are you going to stay competitive against Zepbound?
Well, we have a fantastic product, and I think so far what has really been gating the market performance is the availability of supply. And of course, in the beginning of the year, you often see some formulary changes that also move the scripts a bit. So we're quite confident that as we move into the year and we'll be supplying more and more of our starter doses, we can see a nice step up in our volume and serving more and more patients. And the guidance we have given for this year also, you can say, testifies to an underlying significant ramp in our business. So we're quite confident both in the demand in the market and also our ability to supply and compete in that market.
And I want to talk about the pipeline for a second, because it's been a rocky few months for you with some of the readouts that you've had. So between CagriSema and Cretin, how do you anticipate that you're going to stay ahead, and where should we really be focused right now?
Yeah, I think we had the opportunity on our just completed conference call with analysts and investors to really explain that when you have a potent biology like what we see with CagriSema, it's important to understand that you actually amplify the difference across patients. So what we see is that there are a group of fast responders that really lose significant weight loss, actually more than 25% throughout the trial period here, and many of them are approaching a BMI where they're no longer obese. And then we see also a subpool of patients that continuously keep losing weight and actually have not plateaued at the end of the trial. So they need, say, longer treatment. So I'm very confident in the potency of the biology we have here, and we also showed some data that is actually very well tolerated from a GI side effects perspective. So CagriSema is strong, and we'll do some more data to show that. And then we've also seen amycretin in a phase 1A, 2B study, 1B, 2A study, really showing a very, very nice weight loss over a 30-some week trial period. And we hope that we, in dialogue with the agency, can find a way to move into full development of that relatively shortly. So a real strong pipeline to compete with for the near-term future. We've also just started phase 1 trial of a triagonist. So again, a next generation compound looking at three biologies in one molecule. So I'm really excited about our opportunity to drive growth in this space.
Lars, I'm curious about pricing, particularly in the U.S. If you look at the price of your drugs in the U.S. versus the rest of the world, they are, as is typical, much higher. But typically healthcare insurance plays a role in this. But look at the average price in the U.S. is $969. In France, it's $71. What do you see going forward on pricing, and could that have an impact on margin?
Well, I think it's important to note that here you're actually comparing apple and pear, so to say, because, for instance, the German price is actually on a low dose, not the high dose, whereas in US it's pricing before rebates. So these are not fair comparisons. What I see in the US is that pricing is coming down. It's typically seen across all categories that you launch at a relative attractive price, but then you give rebate concessions year over year, and net price moves down. And for mature products, pricing in the US is actually low compared to Europe. So if you look at insulins, for instance, what government pay in the US is actually lower than what governments pay in Europe. So it's a different market structure, but I think it's a known structure, and I think it works because we also bring products that drive down healthcare costs by serving some of the comorbidities that actually leads to the highest part of the healthcare cost in a country like the US.
And on pricing, of course, Wegovy and Ozempic were selected as part of this next round of Medicare price negotiations. You've been through those negotiations before. What did you learn from the first time around, and how do you anticipate that this negotiation will actually change the price of those two drugs?
Yeah, that's right. This was largely anticipated based on the success of these products in the market, making it one of the big drug categories. So we had all along anticipated that. And as you say, we had a prior experience with our insulins. And overall, I think we managed that quite well. It has changed a bit, say, the gross to net model for insulins. Instead of having a list price and rebates, you trade on a net price. So I think there are a lot of learnings there. If you look at our GLP-1 business, of course, it's only a smaller part of our overall book of business that goes to the government. There's still a commercial channel. And of course, we also have the innovation we talk about. And there's still a very large volume opportunity. We're only serving today around 1.5 million people living with obesity in the US, and we have access to 55 million of those. So there's a volume and there's innovation play that also means that I believe we can handle the IRA. And as long as you're innovative and you serve big markets and untapped opportunities, I think this plays out to the benefit of patients, healthcare systems, and also our shareholders.
And have you had an opportunity to speak to the new president or the new presumptive HHS secretary? And if you haven't spoken to them, if you were able to have that opportunity, what would you ask them, or what would your priorities be?
So I have not had such an opportunity, but I have noticed that there are many similar objectives. As a company, we are investing significantly in the US. We have more than 10,000 employees in the US. We have a number of expansion programs going on. Just one announced a few months back is a $4.1 billion CapEx program taking place in North Carolina. I've also noticed that there's a key interest in say, health and dealing with chronic diseases. That's the purpose of our company. So I think we have many overlapping objectives, and we are happy to engage with any policy maker in any country in how we can join forces in achieving these, what I would say, win-win-win. Win for the patient, win for healthcare system because you forgo some of the comorbidities that are associated with chronic diseases, but also win for the economy in terms of increased economic activity level. And when you create all those win-win-wins for society, obviously we'll also be winning as a company. So I think this is a really good topic to have a debate on.
Lars, thank you for joining us today. We appreciate it. Angelica, thank you.
Thank you.
Rick Santelli is standing by at the CME in Chicago. He's got some breaking economic data. Rick, the numbers, please.
Yeah, and this is a date with history on this number. The trade balance for December, minus $98.4 billion. Minus $98.4 billion. That is the second largest trade deficit ever since we've been recording, which goes back to January of 1992. The biggest was $101.9 billion. That was in March of 22. That was the biggest. And pre-COVID, you know what the biggest deficit was? Pre-COVID, the biggest deficit was minus $68 billion. 30 billion smaller than the current 98.4 billion. Now, we're not getting a huge reaction in the marketplace because this is one of those numbers where, it just doesn't jump out at you that you need to hit the market in a certain way. What it tells me is that the globe's behavior has been modified, that deglobalization is showing up, that the U.S. is the biggest, strongest economy in the world is showing up in these numbers. So there's many ways to take it. But the way I take it is this is a big deal, and this administration, President 47, pays attention to these numbers. Now, if you look at interest rates, every single maturity today, 2s, 3s, 5s, 7s, 10s, 20s, 30s, is trading under yesterday's low yield, above yesterday's high price. If we were to close here in a 10-year, it'd be the first time we've closed under 4.5% since the 17th of December. From an intraday perspective, current 10-year yields are the lowest intraday since the 18th of December. This is a very seminal moment if you're a technician. We want to watch which side of 4.5 a 10 closes at. And of course, the 30-year seems to be ahead here. We want to make sure that both close under key levels. For the 30-year, that would be 4 3/4. We still have the service sector PMIs to come out at 9:45 and 10 o'clock. Stay tuned. Mike, back to you.
We will work. Yeah, December 17th, right before that December Fed meeting, let's remember. All right, the latest Treasury quarterly refunding numbers are out, closely watched by the bond market. Megan Casella joins us with the details.
Mike, Treasury is planning to auction off $125 billion in securities. That matches expectations and holds exactly in line with the past couple of quarters, so no real surprises for the Treasury market here. A few more of the numbers for you guys. Treasury says it will be refunding $106 billion and raising about $19 billion in new cash. The breakdown in tenors will also hold the same as before, so that's $58 billion auction for the 3-year, $42 billion auction for the 10-year, and $25 billion for the 30-year. Now, something I do want to flag here, Treasury also says in this release that it believes it will be able to hold auction sizes steady for at least the next several quarters. That language has been in there for several quarters now, and it's a good sign for stability in the bond market. But I highlight it now because there had been some expectation that Treasury Secretary Scott Bessent, who had been critical of Secretary Janet Yellen's reliance on shorter-term debt, could have been pushing now toward issuing more longer-dated bonds, that he would at least for now be removing that language from the statement, but Treasury says that it believes it's still well positioned to address any changes to the fiscal outlook, even while holding these auction sizes steady. So good news there. Keep an eye on some volatility today in the bond market, maybe in the long end of the curve especially, but this should overall come as welcome news for the market. Guys.
Yeah, Megan, seems to be the case. Always easier to, I guess, have strong opinions about issuance and maturities when you're outside Treasury than when you're in there. Thank you very much. Coming up, we'll go inside Elon Musk's unprecedented access to and shakeup of the federal government. As we head to a break, take another look at some of the biggest companies reporting earnings this morning and how the stocks are reacting. Stay tuned. You're watching Squawk Box on CNBC.
New this hour, the United States Postal Service says it will continue accepting all international inbound mail, including packages from China and Hong Kong. It had announced yesterday that it's going to stop accepting those packages because of President Trump's executive order targeting exemption on goods less than $800. The Postal Service now saying it's going to work with Customs Border Protection to implement efficient collection mechanism for new China tariffs to ensure the least disruption for package delivery. This was a big deal because you can imagine the Postal Service just stop anything out of China and Hong Kong. We're not going to deliver it.
I was wondering how much of my stuff wasn't going to get here. I think this is also bureaucratic confusion as to how to interpret the executive orders. I don't think this was an intentional and then said, oh, never mind, we can't do that, China's mad. I don't think that's the case. I think this is, anybody you talk to in any of these government agencies are having a hard time trying to figure out how to interpret some of this, and there's going to be some bumps along the way. So I think that's just an example of this. When we come back, the future of crypto and AI under President Trump. We're going to speak with venture capitalist Steve Jang, who's backed companies in both areas as well as the broader tech sector. Stay tuned. You're watching Squawk Box, and this is CNBC.
Supply.
Elon Musk swiftly trying to overhaul multiple government agencies, sidelining career officials in order to advance an aggressive cost-cutting agenda. Earlier this week, our next guest co-wrote an article covering what the New York Times dubbed Musk's, quote, incursion into the federal government. Speaking about Musk, the piece says, quote, at one point after another, Trump officials have generally relented rather than try to slow him down. Some hope Congress would choose to reassert itself. So far, they are not. Joining us now to talk about Musk's approach, his power and concerns surrounding his New York Times reporter, Teddy Schleifer. Teddy, so great to see you, and again, terrific work following the money here. It was interesting. There's been a lot of hyperbole on all sides of this. especially around USAID. And I, for one, was interested to learn that we spent $20 million on some Iraq Sesame Street show, $2 million on a Moroccan pottery class. It kind of brings me back to the mid-1980s. You wouldn't remember it, but back then there was the $640 toilet seat and the $430 hammer at Pentagon. There's always waste. If you look at AID as a whole, it's $40 billion. It's a lot of money, but it's less than 1% of the government. Do you think we're making too much of this agency, or do you think this sort of signals a bigger plan ahead for other agencies and cuts for Musk?
Yeah, a great question is, why does Elon Musk care so much about this agency? Elon is in some ways a victim of his own platform. I mean, he sees things on Twitter or on X and responds. To some extent, it's very humanizing. And Elon has been ingesting a lot of content from right-wing media that suggests that USAID is, the rotten core of American society, or at least American foreign policy, and that's why he's focusing so much on this. Which is $40 billion, but there are a lot of agencies that have a lot more zeros attached to that. And the question you're getting at is, does this presage sort of the playbook, right? Is this an example of what's going to happen at HHS or the Pentagon or whatnot? Kind of those big ticket items for the federal government, where Musk sends in a few 25-year-olds to kind of wreak havoc.
Yeah, and we've talked a lot about what legal right he has to do this, and a lot of differences. Even we had some members of Congress on today saying, well, he's not actually cutting anything. He's just making suggestions and highlighting things. What's your sense? And Musk himself has said on X that, we fed USAID into the wood chipper over the weekend. What's your sense of whether he is cutting, whether he's just making suggestions? The president of USAID is a little bit different because it's sort of an executive order. But is he actually making cuts, or is this just being overblown?
I mean, if it's being overblown, it's being overblown by Elon Musk, to be clear, not by the media.
Yeah.
There is some difference here, I think, between Trump and Elon on this question, as you guess. Donald Trump is the democratically elected president of the United States, and Elon Musk, Trump has described as sort of his enforcer, the person who's carrying out his executive orders on his behalf to make sure that the Trump government is following what the Trump president, or President Trump, wants him to do. Elon is portraying himself as an executive, right? And that raises all the questions about presidential power that have been debated for decades. It's just he's not the president, right? So there would be ample questions whether Trump himself has the power to do these things, and then you kind of put in a surrogate, a political appointee and someone who Donald Trump has the right to name to the head of this body, but it raises a host of other legal questions. So I don't know the answer to the legality of whether or not what Trump is doing is allowed, and we certainly don't know the answer to whether or not Elon Musk can do it.
Yeah, and it was interesting when Treasury Secretary Besson put out the statement yesterday saying Elon Musk and Doge doesn't control the Treasury database, but that doesn't mean that they don't have it. And what's your sense of what they've done with that data? What kind of legal resource is this going to go in the courts? What do you think of these lawsuits against it? And do you think that data has actually been downloaded onto a private server, or do we even know?
Well, the most interesting word in that letter from Scott Besson from Treasury, not from Scott Besson himself last night, was the word currently. They said there that currently only Treasury officials have access, or have read-only access to the payment system. I don't know. I have no idea if that means anything, but it certainly stood out to me. It made me wonder, has that always been the case over the last week? And they've said, we don't have no evidence to say that Elon Musk has downloaded that information to a private server. Certainly, there's a ton of speculation and conspiracy theorying and hypothesizing. But I think this is all coming into a vacuum because the Musk team and the Trump administration has not been honest about, or has not been transparent about what exactly has been going on here. There have been some conflicting reporting about whether or not the read-only thing is true, whether it's always been true. We report here at the Times that the White House has said on record, which I think is important in this day and age, that it is read-only. And they've said that it is Doge officials. This is a guy named Tom Krause, who's the Silicon Valley CEO, who is the Treasury, one of the lead Doge people to Treasury, who has that power. But certainly, I think we're just getting started here on answering these questions because, you know, obviously, certainly a lot of market investors want to know whether or not, you know, the Elon team has the ability to stop a dollar from going out of the U.S. government.
Yeah, and it sounds like his next target is the IRS, which also is under Treasury. He put out a poll on X saying, should we audit the IRS? Given the sensitivity of the Republicans toward what they said the Democrats did with IRS data, leaking all the billionaire information, what's your sense of whether he could get access to IRS data? And what's the chatter in D.C. right now about what he wants to do with the IRS?
Sure. I mean, this is the guy who said he's made the largest tax payment in history. Suddenly, just seems to be interested in the IRS. We've reported here at the Times that the Elon team for almost the entire transition has been thinking very, very creatively or very interested, let's put it that way, in the IRS infrastructure. There's a guy, an Elon advisor named Barish Akis, who had met with IRS officials during the transition and was asking a lot of pointed questions about the way it works. I mean, there certainly are a lot of experts on all sides who think that the IRS infrastructure is very outdated, and frankly, auditing the IRS.
He should help them with their technology. That's what he should be doing. He should help them with better technology, more efficiency, and more enforcement and more collection.
I mean, look, auditing the IRS has been something, as you know, has been a talking point in conservative policy for a long time, and frankly, I think a lot of presidents would look into that if you were a Republican. But I think the Elon involvement is interesting to me as a reporter who covers him, is because this is somebody who has enormously biased opinions about taxes. I'm not saying biased in a negative way, but like, is there anybody in America who would care more about some of the specifics about, wealth taxes or carried interest or, tax credits for companies like Tesla? The conflicts of interest here are so obvious, it's almost not worth talking about. And look, Musk can very well do a lot of things you're talking about and modernize the IRS infrastructure, and maybe Democrats and Republicans would applaud that. I don't think the media should be reflexively anti-DOGE, or anti-cost savings. I just, the conflicts here are obvious.
Teddy, we got to run. Thank you so much. Great articles, terrific, great coverage. We appreciate it.
You bet.
All right, coming up, Squawk will be right back.
Insurance.
I've talked to many founders over the past few years, and they've told me repeatedly that the number one thing they need from Washington is regulatory clarity. They just want to know what the rules of the road are so they can abide by them.
That was White House crypto czar David Sachs at a news conference yesterday. During President Trump's first week back in office, he issued a goal of proposing a regulatory framework for the operation of digital assets in the United States. Joining us right now on the future of crypto in the U.S., as well as AI, is Steve Jang. He is Kindred Ventures founder and managing partner. And Steve, what can you tell us so far about what you've seen from this new administration, what you like, and if there's anything that you think that you'd like to see more of?
Well, one thing you have to give them, and good to see you, Becky. Thanks for having me back on. Well, one thing that you have to give them is that they're fast. They're rolling these out in a matter of days. These proclamations and a lot of the EOs that you're seeing. I think one of the things that we're looking forward to with David Sachs in the administration as the AI crypto czar is that the low-hanging fruit, Bitcoin, stable coins, smart contract platforms, all of that, regulatory uncertainty will be settled down. I think it's been a shame that crypto projects have been offshoring outside the U.S. to avoid regulation and a lot of the consternation that comes from it. I think a few of the things that sit on the outskirts of that, we'll have to see. I think the SEC and the administration still want to be protective over consumer investors, and so we'll see. I think a steady balance there. But we're seeing Bitcoin, stablecoins, Ethereum, Solana, smart contract platforms that already have a lot of global adoption and a lot of industry adoption. I think those will get a little bit of the red carpet now.
It sounds like the dust still needs to settle in terms of the regulatory changes that are going to take place, but we have seen Bitcoin and other crypto move pretty aggressively ahead of this, anticipating that this relaxation and maybe standardization of regulations would come. Has all of the gain already been built into this, and now we wait and see, or how would you anticipate? Have companies come back to the United States yet?
Yeah, I think I think on the buildup, there were a lot of gains and prices across the board. So I think the market is in sort of a standstill, waiting to see what actually happens concretely. So I think you're seeing that, right? I think from a prediction perspective, understanding not only David's background but where everything is with ETFs and adoption that we see from firms like BlackRock and Vanguard and other large investment firms and houses, is that I think there are a few things that are going to happen in 2025 and to start to happen in 2025 and then continue through this administration. I think the biggest one will be that securities will be tokenized. I think that that's been a long-standing concept that has had starts and stops. But I think things like stocks, bonds, real estate will actually start to get tokenized as digital assets during this administration. And that's a huge sea change to how things work today and the legitimacy and credibility of digital assets and crypto. I think stocks and bonds and real estate going on chain is probably the biggest thing that we see at Kindred happening in this administration.
Let's talk AI and the changes not only from this administration, but maybe more substantially the changes that we have just post DeepSeek, this latest release. How has that changed things in your world? What have you seen from the companies you deal with?
Well, it's really interesting. There was a rout for about a week and a lot of discussion, not only outside in sort of Wall Street and markets, but in media, but also within the tech industry. And I think there's two schools of thought out there. One is that the speed and efficiency at which DeepSeek was trained has a negative effect on whether or not there'll be continued capital investment in things like NVIDIA chips, GPUs, data infrastructure, compute, all the pre-training inputs that you need that we've seen many companies raise billions of dollars for. Now, there's another school of thought which says actually that there's a paradox in economics called Jevons paradox, which says when you make a commodity more efficient, it actually increases aggregate demand of the overall, so it increases the overall size of the pie. And I think that's I believe that school of thought is correct. So what I think is happening right now is that models are commoditizing. They're very important. They're highly valuable to AI, obviously at the core of AI. But I think value is accruing now out towards the application layer, applied AI.
Yes.
And that
Steve,
means
I hate to do this, but they're going to roll a
companies.
break right over our head. We are out of time. I would love to have you back for this, but thank you for joining us today, Steve. We appreciate it. Also, my thanks to both Mike and to Robert. We will see you right back here tomorrow. Right now, it's time for Squawk on the Street.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. Futures a bit soft amid some lumpy corporate earnings guidance and continued worries about trade relations with China. 10-year yield now the lowest since mid-December as bonds focus a bit on the growth implications. Our roadmap begins with the AI arms race, though, as spending continues to ramp. Alphabet and AMD delivering the latest read on the AI boom.
Plus, Apple shares are under pressure this morning. China is reportedly considering a probe into the company's App Store practices. And Uber sees its, quote, strongest quarter ever. Bookings outlook, though, perhaps seeing as being a bit disappointing, at least if you look at the pre-market for the stock. We're going to discuss all of that and a lot more with Uber's CEO in just a few minutes.
Let's begin with Alphabet today, under pressure this morning after posting a quarterly revenue miss, hurt in part by a slowdown in cloud. Company also announcing plans to invest $75 billion in CapEx this year. That's a big revision above street forecasts. This is what the CFO had to say about that spending strategy on the earnings call last night.
As we expand our AI efforts, we expect to increase our investments in capital expenditure for technical infrastructure, primarily for servers, followed by data centers and networking. We expect to invest approximately $75 billion in CapEx in 2025, with approximately $16 billion to $18 billion of that in the first quarter. The expected total investment level may fluctuate from quarter to quarter, primarily due to timing of deliveries and construction schedules.
Jim, that's about a 30% revision higher. Meta's was only 20% revision higher.
You're listening to the call and you're thinking, well, okay, it's pretty good. And a lot of good stuff here. YouTube is really strong. And there's a lot of profit, a lot of money being made YouTube, and you get very excited. And then they just drop a total bombshell about how much they need to buy. And David, when I'm listening to it, I'm saying to myself, well, what happened to DeepSeek? I thought we all were supposed to be cut. Did we all just get had on the DeepSeek story?
Well, Jevin didn't get had. He knew. He knew. The 1865 economist back in Great Britain.
Yes,
we were talking about a lot last week, Jevin's paradox.
Yes,
because
he
listen,
did.
I don't think any of us expected, and I think we said this last week, when we got the commentary from many of these companies that they would suddenly reverse their CapEx in some way. But I think what perhaps is a bit more surprising is the increases. You mentioned Meta's, which occurred on Friday, I believe it was, 60 to 65 billion. Microsoft, at least 80, probably 85 billion. Some say will go as high as 90 billion this year. And then you just referred to that significant increase in CapEx from Alphabet to 75 billion. The numbers are stunning, obviously, and they all point to potentially an overreaction, I guess some would argue, in what happened to NVIDIA's stock price. I would add to that, Jim, that Alphabet shares are going to be down in part because of the deceleration of the growth rate of cloud. 30%, yes, still a very strong number, but not as strong as it had been. But what do you make of the comments on the call when the CFO said the cloud miss is due to being supply constrained? More demand than available capacity. Doesn't that say good things for NVIDIA?
Yes, it does. It says great things. Now, what people are still concerned about is, if you notice in the verbiage, that they're going to be the first to sell Blackwell. Well, wait a second. I thought Blackwell was selling like mad. So that was a pause. Second, we have one more in this gauntlet. Will Amazon say that they're going to pause? Why didn't Alphabet say, you know what, we're in light of DeepSeek, we're going to maybe pause our spend? But they couldn't, because they're an honest company, and Ashkenazi, who's the CFO, is not going to let them do that. I mean, Carl, we sold down NVIDIA because of a belief that you didn't need all this CapEx. So far, everyone has said they do. Amazon's the one that has the most that they're working on that's away from NVIDIA. But if Amazon says, you know what, we're going to need to do CapEx, then NVIDIA's going to go up rather dramatically.
Yeah, Amazon's going to be key Thursday night. Citi today, though, does trim NVIDIA to 163.
I saw that.
They point out it's been flat since June.
Right. I mean, I read through that, and I said to the guys, I said to Jeff Marks and Ben Stoto, all right, here they go. Here come the downgrades. But the downgrades seemed almost out of sync. It really was much more of like, all right, this thing's not moving, so like, let's get away from it. It was not substantive. The only substantive thing I really found was that I keep thinking that Blackwell, which is the next iteration, is selling like mad. And to have the first customer learn that the first customer is finally taking it tells me that it's going to be much more forward and not now in front of us. But it's going to happen because obviously if you're spending all this money, you're going to get Blackwell. So then you say to yourself, why do you need Blackwell? Why do you need this incredibly important platform that has software? Well, you need it for both inference and you need it for training. There are people who said with DeepSeek you don't. Now, there's an outfit that I'm dealing with called you.com, and that's not you Johnson, it's you.com. I really like you.com. And it's one of those companies that is really ahead of DeepSeek. It's way ahead. So I said, oh my God, this is going to hurt NVIDIA. And he said, well, no, actually, they're our largest investor. So, I mean, once again, you just find this. The long knives came out, whether it be China, whether it be Biden, whether it be these big hyperscalers that said, listen, we don't want NVIDIA, or we want to scale back NVIDIA. And then something happened which just said, you know, I guess we can't. And then, you know, AMD didn't help the case.
Yeah.
Because AMD did not do well this.
No, on data center in particular, those shares are looking down a bit.
Yes,
The numbers did come in
There we
below
get a
at
full
least
downgrade out of Citi today.
what
Yeah,
the
that
street
Citi downgrade
was
was
estimating
substantive.
on data center for AMD. But I mean, just back to the bigger picture that we talk about often in terms of the incredible growth of data centers overall. I did think it was interesting in some of the commentary on the call from Alphabet, you know, among the world's most efficient infrastructure as well. Google's data centers deliver nearly 4 times more computing power per unit of electricity compared to just 5 years ago, Jim. And yet the numbers just keep going like that.
No, they
power
do.
consumption, everything else, and even with DeepSeek and the efficiencies that they may have come up with in some way, nobody's pulling back on saying, great, but we need more and more powerful chips, and we need even more electricity.
No one's saying it. I keep hoping that the glass replaces copper. That some people want to do that. I keep hoping that cryogenics from Dover replaces just the typical cooling product or water cooling product. Dover has to scale. The copper movement to glass is a very nascent one, actually led by a woman who's from NVIDIA. So I keep coming back to, well, NVIDIA's figured this out, but people want a price break from NVIDIA. They do. And maybe a lot of this was, okay, Jensen Huang, while you're off there in the Lunar New Year meeting the president, we need a better deal because this thing is rumored to be $35,000. It's not a chip. We keep using the term chip. It's a platform with software. That was another thing that people were missed on DeepSeek. Platform with software, they can charge more, and you can use the current, plug it into the software.
But I mean, if everybody needs it, then why cut the price? There's no real competitors, and they all seem determined to just increase their compute capacity as much as they can. I mean, again, back to sort of the commentary.
Right.
Alphabet's cloud customers consume more than 8 times the compute capacity for training and inferencing compared to just a year and a half ago. 8 times?
No, I mean, look, when I talked with Jensen about Blackwell, I mean, Blackwell is video. I know that I talk too much about robots, and I know that. But if everyone gets a robot, which is the vision of the guy who runs Doge, then we would all need a lot of NVIDIA power, because NVIDIA has robots that don't walk into walls and aren't stupid. NVIDIA has, I mean, let's go back to rewind the tape about why we liked NVIDIA so much. They were so far ahead of everybody else. Well, what happened? We found out that AMD has fallen behind. We found out the hyperscalers tended to need more than they got. We did get a DeepSeek story out of China, which said that they didn't spend a lot to be able to develop this product, which I think has now been proven to be false. That's not just a Peter Navarro narrative, an anti-China narrative. There was a sense that maybe the Chinese lied.
I don't know, Jim, on that one.
I don't know
I've also
either.
heard the other story, which is, well, it's actually very close in terms of what they actually spent to what is spent to train models here as
get
well,
that.
that the differential is not that great.
Right, okay,
So,
differential not that great. That's a better way to put it. I mean, look, I think that when you wake up and China's doing what the Justice Department's doing to Apple, and then we freak out. when they're actually considering it, and I don't really mean to jump around too much, but I do think that, but I'm hearing the music, and we didn't mention Apple. And when I hear music for people at home, that means shut up. But Apple did, you know, when you look at Jonathan Cantor, who's around these days, is talking from the Justice Department, talking about what they want Apple to do. Well, the Chinese communists are a little bit less aggressive than Cantor. Interesting, because
He doesn't work there anymore.
No, he's going to work
still
here.
rattling around your head, though.
But I think what's interesting is
He
that
doesn't matter anymore.
Okay, but Apple would tell you that they were really tough, and I would have come out and say they were tougher than the communists. The Justice Department was tougher on the communists. I want to know how many communists are in the State Department.
Oh boy, really? Back to the 50s?
Yeah, we got to go right back to the 50s. Stu, who was Stu? Stu Symington. He challenged McCarthy.
We're going to get to Apple and the degree to which they are collateral damage if this trade war heats up.
Yeah.
We'll talk some Uber as well. Down pre-market, Dara Khosrowshahi is going to be here at Post 9. Says the company just provided its best quarter ever. We'll talk mobility and delivery. Stock is moving lower. Take a look at futures here on another busy session in the middle of this week. Stay with us.
You got this.
This is important. Uber shares are moving lower despite fourth quarter revenues that beat expectations. So we got to dig into that. Maybe the stock could be wrong. Uber CEO Dara Khosrowshahi joins us exclusively here at Post 9. Look, I'm going to start, Dara, with what I regard as being important, which is gross bookings. That's always been the number I measure you by. They seem to be pretty good, but maybe you can disabuse me with that.
Well, I think they were pretty good. We actually saw acceleration. You know, usually as companies get bigger, they slow down growth. We saw acceleration in gross bookings, 21% on a constant currency basis. It was driven by trip acceleration too. Trip grew 18%, faster than last quarter. And it really was driven by audience. More and more people are coming to Uber on a monthly basis, over 170 million monthly active platform consumers, again, accelerating on a year-on-year basis. And we're able to grow the top line while growing the bottom line. Adjusted EBITDA of $1.8 billion, up 44%. For the past year, we threw off almost $7 billion of free cash flow, and we're putting it to work buying back stock aggressively as well.
Okay, and that's very important because people might say, wait a second, why are they doing that? The operating income looks like a big miss. But when you dig down the operating income, you realize that there is a very big legal issue to make it so that is not the metric that we should be focused on.
Well, I think what we do is we try to estimate as best the legal reserves going forward. It's not a part of day-to-day operations. And again, I think the truth is in cash flow, so to speak. And the $7 billion of cash flow that we delivered on this last year is the biggest number ever, and we think it's going to continue to grow going forward.
Do you think, before I turn to my colleagues, that there's still a belief, even though Waymo's doing 150,000 a week, which I'm still thinking is not all that big, that there is an existential threat from autonomous vehicles away from you, and that could be some sort of overhang where people are saying, I'm scared?
Well, I think autonomous introduces both uncertainty and a huge opportunity for us. If we look at the U.S. market, for example, we think autonomous alone in the U.S. can be $1 trillion market. And the tech is definitely getting there. The commercialization is going to be much more challenging, right? To be able to deliver autonomous at scale. For perspective, we're doing 33 million trips a day, right? Those are the kinds of scale that we operate at. And a bunch of stuff has to come together. First, the regulatory environment has to get there, right? And it's national regulation, state regulation, city regulation. It's going to take some time because regulators need to get comfortable with this new technology that's operating in the streets. Cost of a mistake is really high. Second, what you need is a superhuman safety record. Like, the opportunity that you have with these robot drivers isn't just to be better than humans. They can be multiple times better than humans. And I think the industry should take that opportunity and increase the bar on safety appropriately as a result of this incredible opportunity. Third, you need to mass produce these cars affordably, right? It's not about 100 cars or 1,000 cars. You need hundreds of thousands of cars. That is going to take a while, and the OEM industry is definitely taking notice. They're investing. But, you know, these vehicle platforms takes years to develop. Then, once you have the vehicles, you need to operate them on the ground. Fleet operations, it's a ground kind of game. We're very familiar with that. We already have fleets all over the world. And then you need really high utilization because the cars are expensive. You need to operate them at high utilization both during peak times and during troughs as well.
Right.
The only way you bring all that together, this commercialization, is with Uber and the AV industry. It's going to take a while. As that time passes, you're going to see a lot of autonomous players coming in with these big transformer models, with the DeepSeek moment that we saw. The development of this technology is going to be cheaper and cheaper and cheaper, but we think that with the safety promise and with a partnership like ours, we can build autonomous to be a very, very big
You
business.
obviously have thought a lot about it. We are getting a real-world test case in San Francisco, and I'm curious as to what you're seeing because Waymo seems to be doing fairly well. Are you losing share, or are people driving less?
You know, it's actually interesting, and this goes to the scale.
I wonder how stupid you people are sometimes. CNBC. Good morning, retail traders. I hate to be like that, but they act so dumb. Kind of reminds me of third graders. I listened to them for a little bit this morning. They had nothing good to say for almost 2 hours. And again, they brought up retail traders. There's some kind of certain gauge out there that these guys watch that has to do with retail traders. Because I really do believe that they're trying to follow us. Use us as a gauge. You know, if we're buying, they're going to buy too. Because they're in the mood to sell off the market. And it just ain't happening. and they're bringing up foreign exchange, and had some guy on Goldman Sachs that couldn't hardly speak English talking about how the other countries don't need America, kind of like that chick yesterday from Canada. Well, we are arrogant, I agree, especially here lately. But I've been here 20 years, and they back during 9/11, or back during the crash of Obama, he got elected. The market started tanking about a month or two before because they knew he was going to get elected, and they had fear that he was going to have a war against Wall Street, because every one of his speeches had something to do against Wall Street and the fat cats. And so all it was rhetoric, because once he got elected and he got in office, he just started bailing out the big corporations. The unions, for one. I mean, General Motors was at 50 cents a share. Ford was at $1. I can just go on and on about how many stocks tanked to almost pennies. Bank of America, $5. Just tons of them. They just hugely sold off into his election and after he was elected. So they come out with a big stimulus package, and they could put in like $600 million in a company called Solyndra that was building solar panels, and they turned around and went bankrupt within a year, and Nancy Pelosi's family was involved in that company. They all got rich and left the company high and dry. And that was true with a bunch of these startups, that they, just like what Biden did. He bailed out what, was it Tilray or Rivian, with about $7 billion after he was already out, lost the election. The Dems lost the election. They threw ahead and thrown $8 billion in a company that was failing, and it'll still fail. I heard the other morning that General Electric General Motors cruise car, they're going to stop doing that. They put billions, $10 billion in that company to make that car look, work at least. So they just threw away a bunch of money is what they did. Somebody got rich off of it. So they bring it on other countries saying, we don't need America this morning. Because our dollar is, they can't afford our dollar. We've spent so much money and got so far in debt. But everybody has an opinion. I mean, I'm hearing my liberal friends say tariff this, tariff that. And these guys are saying it all day long. We had tariffs during the Biden administration, and the market run 20% 2 times in 2 years, which I've never seen in 20 years that I've traded. And other stocks ran 5 or 6 up to 1,000 to 2,000%. The tech industry. So they're trying their best to bring it down, but they were talking about dip buying. The retail traders are buying the dips, and they don't want to buy the dips because they're swing traders. They want to wait for a bigger dip to get into the trade. So I had a guy in this morning says, I ain't buying nothing right now. And then they had a girl on yesterday says, I'm buying every dip that we see. Like the one we had here on Monday. That was a buying opportunity. That was a huge dip. That was a double bottom on the SPY there in the last 2 weeks. And we had a big sell-off here, and look what happened. It ran up, hit a double top. So we got to break the 200 today for this thing to become very bullish, or we even break it and hit a triple top right around 601.84. Right now I'm at my hard resistance that I called out this morning at 668. So we got to break that one first. I'm going to bring that down just a little bit. I'm going to use the bodies. And it does hit the 200 SMA to the penny. So it can run up. Now we've had a breakout this morning already from the pullback. And it's right to the resistance level. So if we pull back, it's going to be the 63 or the 200 today. And it, bring it up to China tariffs. But they said, oh, look, these guys are, Goldman Sachs was saying, we can just do without America. After all the jobs we shipped around. And so I kind of agree with Trump in a way. Especially after 4 years of a numbnut president that couldn't speak, and we had bureaucrats running the country. I keep thinking, I'm trying to remember back, was it back in the 40s or something was in history books about bureaucrats back then. Had to put the restraints on them. A bureaucrat is an unelected official. We got 2 minutes left. So good morning, retail traders. Let's have a good day today. I'm going to be a little patient here on this breakout. I think we need to consolidate it. But we are, at yesterday's high after hours. Richmond, Fed, Birkin. We got Feds coming up, Fed speakers. Probably unelected bureaucrats. White House officials say Trump will end the unfair participation of men in women's sports, which I totally agree, but my liberal friends think men should play and box women. No. I was raised up not to beat women. So I guess that we have an excuse. We can beat women now. I had a girl whip my ass one time, 3rd grade. And I knew a girl named Lisa Wilson back in high school that was a tough chick. I wouldn't want to fight her either. There's women that can kick guys' ass, I guarantee it. But not when you're sports orientated, I don't think. There are a few out there, though. They got that one gorilla chick. I can't remember her name, but I watched many of her fights, and God. She was a grappler. So VWAP's going to be our first support on the SPY. That's an ascending triangle right there at 560. 60-cent drop. Well, actually, it's a little bit lower than that. Right about in here. 599.91. I'm going to turn that to a red flag. See, this is an ascending triangle right here. Disney's up off earnings. Tesla down 168. Let's see what's green here. What's red? VIX. We got Chewy down to 38. I had a guy ask me about Chewy the other day. I'm going to try to figure out what that guy was talking about, the retail trader graph. There's some graph out there that marks the retail trader against the institutional traders. If anybody knows anything about it, let me know. Whatever. Already. Oh, I didn't put an alert on that VWAP on the SPY. Yeah, we did pull back to it though. We could dip farther down. Here's the ascending triangle right here. Google didn't do good. Then we have AMD that took a beating. That could be a good scalp today. We have a double bottom on AMD, so watch out for AMD. I did Meta on the double bottom yesterday. Watch AMD here. Meta's pulled back too. What is that? No, that's AMD. Yeah, I'd already had a breakout. Meta did. I'm gonna check this out, see what it looks like. First, we'll look at the SPY. SPY the 6th. The 603 strikes. The ones I'm going to be looking at for the calls. Yeah, I think we're going to pull back. Just give it time here. Jim, yeah, I saw that. Good morning, Matty. Good morning, Mannequin. Christopher Jones. Chris Charnigo. 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 I'll just call you Chris and Christopher. IWM could pull back. We got a head and shoulders this morning, inverse head and shoulders on the SPX right out of the gate. You'll explain it in 1 second. It might take me 20 to understand it. Chernago. When I moved to Hawaii, the vowels were different than ours, and I had to get used to how to say the vowels. Oh, DR, I see. I got you. Thanks for explaining. I'll look it up and learn it. So Meta hit the second deviation channel. Should consolidate and pull back here. AVGO's up this morning. We're just now hitting Meta's resistance. I thought I got Meta on here. This is a linear channel. It's called standard deviation. You got the first deviation and then the second. I got them as linear channels on this chart. 1 and 2. Good morning, room. Snap. I did snap in my earnings too. We got a symmetrical flag right now, getting ready to break out on snap if we break the 9, but we still have to break the 21 at 11:36. There won't be much of a gain. NVO. Okay, where's my tick? SPY is up a little bit from 131 to 152. That's 603 strike, 155. I didn't take the trade. I wasn't watching when it hit the VWAP, or I might have would have took it. Did call a pullback to the VWAP. They don't have to hit. So if you're new to trading, they don't have to hit. They just have to come close. And then it depends on what kind of candle you get, and that's called a hammer. So that means upside. But I think we could end up down here at the 200. Baba's breaking out a little bit. It's up above 100, holding 100. Oh, man. I got to get into it. I'm not into it yet. Listening to CNBC just brings me down. George, cheer me up. We're flat. The NDX is down 100 points, but the rest of them are flat. Anything under 50, like the Dow Jones, I consider flat. Any more? If we get in the news that Trump's going to talk to the China, Trump said he wasn't in a hurry, but you know, you never know. He might get on the phone and get to talking to him pretty fast. TEM almost 69. If we break 6,031.2, we're going to go to a higher level. The SPX broke down. So that's a good, could be an opportunity today. And we're forming a symmetrical flag right now. Let me look at the SPX and see how that thing's doing. Like I had an excellent day yesterday. I don't want to get complacent and think that I'm going to have another one and start jumping in trades and think, ooh. So the 60/50s, the calls, this is a lotto. So I'm going to say that first support's going to be right here. The 60/50s. Right now at 520. Well, I need to go put that steak on salt. That's what I should have first thing done this morning. If we get bullish, resistance is right here. 60.38, 63. That's bear, that's bullish, 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 bearish. Huh. It didn't move. I'm surprised that didn't move on that bounce. No. Yeah, I'm not liking the price action. I'm not liking the price action right now. See if it triggers my first support. I'm going to go salt that steak real fast and get back. Well, better wait. There's 4 there. We just triggered it. So I'm I'm getting excited. 56. 60/50s. For new traders that are having trouble on YouTube, just paper trade with me. Because I'm not really bullish today so far. But I will be here in a second. We're about now. We just hit my first support. February the 6th, 5th. The 60/50s. And right now they're at 450. We got a hammer. So we can get 450. There's 460. There we go. That's what we wanted right there. Yeah, I think it's good. I don't know if it'll give me a chance. I should have grabbed it right there, but I don't think I could have got it. Now my order's in, so we'll see. At 450. There it is. It can easily come down and double bottom. 430. 420. Right about now. So I'm going to grab one right here at 410. I'm in at 410. This is tight stop. Now I'll add one more right now at 380, 370. So I got two of them. Got two contracts. $410 and $370. $380, I mean. Took $380. Blanket. Randy. That 10 we got PMI. Ooh. That's not going to be good. That's not going to be good. I should have waited for PMI, but we'll see here. Tesla thoughts? No, they're ranting and raving about him. I'd say see if 381.75 holds. 381.75 on Tesla. If that holds. I forgot where I saw that at. I saw 381.75 at first. Now I've got these. I'm up $20. 30. If I can get $100 out of these, if I can get this to 5, I'm out of the trade. I was right about the pullback. You know when after you trade a long time, you get that certain feeling. You just got to look at the day yesterday, how easy it was. We can still dip. I'm not convinced completely yet, so I've got to keep a good eye on this. And I hit 370, start to dip, I might just get out. We could fall to 60.14. This double bottom down here that we had. But right now we're at a head and shoulders. You can see it on the yesterday's chart. Inverse head and shoulders. Going to make them get almost out of tea. That's what you were thinking? We got a fallen wedge, bull flag forming. I'm at 360. See here, we're at a double bottom. We just dropped below. That's not good. That ain't good. Might have to take a loss here on my first trade. God. Man, look at that. I got in the wrong trade, wrong time. Shit. Stop. 1569. Get two more. $60, $14.21 is where I'll add if we get down there. About there right now. Right here. So $3. That's all I'm going to put in this trade. I got two more at $3, so I have 4 contracts. $4.10, $3.80, and $3. We pulled almost right back to that 60.14 right here. That's the top of the head. So we should reverse if we're still going to stay bullish. Now I could go ahead and get out now green. But I'm going to see if we can break the 9. Woo! Yeah! Nailed it! Get out! Woo! Bingo! $5. This is how you do it. Bam, man. $500 right out of the gate. I mean, excuse me. That's the way you do it. Damn, I'm happy. $612, not counting commissions. Woo! Brandy, magnificent. We're here today. I think we know what to do with Jimmy. That was beautiful. That was plumb beautiful. That was risky. Risky but beautiful. You got to risk the biscuit. Now I'm going to go in there and make a cup of coffee. Did you like that, Patrick? Ah, darn, Randy. Good job. Did you have a different call? Oh, Tesla. Yeah. Thank you, Johnny, for that note. Yoko, give me a good grade. You do that and I might make you a moderator. Still got to think about it. But I respect your trading, your discipline. You don't laugh. You give me a good grade is what you do. You got to earn it. Now I'm getting ready to take his trade again. Ladies and gentlemen, we're at my other support. Jimmy called it 1426. Get ready. I'm in the mood. The lowest, we could hit 59.96.41 and be a great trade on the ready, set, go. But I'm going to get involved right now. I've got to chart this up on a bigger chart, but I want to buy some of this here and get started with it. I'll move up the calls. I'll buy one at 60.40. And buy one strike at 60.40. Call at 3.40. 3 black holes. Oh, Jimmy was a man. He was a big man. The retail traders, let's see, Jimmy was a man, was a big man. The institutional traders thought they were bigger, but Jimmy shot him down with his trigger. You thought I was going to say something else. I know you did. Racist. I'm up $100. The art of getting out when you're up. I was up $600. Now I'm going to take me, this one call is going to bring me back to 5. Maybe more. But that's a big but. I'm going to go into the kitchen and not worry about this trade and turn on my water and put some salt on my steak. Might hold this the rest of the day. You get a big bounce like that, you automatic, especially early in the morning. And this market is very, very, very volatile. Did we dip down on Tesla? Like I said, Baba's hit the 200 SMA. We're getting close. Ooh, Jimmy might be right again, right? What'd I say? 381.75. They call him Boremus. And I played with a band that had a name of Anus. Guar. If you ever heard of Guar. I was an outside member. I played with him once. One time. The spy calls at 603 are at $1. They went to 89. That'd have been a good buy. Right now they're at $1.04. You could probably scalp that and get away with it. Okay, here we go. Here we go. We're at 4:20 time. That's Randy's favorite time. Used to be mine. But I'm going to have an edible this weekend. A real good one, an overdose. 150 milligrams. Maybe 3, if I can handle it. Blake it. Uh-oh. 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 Here we go again. Jimmy's going to hold on to this one for a bit. Can you imagine this going up to 1,000? I think I could get out right now at 480 and be satisfied. That's $150, 140. Let's just give it some time. I'm going to go into the kitchen. I'm going to be watching this trade. I might hear me say, "Yeah, I'm out." Ging gang googly googly wash wash, ging gang goo, ging gang goo. Ging gang googly googly wash wash, ging gang goo. Oh Ayla, oh Ayla Shayla, oh Ayla Shayla, shally wally, oompa, oompa, oompa. Okay. Let's see here. Retesting. We had 3 black crows on the IWM and it bounced. 3 black crows on the SPX and the SPY. Okay, I'll be right back. I'm gonna get coffee started and my thing salted. $4.50. Break it. This is resistance. Bam. There's 530. They're $200. And they gave him his orders in Monroe, Virginia, saying take it to the 63 EMA. Now, if this 9 crosses the 21, we could hit the 200. We got head and shoulders. Let me see here. We got a head and shoulders right here. Yep, that's where I'm going to take it. 60, 26, 30. Let her get out and be happy. Well, we got a 1, 2, 3 also already. That's the guy out there. See that resistance and that resistance? And we have a 1, 2, 3 down here. Stay bullish, it has to hold that trend line. Damn. 520, I could have made a good chunk there, 180 bucks. 190. Stock weighing on markets. Tech stocks weighing in on markets. They don't scare me. These guys don't scare me one bit. Why? James, why do you disagree with the fat cats and the institutional traders? I disagree with them because they're swing traders. At least they talk like they are. Now, I know some of them are in and out like we do. But when you're on TV, you got to give a bigger outlook. Because if so they're worried about the tariffs. I'm not worried about the tariffs. I'm not worried about Goldman Sachs getting on there and say that I've been there before. When we had the crash of 2008, all they could say is buy Europe, buy Europe, buy Europe, and it tanked, and we bounced. They've been saying buy China for the last 4 years, and it ain't done shit. Because they know that we're overbought. But again, we printed $14 trillion in liquidity, which I have not seen in all the time that I've traded in a 4-year period. And that liquidity can still kick the market. And then we got a business president, number 2. Should I get out or should I sell? I'm going to hold on. I really got to hold on here. I can't sell this right yet. I can put a stop where I got in at it. But I just have a real good anchor in that we're going to break this 1, 2, 3. Now, I'm the master of the 1, 2, 3 strategy. That means, 1, 2, 3. And look here. The IWMs broke out. And we just hit the 63 on the SPY. And that's a 1, 2, 3. And we got a symmetrical flag right here. Good job, Christopher Jones. Man, I could write a song about that. Christopher Jones. Okay, here we pull back for the 3rd time. We're getting ready to squeeze. I'm going to go make my coffee and I'll be right back. I should have got out at 5:20. But I didn't. If you notice my trading, I always get out of these trades, and then by the end of the day, they run up $1,000, $2,000, $1,500, hit a grand. So this one contract could nail me $700 if I get past that trend line right here. Past these two moving average. This moving average, that's a 63. Then that's the 1, 2, 3. So that's how hard resistance. If it breaks it, boom, to the 200. And I want to get more than an A. I want a triple A plus on this one. If I hold on to it like I have, because I could have got out. Uh-oh, here we go again. 5:30. Break it. Now, if you're in this trade with me, consider an exit idea just so you can get out with profit. There's 5. Now I could sell this sucker now. But don't do it. It's hard for me not to sell it. It really is. There's 540. I'm up $200. Break it. I hate to say this, but I'm going to play a song. Keep on to the Head and Shoulders. Break it. Won't you break that Head and Shoulders? Won't you break that Head and Shoulders now? Break it. Going on, we're gonna break that Head and Shoulders now. Break it. There we go, baby. Now we got the momentum behind the trade, and we're above the 63 EMA. I got a story about Fleetwood Mac. It's being very, very, very stubborn this morning. I don't want to get too carried away and get complacent. Be like yesterday, I sat there and I got out of that trade and then we had that big knife. But this is called a head and shoulders, and that's resistance. And if you break that, we're easily going to hit the 200. If not, I get out right now. Magnificent. Should I sell? Why don't you take that trade? Bobby's here. We missed you, Bobby. Hope you got drunk while you were gone. And you come back a better man. Bobby's here. Here we go. There we go, baby. 570. Now it's time to make a business decision. And I know if I only got one, that's my problem. It'd be nice to get 100% out of this trade, though. There it is, right there. Beautiful. Beautiful. Now it's time to get out. This is a shoulder line of a head and shoulders. So I want to make that perfectly clear. If we break this, it's an easy shot up here. We'd probably even break the 200. But now, this is really a hard resistance. So I got out at $6. I think I deserve a good grade on that one too. Bingo, baby. So let's talk about this trade before I go get my coffee made. So this is called a symmetrical flag. And this is called a 1, 2, 3 step. Almost 4. So if you count to 4, you make a little bit more. Extend that to the left. It's almost a 4, but it's a 1, 2, 3. And you got a 1, 2, and it tried to come back down, and it couldn't hit that third support down here. So that's called a higher low. That's called a higher low. It's also called a head and shoulders. You could call it a head and shoulders. So there's that right shoulder, and it came back and hit that right shoulder with a double bottom right there. So that's bullish. Then you got to keep an eye on the candles. So you got a hammer, 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 spinning top, hammer, hammer. All them are bullish candles. So the resistance, so we came up here and now see we're getting ready to have a 1, 2, 3. This thing can pull back and then bounce up again right here. But I don't want to trade it right now. I don't want it. 3 times is a charm. So you got 1, 2, 3 and the breakout to the head and shoulders. This is a head and shoulders. And that head and shoulders, that shoulder line, when you're below the head and shoulders, becomes a real hard resistance. So I waited and I waited and I waited. I could have sold it a couple of times at 530, 520, 540, and I said, no, I want that shoulder line, and I want to break that 1, 2, 3. That triple top, 1, 2, 3, and this is a symmetrical flag. So it hit the shoulder line, that's when you want to get out of the trade for sure. Now we came back and we hit the old resistance, which was the 1, 2, 3 right here. So that's a buy signal to maybe run this back up to a double top by the end of the day and get it up here to 60, 31, 20. Alex, tell your wife I love her. Now, Bobby, the only reason I say that, Bobby, is because, and I know you're not listening, but it does kind of curve the mood here at the beginning of the day. But we can carry on all you want in the bureaucrats. I was debating on getting rid of all politics this year, but I asked, and everybody voted in favor to keep it, so we keep it. But don't keep it in the trading room. I don't want no arguments, and I don't want to get pissed off. I got to be in a good mood. That's why I play music, to keep happy. So that call on the SPY at $1, the 603s is now at 130. They're at 580. So I'm going to go get my coffee made and I'll be right back. Would that be a bull flag on the 5 minute on what? On TEM? Yeah, I'd expect it to come back one more time. So this is a bull flag. Come down the third time, You want to run it from that body right there to that body and then bring it down. So it can easily come down here and hit this third time and then run back up and then break out. But this is Maddie on YouTube. This is called the sweet spot. Or it holds right here and runs on up and breaks out for the third time. But if it comes down one more time and starts to move up, or if it hits that triple top, 1, 2 on the body, and then that third body comes up and breaks out. So that'll be the sweet spot of a bat. If you ever played ball, you know where a sweet spot is. On that third count. So it could easily come back down here and hit this, and then run back up and hit that, and then break out, and then come back down and hit this here top of that flag. But that's called a bull flag. There she goes to the 200. Watch this thing go to 700. There's $600. I got out at 6. Okay, I gotta go make my coffee. We're about to hit the 200, make a business decision there, but I got out. We've not had a heavy rain, but we've had some rain, and there's been no leaks in the building. If we get some wind with a good rain, then we'll know for sure. I'm pretty excited, man. It's not a bad day today. Almost 800 and some bucks. And it's a shitty day. I mean, your Tesla's moved up a little bit. We got to break 384.03, Randy. 384.03. We break that, I think we can get it to 386.81. A $5 gain off that 83 or 384. If we break 384, so that, Maddie, you see that? This is called a linear channel. And it's on the 1 minute. You see how we hit that top, that second linear? And we pulled back. Now we came back to the sweet spot. So that's a higher low, which that kind of, and an engulfing candle, which tells me it could be a little bullish here. And we got to extend this out to the right, that bull flag. And that's going to be your resistance to break, right around 69, if that wants to do it. Now, it has to have some kind of news. It was updated on a buy rating. Jim Cramer some have a long target to 74 bucks. But right now you just want to learn these patterns and play the patterns, and but when you have a higher low, that's one little indication that could be a, it's also a little bitty head and shoulders, inverted head and shoulders. It's a real slow market today. So I think they're just waiting for that China news. If there's this could be a catalyst alone. If we get news today that Trump's going to speak to Ping Pong or whatever his name is, in China, negotiate a little bit, but he's got a lot on his plate right now. He ain't too worried about it, but I think he's playing that stretch out game. We got to get the flow of fentanyl stopped, and that's the only reason these are for. Now, Wall Street thinks different. This is just going to be short-lived. So I'm not really worried about tariffs like they are. I mean, the avocado's already up $1, almost 60%, 70, almost 100 in some places. From the Biden administration, I didn't hear no one bitch about it. I got to pay $2.69 a piece up here for my avocados. If I go to Walmart, I can probably pick one up for $1. I thought I bought a ribeye steak yesterday, but I bought a T-bone. I feel stupid for doing that, paying $20 for a T-bone. But oh well. I'll make 2 meals out of it. It's not as good as a ribeye. And it's about my lunchtime here. But if you see any news about Xpeng, whatever his name is, there it is. There's the knife right there. There's the 1, 2, 3. So this is your first support on the SPX. We're at support. George.
Downside, I think that if you look at the ranges on the S&P, there's a possibility we hit the all-time high or overthrow it, but I also think there's a possibility we retest some of those levels around 5750 area. So I mean,
God, make up your mind, old man.
And so with that said, volatility is to be expected to be higher. Now, looking at yields, 10-year yields are falling a little bit. That speaks to potentially now some demand in the bond market, especially long duration bonds. I think the concerns right now are
Randy,
not
we're
necessarily
approaching
inflation. I know there's a lot of
864.
concerns about inflation, but I think the market or the institutional markets are also market participants will probably pivot towards growth concerns, because at the end of the day, the meaningful aspects of tariffs are not necessarily inflation, which may be short term, but it's actually growth negative, and I think that's going to be the narrative that we're going to start to see as this tariff aspect continues to play out.
And George, really quick follow-up, given the bifurcation that you mentioned at the top of your comments, is there any sector rotation that you're kind of paying attention to or looking out for?
Yeah, right now, I think if you look at, for instance, consumer discretionary versus staples, I don't have a chart for you, but if you look at the relative strength, you're actually noticing, or I have noticed that the staples have been outperforming discretionary names. And so that may be more of a defensive posture being taken on. I also think if you look at the energy space, the energy complex right now, just looking at, for instance, the...
Thank you, Patrick, for that input there on TEM on YouTube. Maddie, did you see what Patrick wrote down there? He has fulfilled the 69 time to rest. He thinks he could be. And when they come out with buy ratings like that, they're trying to pump the stock so they can get a little bit more money out of it. So that's another thing to think about. They're just they're in there for their self-interest.
Strong dollar puts a lot of pressure on a lot of these nations that are struggling from a growth perspective. So much of the business internationally, even think, two random countries, you could say, a country like India and a country like, South Africa may do business with one another, and many of those transactions are agreed to be settled in U.S. dollars, despite the fact that neither one of those countries can print U.S. dollars. So there's this embedded demand to service debt around the world in a currency that, they have no control over its supply. And so the fact that you're starting to see it come down a little bit versus other currencies actually should alleviate some of that pressure. And we're not talking about just dollar-denominated debt that they may owe the U.S. They owe it to each other. When I say they, I mean other countries.
We're continuing to see that dollar weakness off about 0.5% right now, trading closer to 107. Mixed market action when we look at equities. I want to thank you both. That's Alex Coffey, co-host of the Next Gen, George Sillis, senior markets correspondent here for the Schwab Network. Thank you both.
That's such a cool name.
Joining us on Morning Trade Live, I'm Diane.
Alex Coffey. I like that name. I really do. If I was his friend, I'd say, hey, buddy, are you starting to percolate? You look a little decaffeinated. You need some energy. You might need to be grounded. Alex Coffey. Man, you smell. You're full of beans. Woo! Are you from Colombia, Alex? We're at a double top on SPY. A 1, 2, 3 triple top. We come back down. Okay, this is someone made a real nice compliment to me and noticed that I can predict the next move. So I'm going to tell you what I'm looking for by looking at the SPY here. So we had a V recovery, and I called it out. And them calls were down at $1, and where are they now? Let me see here. They're at 125. but they did run to 131, probably a little bit more than that earlier. And they dipped down to 89. So this is a triple top. So you got to ask yourself, am I going to break this resistance? A 1, 2, 3 triple top. You want to draw that in there. Well, or are we going to pull back and we hit the 63, we hit the 63, we hit the 63 again, so that's going to form a symmetrical flag. So if it doesn't hold the 63 on that symmetrical flag, and then you got a 1, 2, 3 down here, you take the body of that right there and run that up to that. So that's a symmetrical flag. If it doesn't hold this 63 now, I would have set an alert down here at the 200. You got a double bottom right here. You have a previous high right here. Previous high and a double bottom, and then you got that pullback. So if we come back and hit the 200 and the market still feels like it's bullish, it's now lunchtime. It's 11 o'clock Eastern. This is when I decide that everybody, the fat cats, are going to go to lunch. And then you got their staff still trading. They usually eat lunch in-house. But the businesses say, the fat cats, the big guys, they're going to go out and have a big old fat steak like I am here in a little bit. So it either holds that 63 or it pulls back and hits the 200s down here and then still stays bullish with the double bottom. But I'd rather buy it down here the way this market's acting today. And if it doesn't hold that, I mean, we could have a head and shoulders right here, this pullback. Could stop right down there, or it could even go back down here to a lower level, running that shoulder line there to that shoulder line, and by the end of the day hitting a double bottom on that intraday trade right around 598. So you're in the middle of, we had just had 3 black crows right here for a scalp, but I'm not going to trade now because I've done very good already. I called that bottom. And that's what I got to start doing now. I got to at least hold a couple positions when I think I see the bottom or feel the bottom and we start to run up. But it wouldn't have helped today. But if we'd have broke that double top up here, I could have got this thing up to $1,000 easily, maybe more. So right now it's just kind of thinking about it. The fat cats have gone to lunch. I'm getting ready to go in there and cook my steak. But the next move is going to be down here at the 200. You want to set an alert right above that 200. You don't want to hit it. You want to set it above it. So I got it at the mark, and I'll type in below, and I'll type in double. I'm going to put a note in here saying double bottom. Not an intraday double bottom. So when my alert pops up, it'll tell me what I called. If you want to put the time frame you're trading in or whatever you want to do, but the alert's just an alert. It's to get you ready to take the trade. You don't jump right in it on your alert. You can wait for it to respect that support level. So I'm going to go put my broccoli on right now, and I'm going to have half of a sweet potato and a steak for lunch. Now I'm on a carnivore diet, but I still got to have a little bit of energy, so I still eat a few good vegetables that are good for your health and not bad. The sweet potato, I think I have some kind of sugar problem. My legs swelled up on me about a year ago, about 8 months ago, and I went on to a strict diet and ate salads for 3 months, and then I started reading about carnivore, and I decided to go eat. I was leaving meat out, steak, just pure salad diet with beets and real nice salads. But then I got on this kick. I'm eating carnivore because I read so many good benefits about it. The only thing about sweet potatoes, it makes you fart. They don't smell good. So Jenny today looks like, yesterday she was a fox.
Costs remain elevated in this entire restaurant space. I also was reading a note that has outside
Today she's dressed up as a housewife.
Potential of tariffs looming is also a threat for some.
She's got her cleaning clothes on. She got her sweater on, so she's just kind of doing laundry and cooking a meal. She dressed up as a regular old housewife. I want to see what kind of legs she's got on today. If she's wearing pants or... Now that... God, these women, man, on here. They're the best.
The markets, we woke up and we knew, at least in part, it was driven by Alphabet and AMD, and that pressured the market. So we've had back and forth action already today for the major averages, not for those names. Tell me a little bit about how you're feeling about the markets these days that have been somewhat headline driven.
Will you please hire me, and I want to work next to you.
The Fed had to say in December, and that got the market starting to feel a little bit nervous about what was going to happen with interest rates.
I worship your body.
2025. And as the Fed seems to be on pause, at least for the moment, of course, the attention is going to really the Mag 7, which drives the market, and of course, policy.
I nailed 384 on Tesla.
I feel like we're probably going to find some footing here in the next couple days, and I'm optimistic because earnings seem to be coming in okay. Of course, the deepest threat then is going to be what happens with the Mag 7, and you're seeing that, right? We had DeepSeek last week in particular that showed some vulnerability, and now, of course, with expenses going up on AI spend, investors really have to weigh those large companies and how much they're spending relative to what else is out there.
You know, it's funny because you mentioned DeepSeek, and then I was thinking prior to that, the week before, we had the Stargate rally. So you started talking about the Fed in December, then you had a new president coming in, you had Stargate, you had DeepSeek, you had tariffs. Now you have Google. It feels like there's so many different stories that drive this market, and at the same time, many of the earnings are in fact fundamentally are showing growth. So what does that mean for an investor? Should they be investing like this will be a winning year?
Yeah, I think it's an expect the unexpected year. You know, I'm a realist bull this year. Realist because we've had a great couple of years in the market, of course. And so it's just time statistically for there to be some bumpiness. We're probably, as we have already seen, going to see more days of volatility this year, these bigger swings where we have big moves up or down. And ultimately, I think the longer picture, the earnings picture looks good. I think ultimately the Fed has a ceiling on rates. I think also uncertainty is putting a ceiling on rates. And you're starting to see bonds actually show that. When we have these rocky days, we're actually seeing yields drop like today. And we're probably going to see yields continue to settle, I would say. And that will be also less of a headwind to the market. I think we're going to see some of these trades that have been talked about, small cap, longer duration, assets, growth, even things like gold, Bitcoin, all probably do well financials as well. So ultimately, I think we end the year just fine. But I think it is expect the unexpected. There's going to be some twists this year that probably aren't currently in the headlines.
So financials you like for 2025, is that right? I mean, you feel like you could count on that group. As far as tech, you feel like, I saw in your notes you talked about AI. could there be once again more volatility or even a correction from here, or you buy into some of these Mag 7 type names?
I think you are going to probably see some bumpiness there along the way. You know, there are different components to that mix of stocks, and some of them are more semiconductor and kind of AI supply and demand. You look at Google, part of their issue was a supply issue, not a demand issue. But on the other hand, you have a company like Meta, not quite as dependent and still benefiting from that AI trade. So I think that there's going to be some differences in the Mag 7, but ultimately, if there's going to be weakness in the market, it's going to come from that piece because 40% of the index is comprised of those 7 companies. So I think really over time, there will be winners there, and you want to buy into those dips. But I also think that you want to make sure that you have access to capital that you need as an investor and not be all in, knowing that there's going to be either opportunities down the road or, hey, you don't want to have to sell at the wrong time, because these assets will appreciate. But of course, the biggest risk to an investor is not being able to choose when you sell.
Do you have some do's and don'ts for folks? You know, they want to put some money to work. They have money on the sidelines. You want to make money on that principal. You don't really want to lose it. You do still have a decent rate environment, so that's pulled back some. Today, you had mentioned financials, but we're also seeing healthcare, real estate, utilities, and tech with up arrows. What would you say maybe a do and a don't for folks who are investing here?
Yeah, I'd say let's start with the don't. Let's not focus too much on the daytime drama. I think that a lot of times when I talk to investors, they're watching mainstream news, whatever their flavor or preference is, and that's sending them into somewhat of a spiral at times. And I think that let's focus on prices. Let's focus on facts. Let's focus on what's happening in the economy. And the facts are the economy's in good shape. Earnings are increasing. We have a business-friendly environment. Rates are falling, and all that is ultimately good for the stock market. So we have to stay disciplined, though. So the do's are make sure that you have access to liquidity, meaning don't have all your money in the stock market if you have a large purchase coming, if you're going to have a need to take income from your portfolio, if you have even some unexpected circumstances coming, maybe in your business going forward. Make sure you set that money to the side and don't worry even if we have a bit of a run here in the market, because as you mentioned, you can earn around 5% either money market, short-term bonds, somewhere there in between, and you can be patient. I think we'll have other opportunities to buy in later this year. As long as the majority of your long-term portfolio stays invested, I think that discipline and also just the expectation that we are going to see some market movements, and not to just immediately go to, hey, the sky is falling, right? Because some news media sources saying, you know, the president or rates or, you know, DeepSeek or whatever is going to come next is derailing today's market environment.
Understood. You know, you mentioned short-term bonds. I mean, when you think about a portfolio with the equities and bonds, fixed income balance that it may have, wondering what you think a portfolio should have, maybe even some alt investing, that whatever that may be, or commodities like gold or Bitcoin, or so for equities, I mean, how much do you think should be in equities for someone who wants to take on some risk?
You know, a lot of our clients are kind of that higher net worth baby boomer. And so for me, that ideal asset allocation looks something like 75% stocks and 25% bonds. The good news is that on bad days, bonds are helping you as opposed to hurting you just because of where that bad news is coming from. We also have about a 5% allocation to non-traditional assets within our equity sleeve. So that's going to look like gold and Bitcoin proxies. Just because it's a little bit non-traditional, you get a little bit of that uncertainty hedge, particularly with gold, as you've seen. It also leverages to interest rates coming down, and gold's on a run. So technically speaking, it looks good as well. Bitcoin just being kind of the same thing, but a different flavor. So ultimately, I would say that
620 ain't too bad.
Equities, assets,
so we broke the double top.
Net worth growth, but of course having.
Today's commercial is brought to you with Plant Junkie avocado oil. I have not had vegetable oil or any kind of virgin olive oil or anything like that in the past 9 months. I started using avocado oil, which is a more healthy oil, and it's cancer. It won't give you cancer like your vegetable oil will. It's better for your digestive tract. It's a hot cooking oil where you can cook steaks in with your butter. And I used a good ground beef grass-fed butter. Not grain-fed, but grass-fed. But avocado oil, organic. Choose the best, and it'll make you a healthier person. Again, this is Planet Junkie Washboard Jim, Protein Palace. I'll be right back. I'd like to see a good pullback here, but maybe a 50% pullback. Thank you both. It makes sense. I have no position of scanning charts, practicing. Practice makes perfect, Maddie.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides. It's time for the big three. 3 stocks, 3 charts, 3 trades, and Rick Ducat will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder of TheoTrade. Glad you're on with us. We have had quite a lot of volatility of late, something you like very much as a trader. You often are betting to the downside too, waiting for some pullbacks. Tell me a little bit about what you've been seeing lately, Don. You've been making money?
Yeah, no, I do. I do like my bearish trades. There's no question about it. You know, right now in the S&P 500, we're looking at what I term a volatility box. For the most part, the trade has actually persisted roughly between 5,900 and 6,100, and we've been really in that 200-point range since the election. So we're just kind of pinging back and forth right now, and the trader in me absolutely loves it. I mean, you just look, you just pick your spot, you enter, you exit. This two-sided trade, couldn't ask for more right now in the marketplace.
And we're going to be getting to the VIX in a moment, that volatility index. But first up, let's take a look at JP Morgan. Our last guest actually said he likes financials overall. JP Morgan has been at record highs. Tell me a little bit about your trade on JP Morgan Chase now.
Oh, I liked it right up until the point I shorted it, and that's exactly what I'm going to do in this particular position. So right up front, I'm going to tell you 270 inside of JP Morgan looks like it could be a degree of resistance. In addition to it, you know, you've got like RSIs that are through the roof in here. I mean, just screaming like overbought. But moreover, and probably most importantly, there's rotations coming into the financials for no other reason than no one wants to buy NVIDIA right now. So they're done buying NVIDIA, so what are we doing right now? We're buying financials. So we're kind of playing, if you will, this rotation game, or what I kind of like term musical chairs in the marketplace. So here's a short position for you. I'm just going to go out to...
Okay, we got a 1, 2, 3 set up right here.
I'm going to be buying the 270...
Shut up. We have a 1, 2, 3 set up right here. So if that doesn't hold, the next drop, then we got this inverse head and shoulders. So there's a double confirmation right there. So this thing could easily drop down to this here 1, 2, 3, this here pivot point, and that's still going to be right in here. There's nothing down here to hold it up. No moving averages. So maybe one more crow. We got a double bottom right here. $60.2303. If that doesn't hold, then we could come back down. Like I said, this is going to be a choppy day today for some reason. I'm excited I did good this morning. I don't want to overtrade today. The volume's real slow. And I'm a price action trader. When the volume's slow, you gotta look for other indicators, like we almost had some divergence here on the RSI and the price was going up, but we failed that right there. So we could get another flag down, and that would be right in here at this double bottom, the next support level. And then I'm going to clean this chart up here in a little bit. Right at 60.20. Could be your next stop. So I'm going to go into the kitchen and cook that steak now. It should take 4 minutes, maybe 5. I got my broccoli on, and I got the sweet potato in the microwave waiting for me. I'm going to clean this chart up in a little bit. Some people, it's just a lot of trend lines. And sometimes it gets a little bit blurred up and you got to start all over and clean it up and start fresh. You want to overcomplicate things like I have here so far. But I used to laugh at a guy because he had his charts like this. What the heck is he doing? And I sat there and laughed at him. A month went by. I laughed at him, and finally one day I said, he's got to be doing something right here. So I started putting more trend lines in there, and then my charts ended up looking like his. And I became a twice as good trader by doing that.
stopping. Once we start getting above this pink line here,
It's never getting
that
ready.
area of interest right around here would be like 28 or so. That's about where we close or hit highs before things start getting really extreme. As you can see here, when you need the VIX calls, unfortunately, it's too late to buy them by that point. So something to keep in mind. When we look at the open interest on the options for the February 12th expiration here, well, on the call side, 17, 25, and 28 are the big open interest areas. On the put side, 14, 15, and once again 17 as well. So those are our strikes that traders seem to have their eyes on for that particular expiration month.
Okay, so he's showing us some good points throughout where the VIX could trade. Tell us your final thoughts here, Don, on this one.
Yeah, no, this is again, it's all about the uncertainty that's actually facing us. There's many times in this marketplace where you do have some degree of foresight. You get a little bit of a feel. And there's times like this. First of all, the S&P 500, as I said a moment ago, is trading inside of kind of a volatility box. And secondarily, it's like there's no foresight right now. You didn't see DeepSeek coming. We've been talking about tariffs for the past 2 months, but no one saw it coming this Monday. Again, the next risk event and that catalyst is right around the corner, and no one has any idea what that is going to be. So at this point, again, I think it's a nice, safe thing to say, like being along a little bit of volatility in your portfolio can't hurt anything.
All right, last but not least, interested in Starbucks. This is we've got in Chipotle today, which came under some pressure, and of course Ryan Nichols left when Chipotle went to Starbucks. There were some spots of, bones of contention when it came to the Chipotle report. How are you feeling about Starbucks and what it may bring in the months to come?
All right, so no conversation is complete in Starbucks for Chipotle without talking about Burrito Brian Nichols. So look, the short position that I'm creating here in Starbucks, really, I'll be honest, I'm not trying to get bet against Brian Nichols in no way, shape, or form, but I do believe that the share price has actually gotten ahead of itself here in Starbucks. So the most recent, lift to the upside, look, this turnaround story in Starbucks, it's likely to be a very long one. And as I said, share price has kind of gotten ahead of itself right now with some really significant expenses. So CapEx is going to be kind of through the roof over there. I'm actually going to take a short position here in the near term, looking for a decent-sized pullback, possibly a pullback even under the 100 mark again. So in Starbucks, I'm going out to the April 17th expiration. I mean, for me personally, that's a little bit longer out. Obviously, for most people, that seems probably relatively short-term. So April 17th expiration, I'm going to be buying the 105 put, selling the 100 put. Just a $5 wide put spread, very slightly out of the money. This trade's done for $1.67. So the trade, roughly speaking, risks about $1 to be able to make about $4. The accordance that Starbucks pulls back roughly under the 100 level once again.
All right. As we take a look here, what do you think, Rick, when you look at the technicals on this one?
Sure. So this is another one of those charts where there's some horizontal levels that stand out here. To backtrack a little bit, the 90 level here, a repeated low point, and then a subsequent high point after breaking downward. Low point, and then we did have probably felt rather concerning to a bull in that vein as we did break through that point, but we stopped right around the 86th level, which represents the lows from all the way back there as well. So no serious damage done, it seems, during this V-shaped move that we experienced more recently here, this decline and rally that took us above those old highs near 102. Notice as well that the old closing price and those highs roughly about where we opened after that gap up. Never really looked back so far. We also saw a bit of a bull flag type situation here where we had a big gap up, a brief period of sideways to downward consolidation, and then a subsequent breakout and rally that eclipsed the original highs. Now we're at those 52-week highs of 111.50 on an intraday basis today. Moving averages, we've left behind trend lines, not really anything too near term to consider here. RSI also higher, but a little bit of bearish divergence once again. Price on pace for a new closing high, but RSI has not made a similar high. So something else to consider, perhaps that would be in the more bearish camp there. In terms of volume, we can see that the heavy trading levels are pretty close to where we are now. There were some takers at these elevated levels here, about 108, 109, and then our point of control all the way down here near 95. That's the heavy trading area here. Relatively thin trading between there and here. Not a lot of other notable areas. So this point here, the highs and then subsequent low point 102.50. That seems like an area to watch.
All right, nice. The big three here. We had Starbucks, the VIX, and JP Morgan. Thank you both so very much, Don Coffin and Rick Tech. Coming up next, we continue our spotlight on tech. The tech earnings, the big tech companies, AI, the volatility in some of these stocks. At the same time, we'll look at a recent CEO study conducted by the Future Group of Carney Consulting. We spoke to over 200 CEOs. Trading 360, we have the details next.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Morning movers bring traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning movers only on Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customized to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere on
Bounced up. Bingo. Nailed it.
Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Pedalese, and we're live on the floor of the New York Stock Exchange. I want to continue talking all about tech. Daniel Newman's with me, CEO of the Future Group, where he's been in Davos, you've been at all the big events, you have the survey that we're going to get to over 200 CEOs, and some of them even more so, another 25 with a real sit-down, in-depth interview on how they are navigating this kind of environment, particularly with tech and AI. But before we get to that, let's just lay it out there. I mean, first things first, Alphabet, I got to, hit you up there. What do you think?
Well, we knew this was a bit of a rinse and repeat with Microsoft. They came up just short on the cloud number. The market reacted exactly the same way, Nicole. They were like, basically, you missed the cloud number. This starts to bring question into whether or not AI is converting to dollars quick enough. But then they came out with that $75 billion capex. So dollars seemed to go out of Alphabet, and then they rolled into NVIDIA and Micron and Broadcom, which are all rallying because people are saying that I guess the AI trade is still infrastructure.
It's interesting because Meta came out and had this huge capex spend too, but the question for Google that I was reading was there are some questions surrounding Google search and its longevity, and that is sort of the wild card. At the same time, pretty much every single analyst has 220 and higher for the price target. So they all believe in this trade.
I mean, the company continues to perform extremely well. It actually beat on top and bottom, and I think it got a little bit lost in those numbers, in that cloud number. Of course, China's comments about the antitrust probe yesterday certainly probably created a little bit more consternation. And you do have to acknowledge right now that Gemini has not won considerable market share. OpenAI, Anthropic, others. And we know that Search 2.0, the next era of search, is going to be generative. So Google has to prove that they can convert their search customers to generative.
Right, understood. So are you a fan of Google, or you want to wait and see?
No, I'm pretty optimistic about it.
YouTube, this is what I'm having for lunch today. T-bone steak, broccoli, and sweet potato. Oh yeah. Protein Palace. I mean, this is good. I cooked the steak perfect this time. Yesterday was a little raw. Today it's perfect. I mean perfect. Pink on the inside. Seared it for 2 minutes on each side and on the ends. And that's it. Perfect. Real tender. Real tender. God. Jeez. No, it's not overcooked. Protein Palace.
basically interact with
I
search.
didn't say barber. I picked doctor. I thought that was
I know,
good.
I'm having a little fun with it. Yeah, you're going to be able to automate a lot of your life just by having a conversation with a bot that's going to do a lot of things that give us convenience.
And so that being said, now at this point,
So in other words, people will stop learning.
many of these things, look, Amazon, just, end of January, we saw Amazon new all-time high, Meta new all-time high.
The 60/40s are at 710. So that'd be a total of $900 I left on the table. Almost, though under nines. 800 for sure. I sold that last one at 6 or 7, 6. The steak is cooked to perfection. If Elvis was alive today, I'd feed him one. Double top coming up. Yesterday's highs. Let's do it. Let's take it to the top one more time. There's not a day trader out there that'll sing to you like I can.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360 right here on Schwab Network. So glad you're with us. We've had back and forth action right now. The Dow's up 58 and the S&P's down 2. In the meantime, it's time for our disruptors, and George Zillis is here, senior markets correspondent, taking a look at Qualcomm. Earnings
George.
after the bell. You just heard Daniel Newman.
As we approach resistance at 6,038.63, I'll start looking at puts. So prepare ye in the name of the Lord. today's puts will capitalize on the 60-25s. Okay, get ready. As Jim approaches the top here, he cuts into his beautiful T-bone steak. He's got his order ready at 60-25. He's going to buy one contract right about now at 440. So he's going to clear this up. I want to keep this on here. What, 60-38? We're now at 430. And I got in at 440. These are the SPX puts. These are the February the 5th. Whoops. 5TH strike. 6025.00 at 4.40. Oh man, it's perfect. The perfect steak. Next one, I'm going to apply butter and soak it. The crowd's going wild. Randy, do you think I'm doing the right thing? You're having bourbon for lunch. AMD bounce. George.
Gain, which is $1.75 over the credit you receive. But that max loss will only occur if there's a big breakout above 195 on the high side or below 155 on the low side.
Right. Which way will it go? Now you have a setup for
That's right.
both directions. George Still, it's great to see you. Thank you so much. Good luck there at Qualcomm. Waiting on those earnings after the bell. 360 round is next. A close look at Alphabet, and our guest has a $220 price target on this name. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network.
Could add one more here.
To follow all the market trends.
We're at 410.
Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it?
My way is the best way.
To invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I like
No.
personal investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
It's going up. So I'm gonna grab another
Modern
one.
Approach to wealth management.
Shut up. Give me 360. There it is, 360. I got it. Now we'll find out for sure. Practically down $100. No. Wow, they're running it up. This ain't right. Is that a guy or a girl? That's a guy. Well, it's still in it. Shit. Now it's really taken off. Wouldn't you know? 5 straight candles to the upside. No, it's really cooked to perfection. They're got that taste, just That was unnecessary. I blame you, retail traders. So I'm going to buy 2 more. 275.
AI, if it becomes very efficient, I wonder what that's going to do to the advertising revenue of Google, because if people are getting exactly what they want off of those searches, not enough ads are going to be popping up, and that might hurt revenue. I just thought about that a second ago.
And so, yeah, and Scott, you can answer that and more. I mean, when we think about what goes on with Google, I mean, what are you going to be watching, and how quickly can it get to 200 and 220?
So that fear that Ed's highlighting about getting to answers instead of getting to blue links is at the core of what I think the concern is with Alphabet is that it's a less monetizable search result when you're getting closer to answers. It's possible, but it's also possible that it supplements, the existing architecture, meaning some consumers want information to allow their own brain to get to a result, and other consumers want answers. If answers lead you to do more queries, then the net effect is positive, and that's kind of where we stand on that. The other component, is that even to the extent that Google does, and this gets to this DeepSeek question, and is it getting cheaper or not, one of the concerns is that even if Alphabet/Google maintains its position, that it gets more expensive to deliver search results because the compute involved in GenAI is more expensive. And that would be indicated in their CapEx guide as something to be somewhat concerned about. And
my average is 338.
It's so early, in this cycle to know whether costs go down precipitously from here, whether they hold, whether Alphabet can monetize the way that they claim or not. And I think that's why you get the volatility in this name and others until we get better information and a more developed kind of thesis on the topic.
Yeah, and in your notes, you had so many fun facts. I mean, including Google Lens is now used for over 20 billion visual searches per month, et cetera, et cetera. There's a lot of fun facts in your note. Thank you for that. Good to see you both, Scott Devitt and Ed Butowski. Thank you. I'm Nicole Petalides. Thanks for being with us. Fast Market is next.
I love you, Nicole.
Schwab Bank Investor Checking, the checking account built for investors.
I want to take you home with me.
Satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
What's your YouTube channel?
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
There goes the sweet potato fart.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Whether you're a bull or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Yeah.
Good afternoon, traders.
Is it
Welcome
not going good?
Here on the Schwab Network, I'm Tom White. We got a great lineup for you today. We're going to cover markets, which are now positive, and then we'll have option discussions in strategies in ARM Holdings, which is up over 120% over the last year in earnings, and Qualcomm, which is up about 13% so far this year.
Give it a second.
Results. And like Folio, we'll have sentiment data on Yum Brands, which is relatively flat over the past 12 months into their earnings tomorrow morning. Now let's take a look at the major indices. As I mentioned, quick turnaround here after some weakness earlier. We got the S&P 500 up just over 0.1%, the Dow up over 110 points. NASDAQ now positive, up 36 points or nearly 0.2%. And leading to the upside, no surprise there, the Russell 2000 up 0.9% on a lower dollar and lower yields, positively affecting small caps here.
Lower dollar should be good for the
action. Let's bring in my colleague,
tech.
Kevin Haynes. Kevin, quite a turnaround, but when you've got yields at 7-week lows and continuing to fall, not surprising that we're seeing a little bit of a rebound from that early weakness.
Back to 384, Randy, on Tesla.
Our Nicole Petalides this morning and Diane, this was a master's thesis in macro versus micro, right? The overnight futures, because Google Alphabet was down, AMD was down, Uber was down, Chipotle was down. The overnight markets were heavy, but just look at the macro, Tom. The dollar was lower, yields were significantly lower, and crude oil was lower. And what I said this morning was macro traders are going to love what they're seeing in yields in the dollar and crude oil. And so the market opened up, it was lower, and it firmed up pretty quickly.
Uber hit my low support.
As the economic data was, not, we had some mixed economic data, but mortgage apps was good. ADP was a little better than expected. PMI services and ISM services were both above 50. That's
Jeez,
a little
what a run.
One beat, one miss, but all things were considered. The U.S. economy is strong, Tom, and if yields start going lower or creeping lower, stocks are attractive again here, and I think that's what you see playing out. It's the big discussion between microeconomic news and macroeconomic news, Tom.
Yeah, but Kevin, you throw into the mix is earnings. I mean, you've got Google Alphabet down over 7%, you got AMD down over 8%, you've got Uber down over 6%. So a lot of these, earnings results aren't coming in positively. They're kind of pushed aside, and the overall equity market's moving forward. But isn't that what we should be focused on, is that, hey, if these companies are starting to guide for softer quarters moving forward, or there's things within their earnings reports that don't kind of mesh, it's kind of surprising that we're seeing some big market participants down significantly today, and the market doesn't care because it sees yields going down.
because I think, remember, if there's 4 names that you're mentioned there, Uber, Google, AMD, Google Alphabet, AMD, Chipotle, there's 496 other names, Tom. And remember, $75 billion in spending by Alphabet. That goes right to NVIDIA. And Supermicro had good news out. The fears around DeepSeek are starting to dissuade here. I think you've got a strong day in NVIDIA. You've got a strong day in a couple other names. The AI trade is gaining a little momentum here. And as you know, Tom, AI, everything surrounding AI, that's favorable. And we're getting every day, Tom, we get a little closer to AMD's earnings on the 26th.
Kevin, when you look at the data that came out today, ADP above expectations at 183K, so kind of reflective of that strong labor market at this point. But then ISM services, while still in expansionary territory, this is a big miss. Is that part of the reason that we're seeing a little bit of sell-off in yields at this point? Because
we'll see it now.
In services to the downside because that may be reflective of a weakening economy, but still decent numbers above the 50 level.
Right. Well, yields were lower before this number came out, but it added to them, I think. I think futures rallied slightly when the ADP number came out. I thought it liked that. We got more this morning. Tom, just the slightest downturn in 30-year mortgage levels from 7.02 to 6.97, and refis go up 12%. That shows you how the housing market is just waiting for yields to come lower. And if it stays like this, we're going to get another big mortgage app number next week as well, Tom. So, listen, I think stingy, higher for longer interest rates have been kind of holding this market back. Of course, you're going to have names that, guidance is such a big part of this earnings season that any softness, because of the valuations we're at, are going to bring in some selling here, right? Some disappointment.
Well, let's see it.
Overall, things considered, like I said, the macro with lower dollar, lower yields, I mean, stock pickers are going to start picking bottom. Remember, you've got it, this morning, you had NVIDIA, what, $30 off its all-time high? $30 going into their earnings in a couple weeks. NVIDIA is something to watch the next 2 weeks, Tom, but Google Alphabet's down. But boy, they are getting better at everything they're doing. I think Google Alphabet gets a bad rap sometimes with some of the things. Their search is getting better. Their AI component is getting better. They make slow progress all the time, Tom. So I don't know. It's hard to figure out, but it's a macro and a micro story today, Tom, and traders love the macro.
Yeah, a lot of choppiness back and forth. And Kevin, think about it. The S&P 500 is only 1.3% below its all-time high. So even though we've seen some weakness over the last, couple of weeks here, we're still basically at all-time highs. That's what's kind of the head scratcher for me, but definitely that macro theme with yields and the dollar falling is definitely supporting equities at this point. Kevin, real quick before we get on to some of these earnings, when you look at the global economies, China's not doing as well as they wanted to. European Union, they're still
I don't want to sell it for loss yet.
At this point because their economy's not doing well. The EU in general, not doing that great. Is that part of the strength that we're seeing in U.S. equities? Is the fact that hey, money's got to go somewhere, and it's coming here to the U.S. because robust jobs, GDP growth, a better environment, maybe regulatory-wise for a lot of companies.
There you go. You just said it.
Yeah, and that's
regulations.
That's probably why there's a put built into this market at this point.
Well, number one, Jerome Powell wants to lower rates, right? He wants them to get lower. So he wants to see the data come in. Like, think about this, Tom. If you're Jerome Powell, I think you like the ISM services number. Still an expansionary, but not out of control on the upside. A little softer. That lets yields continue on the downside. That's going to start bringing in more discussions, moving those rate cuts a little closer. Remember, the general consensus was that the rate cuts were moving out and maybe even into next year, going from 2 to maybe 1, pushing them out. You start getting good data but softer, and now you're making Jerome Powell's case for him to move those cuts into this year. So I think there's a lot of good positive things here. Earnings are always going to be choppy, right? Those individual stories. When you got valuations, Google Alphabet had rallied into this number in the last couple of weeks, so a little softness there. But I just think, Tom, the macro setup is pretty solid right now. The U.S. Markets, the U.S. economy is pretty solid, and that's lending people to buy beat-up names like NVIDIA and some of these other AI players. So I'm going to watch Google Alphabet, how it plays out today, and see if it recovers from any of these numbers, because their numbers weren't bad.
Yeah.
They just talked about, some of the growth in cloud was not as much as they thought. But boy, I tell you, Tom, it's still a very strong U.S. economy that seems to be, clearing away a lot of the debris and problems and removing regulation. If that starts bringing M&A back to the U.S., look out, Tom.
Yeah, and I think part of the reason, Google Alphabet will take that as an example. It's already $3 off its session lows, still down over 7%. Revenue rose 12% to $96.5 billion in Q4, Kevin. But then I think the caveat, because the bar was high going into this. Remember, Google Alphabet hit all-time highs.
I'm still in it.
Going into this report is the fact that $75 billion in CapEx spend this year. That was over $15 billion, more than what the street anticipated at this point. So is that part of the concern here for Google Alphabet, and why maybe we're seeing a reset?
Yeah, let's make a comparison. Remember how, Tom, we talked about on this show a lot, from a trading perspective, that the overall trading world didn't like when Amazon would spend, right? Amazon would come out with these big CapEx numbers, and the stock would sell off. You may be seeing a little bit of that from, let's say, Alphabet in this case. But,
I'll be right back.
Let's watch how that plays out.
See, hope this drops.
We've monitored Amazon like that, and they don't like big CapEx. Then they back off, the earnings show up, and the stocks move higher. So, it's a discussion topic. I mean, what's too much CapEx? How are you bringing all this to the bottom line? How are you going to monetize all this AI spending? I think that's what this market's trying to figure out. And when they see CapEx, if they think that's too much, they hit some of the names. Let's see how that plays out over time, though.
Yeah, they already said they're starting to monetize the Gemini on their Google search, but a lot of the metrics, whether it was ad spend, was down from year-ago levels. So high bar, not surprised. You get a couple, caveats within that earnings report that's driving down the shares right now. Maybe it's an opportunity. Who knows? We'll have to wait and see on that. But they're definitely investing in AI for the future. On the flip side, Kevin, AMD, not a great report. I mean, they beat on EPS, they beat on revenue, but then you got data center coming in a little bit light. We keep talking about CapEx investment that all these big tech companies are making, but AMD, it just seems like, this stock was down over 30% for the last 12 months going into this report, now getting hammered again. What was your takeaway?
I'm going to lay down for a second.
I think this is, remember, the cyclical part of their business that we're waiting to turn back up hasn't happened yet, Tom. It's as simple as that. And their competition with NVIDIA, which everyone thought was going to be much closer than it is, turns out isn't as close as we thought. They're still playing catch up against NVIDIA. Meanwhile, the other parts of their business, the data centers, the other things, are struggling. And so they can't get any headway going. But there is a cyclical part of their business, Tom, that eventually, we don't know when, but eventually is going to turn up. And they're going to keep winning against Intel in the CPU market, where we're pretty confident of that, even though Intel is big and still the biggest. But AMD's got two fights, right? They're fighting Intel. They seem to be winning that one. They are not winning against NVIDIA, Tom.
And then also Uber had earnings. They got a big pre-tax bonus there, $6.4 billion. That actually upped their EPS pretty significantly. But Kevin, the metrics here, revenue was up 20%, rides were up 18%. I mean, pretty solid numbers, and this stock was in bear market territory also going into this earnings, off over 20% from those recent highs that we saw just last October. And this stock's getting hit on that news, and it didn't seem like a bad report. I think there's just a lot of haziness around the fact that what is autonomous vehicle driving going to do to this company moving forward, right?
That's what's hurting this stock in the last weeks and months and today, Tom. It's not the numbers. The numbers were outstanding, and the growth numbers and the usage, it's the fear on the horizon. What's going to happen with autonomous driving? They've got to help themselves out by either partnering up with someone or coming out with a clear path how they stay profitable and they stay significant in ride sharing, because they've got companies, Tom. And by the way, autonomous driving, the things coming down the pipeline, that is not close to affecting Uber anytime soon. But the fear of the future, I think, is what weighs on this name right now, Tom, because, boy, free cash flow, profits, revenue, they're doing extremely well right now.
Yeah, and Kevin, last name we want to cover here is Disney. Stock was up initially about 1.5%, 2% post earnings. It seemed like a pretty good report, but I was looking back. How we like to look at charts and widen them out a little bit than from what you normally look at, like a yearly chart. From 10 years ago, this stock's basically at the same level it was. I mean, I'm not surprised we're starting to see a little bit of a pullback here in this name, but there were some bright spots in the report based on the fact that some of their theater releases were okay. Right. They're profitable for the third straight quarter as far as their streaming side of their business. So there was good takeaways here, but it just doesn't seem like it has that allure that maybe a lot of other stocks have at this point, where you want to rush to get into this name.
Yeah, listen, Disney's a massive company that really got stuck in that streaming debacle that happened about their ability, the bubble, frankly, that was streaming. Now, slowly but surely, Bob Iger is right-sizing that business, getting it to a profitable level, but they've missed years and years where it weighed on the business. ESPN, doing okay still, trying to change itself from a sports, program platform to, boy, they are all about betting now, Tom. It's amazing how a Disney-owned company can be all about gambling. It is. Every time I have ESPN, and I watch it a lot, frankly, live sports are going to be a big part of the value in ESPN. But wow, the gambling is overwhelming, Tom, on that, and I wonder how they're going to manage that. Think about that, Tom. One last thing. It used to be liquor, tobacco, and gambling. Yeah. It used to be known as the Sin Index. Yeah. Can you imagine a world where Disney's in the Sin Index? Yeah. That is incredible to me, the evolution, because they avoided it for years and years. Now, Tom, you turn on ESPN, they're all in on gambling. And you have to start wondering how they're going to monetize or how they're going to get that ESPN app up and running, because I think live sports, what's been proven, that's a big winner as far as streaming goes. So we'll continue to watch that story. The stock's actually down now after initially rising. All right, Kev, let's take a quick break. When we come back, we're going to take a look at ARM Holdings. Chip designer stock is up nearly about 130% over the last 12 months. They report earnings after the close. Stick around.
Drop.
Every morning,
I need to
trade,
63.
Always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free.
We got an expand? No, not yet.
Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice.
Not over yet.
Yes, with Schwab.
Still in it.
Welcome back to Fast Market here on the Schwab Network. We're talking more tech earnings. We're going to kick it off here with ARM Holdings. Shares are up 100.
Might get out of it if we hit the 63.
Last year,
We're at a double bottom here.
So far this year alone, they got report earnings after the
I'm down
close
200.
today.
This could reverse right here if it still stays bullish. I had to go take a little bitty nap, and I had to get up because I saw the flag going down. I don't want to sit here and stare at it. I need to sell it though soon. I don't want it to reverse here. Don't. One more candle at least. Man, I should have added on. God darn it. I had a chance to add on. I just didn't do it. I got stubborn. Drip. A little bit more. I could have got it at least 220. A little too far out of the money. I'm 4 notches out.
Ten of the world's largest hyperscalers are developing and deploying ARM-based chips in their data center. That's one of the areas they're trying to get into. Over the last couple of years, they've increased their percentage in data centers by 6%. So they're starting to get into that realm of the market. But then, you know, it's like any smartphone that's sold, you know, China has taken some market share from Apple, but that doesn't matter to ARM because they're in the infrastructure in those phones that are getting sold globally, and that's increased about 40% year over year in their second fiscal quarter, which ended a couple months ago. But when you look at the stock, you know, the valuation, as you mentioned, is getting pretty elevated at this point. But when, you know, you've got such growth areas such as they're in AI, they're in automobiles, they're in smartphones, they're in the Internet of Things, they're in across the array and the spectrum of tech at this point. How do you want to look at this one from an example trade? Because, you know, expectations pretty high. We're still not at all-time highs yet, but, you know, up 132% over the last 12 months.
Yeah, I think, Tom, you mentioned a phrase that you see a lot when you're reading about this name, and that's ARM-based, right? And that's what a lot of people are noticing, because that means that whoever's manufacturing that chip is using the designs, the ARM-based designs to build them. So, yeah, they're competing just about everywhere, Tom. So this is one that we certainly looked at a lot. I have a question for you, Tom. Do I have the example trade or do you?
Oh, I do, Kev. But thank you.
Yeah, I was like, whoa, what?
Yeah. I'm all over the place today. We had some people. Yeah. All right. So Kev, I looked at this based on the fact that we talk about this a lot going into earnings. Is that vol dispersion here? Stock's up $8 just today alone, nearly 5%. So that's going to throw, what I was looking at earlier might throw the pricing off a little bit on it. But I looked at that vol dispersion, and the option market priced in a plus or minus $17.50 move in the shares either way, up or down, post earnings. So implied volatility level is pretty elevated at this point, even though IV percentile is relatively low at 22%. But the near-term options really expensive as far as extrinsic option premium on here. So I looked at a call diagonal. If you think this thing's going to continue to move higher and go up, this is a way to take advantage of it. Going out to the February 21st monthly cycle, so 16 days expiration. Buy the 165 strike call. Was at the money. Now it's currently in the money by about $5. Buy the 165 call with 16 days left. And then in the near term, Feb 7th, weekly options that expire in just a couple days. Sell the 180 call. So a bullish $15 wide call diagonal to the upside. You're paying
ARM's earnings.
I got an $8 debit on there, Kevin. That's where it was trading earlier. It's trading closer to $8.60 right now. But the debit you pay on this is going to be your risk on it. So $800 per spread on this one. You might have to pay a little bit more for that. But the call diagonal is $15 wide. So you're buying it relatively inexpensive, right? It's less than the width of the call diagonal because of that vol dispersion, right, Kev?
Now, Tom, there's something that you and I talk about a lot on this show, and that is
what's that?
The difference, the dispersion between the event expiration and the second or third or wherever you want to go with the long side of a diagonal. And we're not saying it's Bible, and you still got to get the movement in the right way, but everyone should pay attention, at least notice, whether you trade it or not, notice the difference. 175 vol in the front expiration, and then the Feb 21st where you went 80 vol, Tom. Think about that. That's 100 volatility points between the two. That is something that everyone should at least notice, whether you trade it or not. And then, obviously, the risk on this trade, Tom, is I've got it trading closer to 850 right now. It's moving a lot. That's the risk on the trade. You're looking for a move up to that short strike. Yeah, if you're looking at the at now, maybe do you want to move
SPYs are at 192 this morning. I called it a buck.
Possibly, if you want. But this is one that collects theta, a fair amount of it, about $185 in theoretical theta per day. But some of that will come out when the event happens. But Tom, you're looking for a move towards that short strike, which is $180, Tom.
Yeah, that's well within the 1 standard deviation move that the option market's pricing in. But you make a good point, Kevin. You could always go out to the Feb 21st weekly option, buy the 170 call, and then sell the 185 in the near term Feb 7 if you want to adjust your strikes. Kevin, one of the key things I look at when doing these or looking at these example trades, especially like a call diagonal like this one, where it's bullish, you need to move to the upside, is there's over $5.10 worth of option premium in that 180 call that expires in just 2 days. So your break even, you're basically at your break even for this trade right now. About the 169, 170 level is going to be profitability on this, because even if it doesn't go above 180, you still have that opportunity for that to go to zero. And that's a lot of option premium to take off the purchase of your long 165 strike call in this position, right?
Yeah, the mid-market price on the February 7th 180 call is about 527, 528, right there.
Yeah.
Think about that, Tom. If this stock doesn't rally $10, that's got to go to zero by Friday. And that's why the theta number, the theoretical theta number on the platform is so high. And all you're doing is taking advantage of that, right? One of two things has to happen, Tom. Either it's going to move up towards and through that strike, or that option has to go down by the end of the week Friday. So it's just math, right? If the stock doesn't go to 170 and above, that call has to come down. So now you're going to get some vol crush, and both options will probably come down. But you're hoping a move towards that 180 strike will make that long option hold on, and the natural gravity or decay take a hold of the 180.
Yeah, definitely positive time decay on that strategy. You got some assignment risk on that short 180 call, and the opportunity, if the market's open, to roll or adjust that short 180 call, creating credits. That lowers your risk, that increases potential profitability also. On the bullish trade there in ARM Holdings. And remember, if you're more bearish on this name, this isn't a strategy that would work in this type of environment, so keep that in mind. Maybe the put diagonal if you're more bearish on this name. All right, good look at the call diagonal. Let's take a quick break here, Kev. When we come back, Andy Swan from Folio. He's going to take a look at sentiment data on Yum Brands, the Taco Bell
Yummy.
parent. That stock's relatively flat over the last 12 months. They report earnings ahead of the opening bell tomorrow. Stick around.
God darn it. You wouldn't believe it. Them 60-25 calls that I had this morning. Oh. 28.50. They went to 28.50. It's horrifying. Four times 28.50. Plus those other two I had, or that other one, so I had 5 more or less. That'd have been 10 grand. The 60-25s. I know the puts ain't going to get that high. I'm coming down to the 63, I think. But we got a triple bottom here, so it could either do either way. Should have sold them. I had they were at 3 at one time, but I'd still be down. Give it a little bit more time. For some reason, I'm not too worried, but if it could drop to 60, 39, 60, I'd be green for sure. What happened to all the uncertainty, market?
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder at Folio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking food. It's almost lunchtime. Yum Brands up only 3% from year-ago levels. This has been a choppy trade.
Yep.
Andy, you know, it seems like maybe 1 or 2 of their franchises does well. The other one drags on their earnings results. But what kind of data are you seeing on Yum Brands going into earnings?
Yeah, I think it's the same old story. You just summed it up really nicely. We think Taco Bell is performing very well. You know, if we look at monthly active users on the Taco Bell app, that's up 30% year over year, which tells us that brand is doing very well. But then when you compare it to all the other brands in the kind of fast food segment, all of Yum Brands web visits are down year over year. Only Chick-fil-A really and Burger King are doing well at this point. I think Burger King was off of pretty low lows, so we kind of throw that one out. Overall, we're seeing the fast food industry just kind of getting a reset. You know, in 2023, we saw a real peak in both spending and overall, you know, food consumption of fast food. I think that the customer is definitely cutting back, and the fast food industry is facing a real value proposition problem because of the, you know, the rise in expenses of workers, of food costs, and everything that they're trying to pass through to consumers. And all of a sudden, you know, your fast food meal is becoming, from a price perspective, similar to, going to a sit-down restaurant or at least a
Yep.
fast casual restaurant.
It's true. Why?
We see
I know
the
why.
fast food industry is just
Because how they treated minimum wage. And I don't eat fast food. Now, yesterday I went and bought me a Frosty, but I haven't ate out at a fast food joint. And, oh man, I can't tell you. I used to go get a Big Mac once a year, and I haven't done that for 2 years. I'd go to McDonald's, and whoever was behind me, I'd buy them a free meal and drive off. But not since that CEO bashed conservatives. I said, I ain't eating here never again. At McDonald's. I said, screw you. I don't know why they do that. I don't know why CEOs get involved too much in politics.
Some of those more high quality restaurants are still hanging in there, but some of these places like Taco Bell.
Tesla's got a 1, 2, 3.
KFC do well. Pizza Hut is a drag on their earnings. A little trivia: Yum Brands used to be owned by PepsiCo back in the day. They spun it off into Yum Brands, but this is a company. They still do the franchise model, so they are in somewhat ways insulated.
Man, I can't believe that.
Some of the
I said it this
swings,
morning.
but this is still a company that's got to get it right. They're in
Man, I nailed the bottom on the SPX, and there went to 2,800. That just upsets me. I mean, that'd been $10,000. Five contracts in all. I just got, I'm settling for pennies. I'm up, not now. This trade I'm in now is going to screw me if I don't figure out a way to get out of it. Not bad, but it's going to. But these start depreciating, these puts, they're not like calls. I end up having a $400 or $500 day if I don't sell them now. That steak, that fills you up. Baba's had a good run here in the last 2 bits, 3.5 weeks. So I'm at 275 again. Drop. So this is the 1, 2, 3 right here. This is a descending flag, so if it doesn't hold the 63, it's going to be a drop. If not, I get out at 275. Let's see what happens here. I should go ahead and sell them. just down 240 right now. I didn't see this just kind of running. Better throw a ton of money on the next dip. What time is it? 12:40, so I ain't really got much time. Tilray is up 111 from 98. Starting to show some kind of, at the bottom, some kind of move. Bubba. SMCI's up. AMD is popped a good $3. Come on, drop it. It would be a nice gift if you just dropped. This is descending. This is bearish, but could you be getting just ready for a squeeze to move back up on a breakout? I'm going to go clean my glasses and I'll be right back. See, this 63 is applying pressure. If it doesn't hold to 63, it's an easy drop and I'm out green. Yum yum.
the end, beautiful friend. This is the end, my only friend. The end of our elaborate plans. The end of everything that stands. The end, no safety or surprise. The end, I'll never look into your eyes again. Can you picture what will be? So limitless and free, desperately in need of some stranger's hand in a desperate land.
That's a painting I did of Jim Morrison. It's called gouache painting. Ink. You put this gouache on the paper. It's a white. Then once you think you're done with it, you add the ink to it. And then you take and wash off the gouache. And that's what I come up with. So it's called gouache. I don't know if you're familiar with that. She breaks out.
Well, Alphabet down or up about 0.2%, and the Russell 2000 up nearly 0.9%, leading to the upside on those lower yields and lower dollar. All right, let's get into a discussion about another tech name that reports earnings after the close. That's Qualcomm. Shares are up 20% over the last 12 months, but off of those all-time highs that we saw just months ago, so it's pulled back pretty significantly. Let's bring in George Tillis, Senior Markets Correspondent here. George, give me your take here on Qualcomm going into earnings, because, you know, like ARM Holdings, Qualcomm does some licensing part of their business. They're starting to expand in different areas, but they're in automotive, they're in Internet of Things, they're in everything, right, George?
They are, and one of the interesting things about Qualcomm, I mean, first, they basically have about 30% of the smartphone market globally. So for what it's worth, that's quite compelling. Apple represents about 20% of their sales. Again, maybe there's some additional exposure there that has created some apprehension and investor sentiment, if you will. But if you do look at the performance, first, it's obviously been higher over the last year, but it's really been a market performer. I think one of the areas that that Qualcomm has struggled in is essentially in its computer CPU markets. Now, one thing about Qualcomm's business is, and its technologies is very unique to itself, is they have their Snapdragon chips, which includes both communications, connectivity chips,
Head and Shoulders,
and also computation or CPU. So it's combined communication and CPU. That is actually very compelling when it comes down to the Internet of Things, the automotive markets, which have been relatively stagnant for the underlying business, but also the industrial automation markets. That's another area that Qualcomm has been building its base. But its broadband, if you will, chipsets, and of course Bluetooth technologies go into mobile phones, plus its CDMA technologies, which it licenses, earn about, like I said, 30% of total global market share.
You got a two-headed,
So I think some of the
double
weakness
top there
in the stock is really
could come back
reflective
down
of the
here.
CPU markets, because
So I'm going to add big on these.
Upon some of the market share from Intel and AMD.
And try to get out of this thing.
When it comes down to computers or laptops that are in low demand for power, that again have that compelling feature of computations, but also communications, and they also operate those technologies at lower power thresholds, so that conserves energy. But the quarter is expected to be higher, I would say modestly. I think the estimates going into this quarter are rather low. At 8% higher on EPS, around $2.96. Sales are estimated to be higher by about 10% at $10.92 billion. So I think if the company can demonstrate some pickup in demand in the mobile chipset space, maybe give us some indications that the CPU and maybe the automotive segments are starting to flatten out in terms of the decelerating revenues, because AMD, for instance, weaker areas in that business were actually the core CPU markets. The other thing about Qualcomm is there may be some indications, because some of the news outlets suggest that China is actually helping subsidize the procurement of handsets for their consumers. That might actually be a slight boom to Qualcomm's business as well.
George, I only have two real quick questions, and they're both risk-based.
Yeah.
Is there risk with Qualcomm trying to get into the PC market?
Drop, bitch.
That they can't beat Intel and AMD, number one. And number two, how big is the risk of their earnings based on Apple? Is Apple still trying to make those chips in-house that could hurt that 20%? Remember, they tried in the past and couldn't get them to a high enough quality to replace Qualcomm. What are the risks there?
Yeah, that's a good question.
I'm almost even now.
Apple itself, Apple has really declared that Qualcomm.
I got a lot. I got 8 of them 205s.
Especially when it comes down to connectivity.
Go.
I think that's quite compelling for Qualcomm. Because again, Apple at one point in time used Intel's modem chips and they weren't as good, so they actually moved back to Qualcomm. But there's always a risk that Apple, dissolves that relationship at some time in the future. I think the other thing about Qualcomm is I don't see them directly competing with Intel or AMD, because the processors that of course Qualcomm supplies the marketplace are not for the higher power needs. They're actually in the middle ground, which includes your tablet devices. Your Microsoft Surface, for instance, uses Qualcomm's chips, which again combine the CPU and the communications chips, and that actually becomes more of a value orientation, cost saving element to the OEM manufacturers of the computers. But I don't see this on the higher power side of the equation in desktops and again high powered laptops, for instance. I don't think they're moving too aggressively.
I'm about even on them right now.
More on that mobile device segment, which also,
I was up.
If you think about the automotive sector, cars are mobile devices, not just for transportation, but also from communications and also computation as well, considering all of the autonomous features that automobiles have.
All right, great breakdown for us. Appreciate it. That's George Tilla, Senior Markets Contributor here, breaking down Qualcomm ahead of earnings. Kev, you look at the option markets, pricing in about $11.70 move in the shares either way on this one, about 6.5%, 7%. So you looked at something a little bit more neutral in your example trade with Yum Brands. I'm going to flip-flop this one where we're going to look at a strategy that takes advantage of a move. Now, the stock's been in a range of about 150 to 180 over the last several months, but it's far off its all-time highs of $230 that we saw last June, Kevin. So I was looking at this one where, yeah, the implied volatility levels are elevated, but if you think it's going to move maybe more than that one standard deviation, this takes advantage of it. It's a long iron condor where you need a move, and you don't care if it goes up or if it goes down, but you want it to go more than that one standard deviation move. Going out to the February 7th weekly cycle, so
chance to
really
get out
short-term
even.
Positioning here, Kev. Where I'm going to buy the 180 strike call, sell the 185 strike call. So a bullish $5 wide call vertical. And then on the put side, buy a 162.5 strike put, sell the 157.5 strike put. So a bearish $5 wide put vertical. Combine those four legs into this long iron condor. You're paying a debit of about $2.30 on it. There's your risk. $230 per spread on that, with the potential.
Unlike the fact it come up and retested that shoulder again.
162.5 on the ups or on the downside, or 157.5 on the downside, 185 on the upside. Kevin, this is that strategy where, you know, it's not positive time decay, it's negative time decay, and it's actually you want some volatility in this type of strategy, right?
Yeah, everything that we just talked about with the short iron butterfly, flip it over, right? You want it to go as far away from those strikes as possible in either direction. This $2.30 debit that you pay, remember this is a debit, okay? That's the risk on this trade if it doesn't move outside that range in the next couple of days. So you're playing for a move in either direction, and you don't care. You want one of these verticals that you're buying to go to full value. Right, you're spending $2.30 with the chance to make $5, to make another $2.70.
We get news that he's going to talk to XP, and this thing going to bounce up big.
Realistic on there, but Tom, this is one that's the opposite of a lot of things we talk about here, which is you are playing for a move.
Yeah, definitely. Break evens to the downside where you want it to go below $160 and basically 30 cents. To 20 cents, and then on the downside or on the upside, 182.30 is your break even on the upside. And Kevin, you make a good point here, because if you're more neutral on this, where you think it's going to stay range bound and not move post earnings, you can flip this and sell the iron condor if you think it's going to be a relative, unpronounced move where it's not going to go that much. So that's one way that you can look at this. This is playing for a move outside of the 1 standard deviation range. If you flip it and sold this strategy, you could actually take advantage of more neutral strategy. So 2 ways to look at that one. All right, great stuff. As always, thanks to Kevin Hinks, my co-host, but that's going to wrap up Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your
I'm on
skills
hope right
to the
now.
next level. Subscribe to Schwab Network's YouTube channel now.
I need 250. I was there once before. We hit 260. I could have sold them. Maybe and got them all out. I got 12 contracts.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network.
The IWM can hit the 200. We got the 63 support level on the SPY and all of them. The QQQ, the SPX, and the SPY.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And
But I can't wait much longer. It's got to hurt and do something.
Education, crafted just for traders. Also, you can trade brilliantly.
Whether you're a bull or a bear,
Whether you're a bull or a bear.
On Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
It's a bull flag.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, we are seeing markets now pretty solidly in green. We're not surging by any means, but considering we've had some pretty dismal reports from major tech names, I mean, I think that etching out right now some strength is at least seen as a win for me when you look at some of these big names that are making moves.
This is an impressive bounce back, basically, at now.
Yes, it is.
You know, kind of the tariff sell-off of this week's so far highs. Obviously, a huge gap down on Sunday. Make back most of that on Monday and Tuesday. Some weakness both days to begin things, but able to stabilize well above 6,000 in the E-mini S&Ps. We're almost 60-50 now in the SPX. So kind of business as usual for this market. The new dynamics with all the news breaking is news breaks, big movement, and then things seem to normalize. So normalizing at lower prices, all things considered, from where we
No, I didn't see what Bobby did.
The last few weeks, but it looked a lot uglier on Sunday night than it certainly does now.
No kidding. I think perfectly said here, especially because now we're seeing some pockets of strength in names that were initially lower on the session. So we are in the swing of now earnings season. I know that we have most of the Mag 7 names behind us, but still a lot of previews still ahead. Tons of companies still yet to report, as this week has been jam-packed with earnings. So we'll start things off, as always, with the upvote and downvote. We will be charting and trading those upvoted.
I'm in the SPX.
Today we're talking Roblox, which has its earnings out tomorrow morning. And I will say, touching new 52-week highs earlier today, now modestly higher on the session. We'll also be recapping Chipotle's earnings, which is seeing some pressure, some of that selling easing, but we're also going to be joined for that segment by the head of analytical research at Placer AI. So a fun conversation there to discuss what perhaps is weighing on Chipotle shares today.
We break this your channel.
Under 30 today, looking at shares of Big
Probably
Bear,
are.
receiving a contract from the Department of Defense's office to develop further automated learning and forecasting machines. So a name that's up over 50% on the session today.
Yeah, tons to get through. We got a fun little mixture of pre and post earnings for our upvote downvote segment. Let's jump right into that, Jenny. Upvote downvote. Let's start with the reactions that we're seeing within this particular space. And Alphabet. This is a disappointing response when you look at how the market's performing here. Down $15, not what the market was hoping for today.
Definitely not what the market was hoping for. And I will say that if Microsoft was any indication the way we will punish any degree of slowdown in growth, I think that this has been fairly indicative of exactly what we saw from Microsoft last week. So beat expectations, fell short on forward-looking revenue. They were on pace for actually their largest decrease since October of 2023. At session lows today, had shaved off roughly 170 of their market cap of around 2.3 trillion, which would be, again,
that's
the
impressive.
largest one-day decline in value if it closed at those session lows. Now,
I agree.
Revenue decelerated from the fourth quarter, still jumping 30% from a year ago, but to 12 billion. That was after we saw that 35% jump last quarter. Also did miss forecast at around 12.2 billion. And so similar to its fellow tech giants, we did hear more on its CapEx. They are reporting CapEx in the quarter of around 14.3 billion, above expectations. Well, they are targeting 75 billion in CapEx now in 2025, which was well ahead of what Street had been expecting. So we are expecting now perhaps some updates, or we're waiting on updates from the Department of Justice antitrust case. Not a lot of mention on that on the call, but I do think that this was exactly what we saw with Microsoft. Slowing growth, still phenomenal numbers, but just not good enough.
Yeah, I think it really does mirror that. The only difference being that Alphabet was at all-time highs going to that report. Microsoft has been a little bit more sluggish, and you would have maybe thought that the market was on top of Microsoft struggling a little bit. The fact that it was caught as offsides as it was in Alphabet, I think, is surprising. That said, it's a 7% decline for numbers that are not that bad in Alphabet, but when you're at all-time highs, you got more to give up. The market itself being higher on the session, despite this miss, or negative reaction, I should say, in Alphabet, negative reaction in AMD, all things considered, still pretty healthy, but maybe not the end of this Alphabet disappointment story. Kind of all in still on the CapEx, which I thought was interesting. Really no changes yet from the hyperscalers in reaction to that DeepSeek story that broke and the capacity differences. So that to me is what I was expecting to hear, and so far there has been none of that. So time will tell ultimately if that comes to fruition. Next on our list, Uber though. Uber, another name that has been volatile around earnings, and unfortunately this time around volatile to the downside.
Yes, unfortunately volatile to the downside. This one's a bit more clear to understand why. We're down about 7% right now, but revenue of $12 billion for the fourth quarter did mark a 20% contraction from a year ago. Did surpass, though, the street's forecast for around $11.8 billion in revenue. They did say their fourth quarter net income that also really benefited from the $6.4 billion tax valuation release and a $556 million benefit due to unrealized gains related to the reevaluation of their equity investments. So when you look at that, their operating income, $770 million, that sharply missed expectations at around $1.15 billion. YouTube advertising revenue also did beat the mark at basically $10.5 billion. Google Cloud revenue, but we're seeing, I'm mixing up my reports here, but when looking at Uber, for the current report, they do expect their gross bookings to rise between 17 and 21% from a year ago, translating to a range of around 42 to 43.5 billion. So they did say that right now they are still really optimistic. I mean, the commentary was fairly positive, but I will say that when you look at the street right now, a lot of analysts paring back their price targets, but this team had pretty much no bears in it going into this report.
Yeah, they're pushing back on their big takeaway that I saw was that they think this robo-taxi phenomenon is way farther away than Elon Musk and perhaps Waymo wants it to be. Time's going to decide that, I think, because we're starting to see the rollouts in big metro areas that, like Austin, for example, or the Phoenix area or San Francisco. Well, once you start servicing those roles, they're able to do it cheaper. If they're able to do it, Uber's going to have an existential risk on its hands. So they're going to want to be expected to be invested in that area, but it end up might be a partnership, who knows. But interesting space at the moment right now. Uber obviously under pressure here today. Let's flip to some previews though. Qualcomm,
Uber
on our minds. Qualcomm, a name that's been tied to Apple over the years.
I said it would pull back if it didn't break out to 200.
But a stock that did pretty well the first half of last
So it hit my first support.
Yes, this name unfortunately was caught up in some of the.
That's what I called in the video.
In these more various hardware exposed stocks.
That's probably where it'll bounce back from.
The first quarter, the earnings today after the close, markets will be keeping an eye out for demand trends relating to China OEMs as well as demand for their Snapdragon Elite X and an outlook for iPhone modem shares now in 2025 and 2026. So the street's expecting about an 8% jump in earnings per share on revenue that's expected to also climb about 10%.
Come on, drop.
Analysts are expecting some upside driven by the increased demand of China smartphones as well as the rollout of these handset subsidies. Now, KeyBank was a note I saw that did say they expect higher results, higher guidance. They said they expect revenue of upwards of $11 billion and earnings per share of roughly $3. We do know that the street analysts have revised their estimates for both top and bottom line figures now over just the last quarter or so. Earnings estimates have been revised up 18 times, revenue about 13 times. And JP Morgan also was another one that mentioned these robust trends for Chinese smartphone OEMs. So this company just have that international exposure and also consistency as far as beating earnings. They've beaten earnings estimates almost 90% of the time and revenue estimates now 75% of the time over the last 2 years.
Yeah, one to watch, no doubt about it. I'd like to see stabilization in this name, which we of course have seen since the middle part of December. Actually, it looks like the low point of the last, month and a half, 2 months is actually my birthday, December 20th. So we want to see that those levels are maintained, and granted, they're quite a ways away, 150 or so to the downside in Qualcomm, but a name that has had a much better start to 2025 than it had ending of 2024. It would like to
I'm praying for a miracle.
First half of 2024 looks like. So Qualcomm, one to watch for when we get those earnings results here after the bell. Eli Lilly. Now, this name is a well-known brand, but it took the world by storm alongside a couple other players in this, GLP-1 space, or the drugs kind of associated with diabetes, but also weight loss.
I don't know if he did.
But that has been a rocky marketplace as well the last
They might drop the charges on him
It
too.
really has, and I think that you look at the volatility in Eli Lilly, you look at Novo Nordisk, which had some mixed right now data from various drug trials. That's sort of been their turbulence. Eli Lilly, though, much smaller as far as its right now GLP-1 offering. So Novo Nordisk does still lead in that one component, but Eli Lilly is more than just, these various weight loss and diabetes drugs. They are definitely more diversified, but every analyst I read this morning highlights the fact that Mounjaro, Zepbound have grown substantially, actually,
I'll ask and see.
roughly tripling from around 5 billion to 16 billion. So top line guidance right now for 2025 would imply about 32% growth from the midpoint, but it'll be interesting to see what the GLP-1 and tirzepatide space looks like now in 2025. Actually, some of the enthusiasts are saying sales could nearly double to about 30 billion as they expand globally, perhaps cannibalizing Trulicity and taking share from Novo Nordisk, semaglutide competitors like Wegovy and Ozempic. So I think that will be definitely in focus. Also, any indication of margin growth, what that looks like for the coming year.
So I'm getting better here. We just need to either sell now and take a smaller loss.
Income, no doubt, but
if I sell now and take a smaller loss, or I wait, just give it a little bit more time. But man, I've been on Pinnell's. I've been on what do you call it? Nails, standing on nails or pin. I'm gonna hold. I gotta hold. I'm not hearing any. If I listened to CNBC, I'd feel better about holding on. I get out at 240, and that'd be a lot less loss than what I was at there a second ago. I should go ahead and sell them, so I won't have to worry about this trade. But I know it'd be like this morning. If I sell them, it'll frickin' drop on me. But I'm at support. I got to make a business decision. Could sell. If I sell them now, I'll only be down $140, 180. It's hard to listen to her when I'm down. Kind of gets on my nerves. That squeaky, high squeaky pitched voice. Uber took a big hit.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close.
Think that I lied or I did this or
in the
that.
Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time for our Chart Master segment. And today we are diving into some earnings previews with our lead market technician, of course, Rick Ducat, to help us look at the technicals and 2 names that are still reporting. We'll talk Qualcomm first, which has seen some volatility, actually similar to our next name, but has been trying to recover, has seen a pretty stark nosedive really on the back of some of their earnings disappointment. So now as we set up for the next earnings, what are we watching?
Yeah, not a lot has happened since that last earnings event here. You can see that we bottomed out here at this green line around 151.27, but we also, I guess it would be kind of debatable where the top of the range would be. By one measure, you could see the closing prices, the series of closing prices around this level and this level. That was about where we topped out a few times. But I think you could also kind of argue that this area is very significant too, because it goes all the way through the entire thing. That's almost a better match. So it would be perhaps 175 to 180, depending on your perspective, would be a resistance area to consider here. But in the shorter term, the action is seeming to favor the bulls. We held the line at those previous lows. We did make a little bit of a foray below it, but recovered quickly. Now we have crossed above our moving averages. The faster moving averages are starting to cross above the slower ones. We're within this upward sloping channel, but we are stopping out at this familiar area, that point near 175, where we seem to be getting stuck here. So that's the potential tipping point to the upside, Jenny.
I'm really putting in a lot of money on this trade.
More upside, as we know that earnings can go very starkly in
I just
either
bought
direction.
more of it
So when we
and it's
watch
back up again.
recent momentum historically tends to somewhat stall out on this
Got me worried.
day of earnings, or the day before earnings rather. But when we watch Qualcomm's RSI or some of the key trends here, what are you seeing?
Well, you know, our RSI study did not make it through here, but for now what I would say is that we can see that during a period like this, the sideways consolidation would indicate a period of momentum languishing and becoming more sluggish here. But, you know, momentum often slows down as we head into an earnings event as well here. So let's focus on our next chart then.
Okay, yeah, so we're watching, and I think that actually, frankly, just more clear cut here is support and resistance. I mean, what levels are we watching? I do think that difficult to gauge a lot of these earnings moves, but at least having a range does help to oftentimes somewhat guess a lot of the volatility that tends to follow.
So there's 2 levels that stand out nearby in terms of key price points. There's this volume profile point of control near about 170. That's the area of heavy trading. You can see that it rather closely lines up with our yearly linear regression line, our yellow 21-day exponential moving average, and the lower trend line of our channel. So all that comes together around maybe 168 to 170 or so. And just below that, we have our 2 longer-term moving averages. Orange 63-day, purple 252-day exponential moving averages as well. Those come together near about 165. If we were to move to the upside, that area 175, that ceiling, and then we've also got the upper level of our channel lining up with the other key point, that 180 area where price closed and hit highs later on. To look at a 5-year chart, we can see that we have certainly had a big fall from grace here. We are within the thick of a longer-term volume node. A key area to the upside seems to be 185 as well on this bigger picture chart. To the downside, the next heavy node is near about 145.
Okay, yeah, so this name, at 174 right now is where we're currently trading. We are up about 6 cents per percent on the session. So all that in mind now, Alex, when we look at trading this name for example purposes, walk us through the thinking here.
So this is going to look a lot like the Alphabet trade that we did yesterday, and for those who watched,
Randy's a badass.
So it doesn't mean that just because these are high probability trades that they can't run into trouble around earnings in particular. But looking at selling a put vertical below the market, looking for this recent January strength to at least continue enough to maintain the recent bounce back in Qualcomm shares. Looking at selling a put vertical,
QCOM
162.5
earnings coming out.
all expiring Friday. Looking for at least a 50-cent credit. That would be 1/5 the width of the strikes. It creates a 4-to-1 risk reward. So you're risking 200 with a chance to make 50. Exactly the same price dynamics, risk reward dynamics we had in Alphabet. 162 the break even. So you got cushion here, Jenny. That said, you may need it, and sometimes it's not even enough, even with that cushion, as we saw with, of course, that reaction in Alphabet shares.
As we do, I tend to like it when it's to the upside, but unfortunately, the risk is always you can move outside of just where you're basically projecting the range in which shares will trade post earnings, and that is, I think, the $1 million game is to guess exactly where we'll move post earnings. But Rick, now we're shifting gears, looking at Eli Lilly, very different company, but actually from a performance basis. This name was at one point unstoppable. We've since given back a lot of that strength as evidenced by this chart, but trying to now make a decent recovery.
Yeah, we have given back some of that strength for sure, but we also managed to hold on at around the point of the previous lows. Look back here, you can see that area around 710 or so, and then you look even further back here, you can see that was a similar point around which we bottomed out. So then during our last downward leg, we did not come below those intraday lows. We did make a new closing low beyond the previous one here from mid-November or so, but we did manage to bounce. Like our last chart, we are above our moving averages once again, and the faster ones are starting to cross above the slower ones and starting to trend upward. An important sign of potential trend shift. There are other interesting similarities between our last chart and this one as well, because we have a similar resistance zone type of area. Look over here, because we have a low point and then a subsequent high point near about 860. But if we were to do more of a line of best fit, so to speak, a lot of the highs and a more significant close matched up around 847 or so. 847 to 860 are 2 points to keep in mind as we progress through these charts.
Okay, now when we look at RSI and some of the momentum behind this trend, I do think that a name that has seen, again, a pretty decent bounce, but it's just hard to even assess when you did see that we were at one point peaking out around 972 a share.
So this chart is some good examples of why we keep track of the extreme price levels and the closes and all this sort of stuff. But we also can use it to look for these divergences in the RSI. Notice here, that was our best close, even though we did make higher intraday closes. That area right around there near like 948, 949 or so. We had a real struggle trying to make our way above that level after this very sharp V-shaped dip and recovery. Then we can see longer-term bearish divergence. RSI made a series of lower highs even as price was kind of eking out higher closes here. Now we also saw that start to resolve itself.
Lily's about to hit my last resistance.
Longer-term trend line, RSI breaking out above.
And it hit my support,
red downward
but it
trend
didn't
line
trigger.
and above the 50 midline. RSI improving to the bullish side.
Okay, see, it's good.
I did that after hours on Monday.
That's optimistic here ahead of this report. So now, when we watch some levels
Monday morning.
to earnings, I think that
Well, that'd have been a good trade if it had triggered it.
Massively volatile name on the back of earnings, but hey, I mean, we've seen this name move.
So according to our volume profile study, some key trading levels right around here near 820, 800, and our volume profile point of control 775. That's all the heavy trading areas here. Now we are in a kind of a no man's land here, this low volume area here that encompasses our resistance zone that I mentioned earlier. So beware of fast moving price activity. If we do start to enter into this range, volume starts to pick up again around 910 with our +1 standard deviation channel above that near 923. 803. So now if we were to look at a longer chart,
Goolsby should bring the market
we can
down.
see that the volume areas that really stand out on this bigger scale, around 900 and around 800 are the important ones. We just bounced off of our yearly linear or 5-year linear regression line.
780.
The best fit near 803. So this seems like an important area to the downside to watch.
Okay, yeah, and then this longer term chart.
I'm still in these
really
things, so
exciting, but again,
I'm
still seeing that
hoping.
substantial pullback.
I just need one more little run, and I've got a lot of contracts. So far, it's not been too well. Been in it way too long. I really don't have much time left. I need 20 more cents. There we go. All right. I think I'm going to get out. I'm green now. Shit. I don't think I've been so worried in a long time. It just won't break that frickin' support. It's what, 1, 2, 3, 4, 5 times now. Oh, finally, fuck. Watch me sell them here, and you get and the motherfucker drop more. Or Bible verse. We got out. Neglect, disagree, overlooked. Acts 6.1, chapter 6, verse 1. Needs, used as a phrase, must needs to get out of the trade. Luke 14:18, meaning to be necessary. So I'm out of it. I had a lot of contracts, more than I wanted. Oh, man. I'm out. Still made good money, but I'm out. I had 24 contracts at 220. Oh, I can barely breathe. Ain't nothing like what Bobby had. Shit. Oh. I'd panic. If I had that much money in a trade, I'd panic. I've only made $400. Pins and needles, that's what I was thinking of. Yeah, I heard talking crows when I was doing mushrooms. Chris. They talk to me all the time. It's been a long time since I had that money in a trade. I had 6 earlier calls and I'd have made 10, 12 grand. And sold them at $6 and $7. I got lucky. I mean, I just didn't know. I sat there. Well, that's still okay, but shit. I did fart. About ready to buy them again here. They're at 140, but I just don't like playing puts. Not this late in the day. I was about ready to deliver mail to Randy's house. That was interesting. I don't think I've been in such a bind in a while. God, what a freaking run. That's where I got in them at. I don't know, it just kept depreciating. Not yet. I want you to explain it to me a little bit more. Seems like they're just trading for pennies.
This year's NBA All-Star Game is going to be can't-miss entertainment. We've got a whole new twist on.
Dun dun. That's done. Every time I need to relax, I'll watch her for a bit. Every time I write to her, she writes back, which I think is special. It's been a while since I wrote on here. Bye-bye. Okay. That was a tough trade, so I'm ready again. Look at that, we broke out. Man, these things, I bet you them calls, the 2500s, they went to 2960. I felt good about this morning, buying this dip. And Becky Quick this morning says, well, the retail traders are buying the dips. And the other people were saying, we're not buying the dips. The institutional traders were saying it this morning because they're talking about tariffs, China. And then he brought on this guy from Goldman Sachs saying that the other countries are saying we could do without us. And she says, well, the retail traders are buying the dips. And the tariffs have been on ever since Biden been in office. I mean, he didn't do nothing about them, the Trump tariffs, and we had a great run. So it kind of contradicted what this guy was saying. I think it all has to do with all the printing of the money is why they just don't want to admit it because we're so far in debt. And I think if we just took care of that debt, which, I mean, it's too far down. I mean, we're too far gone. It'll take years to fix it. But we can stop it. This last administration spent $14 trillion over budget, not counting the unfunded liabilities. So, I mean, it was really a massacre. Where it took Trump and Biden, I mean, Obama probably 12 years to come up with that kind of debt. It only took Biden 4 years. Trump had it too. I mean, he was $10 trillion in debt over budget by the time he got out of office because Obama run it up 12 in 8 years. And then Trump did 10 through COVID. If it wasn't COVID, I don't think he would have done it. It'd have probably been about 25. But Biden did it in 4 years, plus not counting unfunded liabilities, which you really won't know until later. Both time I watched the YouTube channel, it seemed like they were freaking out on their trades when they got in. Like I just did. So this is kind of like, it was started out to be a fallen wedge, but it ended up being a bull flag if you bring it line across there. That was a tough trade, man. That kind of put me in shock for a few days. That's a bull flag right there. One morning, and they got into an argument because they didn't know which direction the market was going to go. If he'd have held that one guy, if he'd have held his calls, he'd have made a killing. The other two were not sure about it at all. Okay, I'm gonna go pee and I'll be right back, fill up my water. As a kid, I was a Boy Scout, so I knew exactly how to play with fires and matches. It was my bike, my bicycle. It's my bike. We had a circle drive that had speed bumps. So I had a Huffy. You know how heavy Huffies are. 1967, 68. I was in third grade. So we had a race, and there was apartments. There's a circle. It was a circle drive with apartments on the inside, an oblong shape, circle, not a circle, but like a racetrack. And at the end of the curve, there was a chain link fence. And the speed bump was right before you get to the chain link fence. So I was trying to beat this guy around the third corner, the second corner. And I jumped the speed bump, got on my bike and jumped the speed bump, and I just kept flying. And my face run right into a chain link fence. And I had stitches in my eye. You can still see the stitches. I went home, Mom, I had blood all over me. What happened, son? I got in a race and I jumped a speed bump, and I went 8, and this was back during Evel Knievel days. We were all trying to be like Evel Knievel. I hit that speed bump perfect. I mean, I couldn't hit it any better. And I just flew. My face, when I landed, my face landed on the chain link fence. And I had stitches in my right under below my eye. So after that, I just started being more careful. And I still got that instinct and I got rid of my bike last year, a couple years ago. I had a Bianchi 7-speed where you have the gears on the inside the hub. So I always liked riding bikes. And it was a $2,000 bike, and I give it to my nephew, and the dumbass got it stolen within a month. I had that bike for 20 years. I was so pissed off at him. So you could have got a car for that bike. Don't you know that? I would have smacked him. That bike went to Hawaii with me. It went everywhere I went. I had it for longer than 20 years. But, 24 years ago, that bike was worth $2,000. In fact, I got a picture of it, I think. I thought it did. I can't find it. Sure, I had one. Here's a picture of me with my frame shop back in 1987, 97, 94. Picture Frames Plus. I did picture framing for 18 years. Well, that was a pretty good job. Business. That was in 1994. Plus, picture frames, mat cutting. Well, I'm going to get back to trading here after I go pee.
Show lineup for you today.
That kind of shocked me a little bit.
Uber earnings and impacts to China tariff retaliation with Kevin Ings. Then Anthony Siccaro, he's going to take a look at inflation and the impact of a potential trade war. And Mark Lopresti, he's going to join us to cover the
trade war
after a full batch of earnings. Alphabet and AMD to the downside today. And we'll also have a discussion on commodities and gold hitting all-time highs. The precious metal.
Tesla down.
He's going to join us to discuss that. Then we're going to wrap up the show with a look at Disney post-earnings. Stock was up initially, fell as the session went on. Now let's take a look at the markets real quick here.
Be careful of Tesla because of China, Randy.
In positive territory, the S&P 500 up about 0.2.
Wall Street thinks that Tesla's in China. Well, another person got on there was smart about it. This girl, Kathy Woods. Was talking about Tesla in China yesterday, and they're trying to be the people on CNBC were trying to ask the questions about, well, what happens if the trade war? They're going to, we're worried about Apple, and they laughed about Google. And Google, you can't use Google in China, but they want to do some kind of inquiry about Google, see if they're doing something illegal. The same way with Apple, they're picking on Apple. And so they brought up Tesla, and Kathy Wood says, well, and they were talking about the robot car. I said, well, at least, she said, at least they're trying to work with him over there. America won't work with him. Or at least they didn't for the last 4 years with Elon about his taxi car. And she said that they don't want to get him too upset because they want to learn his secrets. His autonomous cars or whatever you call it. I really enjoyed her interview yesterday. It was a good one.
What that may mean, there's uncertainty going forward with Uber, but the numbers were solid. 321 versus 50 cents estimates. Now that's because of a big a one-off event that gave them.
What shocked me,
the revenue. I
was in SPX puts, and I was down. I got in way early, and then it dipped, and I thought I was doing good, and then it bounced up, and it never would break this channel of support. And every time it got close, I'd get ready to sell, and I wasn't green yet, so I kept adding on every dip. And the more I added, the worse it got. The bounces up, and I'm going, oh shit, what did I get myself into? Got down to 165, and I added at 170, like double, and I had 24 contracts. And then it bounced again, and I'm going, man. And it would dip to 160, 170 from like 240. I had to have 255, so the last time it dipped, I bought more and doubled up. I had 12, and then I bought 24 at 160, 170, and I brought that cost average down to 220. So yeah, I mean, I got into it 4 different times, and every time I got into it, I got hurt more. And then finally, that last time it hit down here, I just made the decision, well, I got to sell it. I just got to get out of this trade. And it could have dipped on down more, and I'd been filthy rich, but so I got out at 240 from 220, and I had $5,800 in the trade. That's probably, and you know, 3,000 is my limit. I got out green, $400. I know it's God. I read a Bible verse. I sat in it so long.
There are a lot of moving parts. There are the tariff situation, but you know, is Trump really using that to impose the tariffs? Is that really going to increase the price on things, or is it just more of a political move? We saw Colombia back down as a result of that. So I'm not convinced that the tariffs are going to be an extra tax on the American consumers, which is, you know, what they've been saying.
Finally, another smart guy.
The opposite of the tariffs is the tax cuts that are going to continue.
This guy's got it. I mean, CNBC, if you listen to him, I couldn't stand listening to him again this morning. They were really getting down on these tariffs about how bad it's going to be. And all my liberal friends are just saying the same thing. Avocados are going to go to $5 a piece. Well, there goes 3,100 for these calls. This guy's right. He's got it 100% right.
We're going to have to fight inflation.
Yeah, we had that ADP
Anthony
came in above expectations.
Secaro.
Even though the JOLTS number yesterday was a little bit lighter than expected, about 1.1. It's down to 1.1 job openings for everybody looking for a job at this point. But Anthony, when you look at the economy as a whole, GDP still in that 2 to 3.5% range, and the job market's robust. You mentioned wages are still increasing above those inflation numbers that we've been getting, which are above what the Fed's mandate is of about 2%. So it seems like it's smooth sailing at this point, even though we've seen additional volatility so far this year.
It is humming along. For the next 6 months, there's not really any reason to see that there could be a major correction or problems in the stock market. Everything is slowing though. You mentioned the report showing that there's 1.1 jobs available per worker. Well, when I was talking about this a couple of years ago, that number, I think the highest they got was 1.9 jobs available per worker. So that now has come down. It's softening. GDP was at 3.1% for Q3. It was, I think it was a 3% or close to it for Q2. And for Q4, it came in at 2.3%. GDP is slowing. That's what we want. Unemployment has ticked up from, I think it was 3.
If I was younger, I'd be working for Elon Musk. I'd just leave and go to Texas and get a job working for Elon.
Is going to be a result of what we see. So
if I was younger, if I wasn't doing what I was a picture frame. I've owned businesses 35 years of my life, so I was an entrepreneur. I didn't want to work for nobody. But if I was to work for somebody, it would have been him.
Far this year, we're only about 1.2% off all-time highs. The Dow Industrial is only about 0.5% off all-time highs. When you look and you tell your clients, do you just stay invested in this market? Do you wait for that pullback?
I didn't start studying stocks real hardly until about 2002. Then got into it in 2004. And that was after I sold my frame shop. Then I moved to Hawaii and then played in a band. I figured that wasn't for me. Although I wish I still did it.
Market crash. The Federal Reserve didn't want the market to crash in 01 with the tech stocks, and they didn't want the 60% crash in 08. And that is not off the table. Something like that in the next 4 or 5 years could happen. And if you're about to retire, you're within 5 years of retirement, and we have another catastrophe in the market, it could cost you your retirement. So if you're retired, probably it's a great time while the market is at record highs to take some chips off the table, start shoring up your portfolio so that you'll be able to retire regardless of what's happening with the market at that particular time. But the time to do that, to make that shift, is now, not after it's too late.
Yeah, and real quick here, Anthony.
He's a smart guy. This guy is.
The fact that we're seeing rotations into specific areas, maybe some underperforming. Last year we had healthcare, consumer staples that were underperforming a little bit. Is that the key here, is that you have to rotate, maybe not just get out of the market, but just rotate to specific sectors that might do better in a new administration?
Well, there are certainly sectors that are going to do better. Energy, right? Drill, baby, drill. That's something that if you're focusing on that, I think is a good sector. The tech sector, because of all the deregulation that is likely to occur, and some of it's already occurred, I think those are two good sectors. The financial sector is doing great. So there are sectors that you can focus on. But what we're telling our clients to do, regardless of age, is focus on investments that are going to pay you income. Even if you're younger and it's dividend-paying stock, those dividends give you something to dollar cost average back in. So even as a whole, if the stock market is flat, at least you're getting 2 or 3 or 4% a year to be able to dollar cost average back in. So I really think, regardless of whether you're younger or older, focusing on investments that are going to pay you some type of income and dividends is really going to be a key to your long-term success.
Yeah, and I think with some of those beaten down names, those dividend providers, probably some opportunities out there. All right, great discussion, Anthony. Have a great day.
Thank you, Tom. You as well.
All right, that's Anthony Siccaro, president of Providence Financial and Insurance Services, joining us breaking down the macro theme. But coming up next, Rick DeCat, he's going to join us to cover unusual option activity. We got a couple not underperforming names, some outlier names, BigBear.ai, Match Group, and FMC. We're going to cover those when we come back.
with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I still ain't got him there and went and peed yet.
Welcome back to the watch list. I'm Tom White, filling in for Nicole Petalides. It's time to look at some unusual option activity. For that,
Where's Nicole?
Rick the Cat, he's lead market technician here on the network. Rick, we got some outlier names here, maybe some unsung names that a lot of people haven't heard about. BBAI is the ticker symbol, Big Bear AI. This stock is spiking above $7.
I'll right back.
50%. I believe it was up over 50% at one point in today's session. But I'm guessing on a low price stock like this, trading around $7, we got a lot of option activity.
Yeah, a bit of a pullback since those highs. We did hit highs of 754 earlier today. And, you know, heavy trading activity in this name. The February 21st 6-strike call options are 39,000 contracts of volume today. So heavy volume in that particular option. Everything else is, I believe around 14,000 or less in terms of volume for this one here. The value of this option has increased about 730% today, as high as that. You know, so really big day for this particular one. And then the trade that stood out, plus 2,000 February 21st 6-strike calls and an 84-cent debit here. So, you know, compared to some of the dollar amounts we see, $168,000 debit may not seem like a lot. That's a pretty darn big trade in reality for most people, though. And we can also see that this looked like it was a sweep. It looked like there was a lot more buying. It's difficult to tell exactly how much here, but for sure, you know, there was this particular trade earlier today. Last time I checked, the options had about doubled in value, so it seems like it was working out pretty well for this person here. Break even 684, days to expiration 16. Looks like if we were to move up to that max profit area, the profit would be about 475,000 or so, which would be around the area of about 935 would be the expected move for that option series by expiration time.
Yeah, over 40,000 contracts have traded on that strike. But it's not surprising, Rick, when you see a name like that that's up so significantly. It's low price. You're going to get some retail traders in there. But the news on the stock was that they actually got a Department of Defense contract on this one. If you take a look at that's the reason that it's up now. Wins a Department of Defense contract, Artificial Intelligence Office to advance Big Bear's virtual anticipation network prototype. So that's a bonus because this is a money-losing stock, but getting a giant bid in there today. Next stock you got for us here, Rick, is Match.com, down 7.5%. It's been downgraded recently. The stock's off about, 5% from year-ago levels. It's been chopping around, but it seems like every earnings, the stock just takes a plunge.
Yeah, notice as well that they had the switch with their CEO too, so there's a lot going on with this particular name today. Top 5 loser in the S&P 500 as well, down about 7.5% right about now or so. And, you know, the trade in question was a bit more optimistic, though. This was a bullish trade. Plus 4,000, June 20th, 32.5 strike calls at a $4.05
match
debit here. So about a $1.62 million debit paid here is what the actual dollar amount was. This looked to be an opening trade here. There's no corresponding volume that would suggest it's a closing trade. Days to expiration, 135. And the break even for this one is about 36.55, about 8.4%.
I don't know if I'd trade that one.
Upsider, so you can see that shaded area.
Not on the news.
Expected move approximately there. If we were to move up to that expected move high point there, that would translate to about $1.7 million of profit for this particular trade here. And you know, the break even, like I said, 8.4%. Expected move is projected based on our probability of expiring cone study, that purple line, to be possibly up to 40.75, excuse me. So well within the range is that break even there. And a bigger trade too. This trade was about 8.7% of the total options volume. Sizzle of 3.2%, suggesting heavy activity, Tom.
Yeah, that's one of those. This is one of those stocks where you know, you just don't know if their growth is going to continue, right? They're starting to use advertising, some subscription-based services. I think a change in the CEO might be a spark, but at the same time, as you mentioned, getting hammered today, down 7.5%. Last one, and I kind of wanted to cover this one, agricultural sciences company, FMC. This stock's down 32%, leading the S&P 500 to the downside today, and it had earnings. I saw 3 downgrades at least on this stock, getting hammered.
Yeah, you know, maybe not a household name, but important. You know, this is the kind of thing everyone uses. Everyone needs agricultural products. But 33% down. Last time I checked, 32% now about. Biggest loser in the S&P 500. Lowest level since summer of 2016. Bearish analyst action. Bank of America note even said that they could risk a downgrade to a non-investment grade credit rating here. So not good news for bulls in this game here. And the trade indeed was also not optimistic for prices recovering. Plus 4,000 January 16th, 30 strike puts at a 350 debit. So this would be a bearish.
There'd have been another good trade right there if I'd have got the calls there to there.
Closing volume that would suggest
or at least a double top.
So the debit paid about $1.4 million, 345 days out here. Break even comes in 26.50, about 27.8 or so % to the downside. So it would need a hefty move here during that time horizon. But look at the expected move, that purple area there. The expected move could be as low as 21.15, which would be about 42%. So in terms of the expectation here, it's well within the potential range at this time here. Max profit, if it were, or excuse me, expected profit, if it were to get to that expected move, would be about $2 million. And a big trade too. About 12% of the total options market was this 4,000 contract trade. Sizzle of 32, Tom, 32.5. Very, very heavy, unusual activity.
This stock was trading $140 just under 2 years ago. So this has been a significant drop here. And I looked at some of the option activity. A call volume is about over 50 times normal daily average volume. Put volumes exploding at the same time here today. Looks like a falling knife. It's still about $3 off its session lows, which was $34 also. So good look at some different names we typically don't cover on unusual option activity. I like that. Some overlooked stocks there. Thanks to Rick DeCat. He's a lead market technician here on the network. But coming up after the break, Mark Lepresti from Market Rebellion. He's going to join us to take a look at the tech sector and a few stocks that he likes. And maybe he likes Google Alphabet on this poll back here. Watch this. It's coming right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network. Welcome back to the Watch List. I'm Tom White, filling in for Nicole Padalides. It's time to bring in our next guest. That's going to be Mark Lopresti, Chief Market Strategist at Market Rebellion. Welcome to the show, Mark.
Good to see you, sir. Thanks for having me.
All right, so let's get your take here. We had a pullback in the NASDAQ earlier in the session. We've kind of pushed that to the side. We've got some weakness in Google Alphabet, AMD. What was your takeaway from a couple of these reports? Because I know the bar was high in Google Alphabet going into the report. It hit all-time highs yesterday. But if you start looking through the numbers, is this like maybe a buying opportunity here, Mark?
Well, I'm not that bullish on Alphabet. I think part of what I read into this report and part of what was a catalyst for the sell-off was the amount of spending, the massive spending spree that this company is undertaking in the AI arms race. That is not a good indication to me of where they are and where they think they are from a competitive perspective. It may be a little bit oversold considering that they delivered obviously positive surprise on earnings, positive surprise on sales. 31% increase in earnings per share quarter over quarter. That's nothing to sneeze at. But I think people are really looking very carefully to see how these names are gearing up. And they're really parsing things out, right? Which is why you see the mega caps starting to trade on a non-correlated basis. You have a day where one is up very big, another one is down, like today with the Alphabet and AMD. Investors are starting to parse the winners and the losers as early as it may be to make those kind of predictions in the AI arms race. And that's a big part of what you saw today with Alphabet as well as with AMD.
Yeah, Mark, do you feel like that's a good omen to have at this point where, you actually have to start looking at the numbers, not everything is going up in a rising tide type of environment that we saw in 2024 and even 2023 at this point, where you've got NVIDIA up basically about, 4.5%, 5% or 4% today, and you're seeing some weakness in some other areas. AVGO is having a nice day today. So is that what investors have to start thinking about is, hey, I'm going to buy these things that are maybe underperforming because, Google Alphabet got down to what, $115 over the last couple of days?
Listen, smart investors, and when we talk to the folks on the trading desks at the big hedge funds and the prime brokerage desks, smart investors are buying these dips, right? Which is why 2025, as we've said before, is going to be characterized by higher highs and higher lows. So when these really expensive stocks have these corrections, and they tend to be significant, 8% on Alphabet, almost 9% on AMD today, those are not insignificant moves for names at that level, and smart investors have been almost categorically taking advantage of those buying opportunities, and I expect that to continue. But I think it's less about that we think that it's time to start to anticipate who the winners and the losers are of the AI arms race, as I like to call it, and more about, hey, look, all of these names, most all these names are up so much. Are we that surprised to see some profit taking? Are we that surprised to see that sensitivity around these valuations? NVIDIA, one of my favorites, a stock that we're bullish on.
Earnings came out. They said 50% is going to affect them. That's their biggest account. So we got Google next. We had an all-time high last week on Google. Google's another one that's a chip maker, and it kind of kissed Trump's ass here in the last, a couple weeks ago, and definitely at the inaugural he showed up. So we have a support level. We have an ascending triangle right here, and we have a rising wedge. So I'm going to put both of these trend lines in here. The price line is going to be the top of the support level, right around the 9 EMA, right around 197.18 to hold, just around $200. If that holds, we could keep this momentum going, but it's had one heck of a run in a week, and it could be liable to pull back and find that support at 197. We also have what you call a rising wedge. That's a rising wedge right there. So they can pull back to the bottom of that rising wedge and find support right around 193. That's where you want to put your price line, right there on the bottom of that channel. Right on 192.80, 193. If that holds, we stay bullish, or it pulls back to the 50 SMA for a solid buy. Now, Google brings in a ton of money, mostly advertisement. So I think, and they make chips, they're into AI, they've got all kinds of good things going for them. Revenue is going to be real good on this stock. Right around 204 is going to be resistance to break. Support again, right on the bottom of that rising wedge, right around 192, with a pivot point area, which would be the top of that ascending triangle, right around 197. Snaps on my watch. This is coming. So that was Google. So we hit the bottom of my support channel right there, 187 that I called in the video. Sunday, 187.95. That was my low support on the bottom of that channel, bottom of that, right above the 50 SMA, and we hit 187.95 twice. So that's your solid support for right now on Google. Now if that doesn't hold, the next support will be down here at 184. So nailed that support level. $184.87. If it doesn't hold. Like I said, it's already had a real good run, and it broke out of that channel, that rising wedge. It came back and touched the 200 once, and it come back again off earnings and dipped on down to that lowest support that I had on there.
Footing, or are they reliant too much on government and the defense sector and not enough on the private sector? They have figured it out. Their growth trajectory is pretty darn clear. They have a very clear AI deployment strategy, and we think this thing can go even higher. But like with all these things, look, we think it's going to be a good year. We're bullish on the year in general, right? But like most things in life, it's not just going to be a straight line up and to the right. So when you want to get into some of these names, buy them on the dips.
Yeah, it seems like we're still best in breed here in the U.S., and as long as this macro environment stays the way that it is, jobs market, GDP growth and consumer spending. Maybe some opportunities out there and some pullbacks. All right, great discussion, Mark. Appreciate it.
Always a pleasure, sir.
All right, that's Mark Lopresti, Chief
It's a
Market
pleasure,
Strategist
sir.
at Market Rebellion, joining us, breaking down the tech sector. But now let's take a quick break. When we come back, we're going to have Alan Hibbard join us to cover the commodity sector, especially gold, hit another all-time high overnight. Stick around.
Doo-doo.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Tom White, filling in for Nicole Petalides. Before we bring in our next guest, let's get a quick market update here. Got stocks near session highs as we speak. The benchmark S&P 500 up 0.2%. The NASDAQ same. Dow Jones Industrial Average up nearly 250 points, or over 0.5%. And once again, the Russell 2000 leading to the upside, up about 1% on the day on those lower yields. We haven't seen the 10-year yield this low since December 18th. So that's lending some support, especially to the small caps, but also the turnaround. Then you take a look at those yields, 4.41% of the 10-year. Dollar index getting hammered back below the 107.5 level. Gold strong here today, up 0.4. Did trade over 2,900 overnight for a new fresh all-time intraday high. Crude oil at $71 a barrel, off over 2%. In Bitcoin, also weaker, down nearly 2%, around that 97,500 level. So we'll continue to watch those products. But now it's time to bring in our next guest. That's going to be Alan Hibbard, precious metals and alternative money specialist at goldsilver.com. Welcome to the show, Alan.
Hey, Tom. Thanks for having me.
All right, so let's get it out of the way. Gold hitting fresh all-time highs overnight. Now, Alan, is this on the back of inflationary pressures? Because it seems like yields are coming down. That wouldn't be as supportive, but the dollar's also falling. That's lending some support. But is this about central banks around the world starting to scoop up even more of the precious metal at this point?
Well, yeah, it is. It's definitely central banks. It's definitely inflation. It's definitely tariffs, which are inflationary, and it's kind of uncertainty in general. So, yes, central banks have been huge buyers of gold. We saw that in 2024, and that trend is absolutely continuing. And now with the new incoming Trump administration, a lot of the uncertainty that we had going into it is translating into a different kind of uncertainty now that we're here. So, are we going to get tariffs? Are they going to be 10%? Is it Canada, Mexico? Is it 25%? Is it 50%? Or maybe we'll wait until next month, or maybe we won't do it at all, or maybe it's up, maybe it's down. I mean, all the back and forth is just volatility for markets in every way imaginable. So it's a combination of volatility, inflation, central bank demand. It all is extremely bullish for gold right now.
Yeah, and if you take a look at some of the inputs, and you mentioned it, the tariff headlines are causing a lot of the volatility, I think, in this space at this point. But, if the Trump administration is just using them as a bargaining chip, like it seems like, to get what he wants at this point, China is doing some retaliatory measures on their side, kind of pushing back a little bit. But it doesn't seem like it's going to get exhausted anytime soon unless that dollar reignites at this point. And it seems like every time that dollar pulls back, you got somebody coming in there buying it, and that's going to lend some pressure. But, it seems like this is one of those asset classes, even though, people might have just 1, 2, 5% of their portfolio in it. It's worked out well, and it doesn't seem like it's going to stop anytime soon, Alan.
Yeah, I agree with you. And to your point, it is absolutely possible for the dollar to receive a lot of capital from around the world and for gold to receive a lot of capital from around the world. So, I mean, fiat currencies in general are unattractive, but sometimes you have to pick the least dirty shirt in the hamper. And a lot of times that's why the US dollar benefits. However, sometimes you don't want any fiat currencies at all. And no matter where you live in the world, gold is an attractive investment. So we have seen investors increasing their allocations. Yes, oftentimes it is only 2 to 5% of their portfolio, but there are a lot of investors that we're having conversations with that say, you know what, I feel more comfortable with 10%, 15%, or even 20% right now. And especially when you compare it to something like the S&P 500. Last year, the S&P returned 25%, which is incredible, but gold did even better. Gold was about 25.5%, close to 26%. So a lot of people don't realize that gold isn't just like sitting out of the markets. A lot of times it's better than the markets. It's less volatile. It'll reduce the volatility of your portfolio, and in many cases, it'll give you greater returns.
Yeah, you definitely have to wonder about currency risk right now. I think a lot of companies are on an individual corporate level at this point. But when you start looking at geopolitical risks, moving forward, Alan, with the new administration in, the resolution potentially in Israel and Gaza, Ukraine, Russia, does that go away anytime soon? Is that one of the caveats where are we going to see less political implications here for maybe the commodity space in general?
It's a good question, and I don't think that there is like one definitive answer. However, with all the tariffs and all the trade wars going on, I mean, that's a proxy war for a hot war. And if you don't have goods and services crossing borders, you'll have soldiers and bombs crossing borders before long.
No, you're an idiot.
We're in a situation now geopolitically where a lot of our allies are becoming enemies, or at least they're being treated that way. And some of our enemies are being treated like allies.
Well, you're full of
it's
shit.
Confusing in that sense, and it does create a lot of volatility, and no one...
I can't take it anymore. Where have they been in the last 4 years? Who's this guy? How many people have died, you idiot? How many wars have been started in the past 4 years, you ding-dong? Was there a genocide or not? We're trying to bring peace.
Move is sort of a tiny factor in the grand scheme of things. Of course, it is important, no question about it, but I think that some of these other tailwinds for gold are going to be a much bigger factor. So even if energy comes down...
I don't get these people, man. I just don't understand it.
Of the shares and then hold it Discuss Disney post earnings when we come back.
I mean, Biden couldn't even talk.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
I'm getting to where I just want to watch the commercials on here anymore. Chipotle had a knife this morning.
On the Schwab Network, it's time to bring in our next guest. We're going to take a look at Disney post earnings. We got our panel on tap: Jim Worden, CIO of Wealth Consulting Group, and Kenneth Chief and Strategy Officer at Nexen, joining us. Jim, I'm going to go to you first. What was your takeaway from the report? Because initially we saw a nice bid in the shares, but we've sold off since.
Good to be with you, Tom. Yeah, really, I think investors are wanting to see subscriptions to Disney Plus move higher.
That's what I think.
The report was a good report. Revenue was a little bit better. Earnings were certainly better, but I think people are really waiting to see a catalyst to drive this thing higher. Technically, there is a lot of resistance to break out above 130.
Yeah, it
130.
seems like, this thing's been dead money for the last 10 years, but 10 years, if you look at it, it's basically been flat over that period. Kenneth,
10 years?
Any catalyst
really?
Here? Because I think a lot of investors want to get into a name like Disney just because it's recognizable, it's got brand awareness. But it seems like every time one of their segments is doing well, maybe it's getting dragged down by another segment. Give me your
got a head and shoulders for sure.
Yeah, I was generally encouraged by the earnings. I think, just honing in on the subscription numbers, They lost 700,000 subscribers, but that was still less than what they had predicted because of the recent price hikes that they made on their plans. And I think generally they recorded their third straight quarter of profitability across their streaming services, which is a big deal for them because they had invested so much in content and setting up the streaming services upfront. I think moving forward, if you wanted to make a case for Disney, they are looking to launch their standalone ESPN brand as its own streaming app for those super hardcore fans in sports. And I think live sports in general for them will be positive. They just recently renewed their NBA deal, and I think that will be very positive for them. And at least here at Nexon, we've seen generally very strong demand for live sports packages. And I think this is consistent with their investment as well.
Yeah, I mean, look what it's done for Netflix, and they've only had a few things. There was Christmas NFL games, maybe the Tyson fight also, in WWE now. But Jim, when you look at this name, you know, they saw a pullback in Disney Plus subscribers by about 700,000. I think the street expected about 1.4, so that was actually a little bit better than expected. But to Kenneth's point here, Jim, I think the catalyst to the upside is going to be live sports because that seems to be the one that everybody wants and won't just give up their subscription on a month-over-month basis, right?
Yeah, absolutely. Well, you know, I would say the live sports, there's competition, obviously, with Netflix. This is a really tough space to be in. You know, they've got a great brand. There's a very strong moat.
Netflix is number one.
With the parks, with the entertainment, and cruise lines, but streaming is going to be challenging. So if they can make this happen with sports, and at the same time, if they can reduce some of the costs, you know, expand their margins some, that would be huge. And I also would add that content, if they can bring more content that really excites people,
get rid of the view
in the way of movies, in the way of what they put out on linear or broadcast TV as well as streaming, if they can get people excited about that, then that certainly would probably drive the stock price higher.
Yep, we saw that with Squid Games on the Netflix report earlier this year. Kenneth, when you look at it, you know, the average revenue per subscriber actually increased 4%. To about $8 a subscriber at this point. Due to that, you know, as Jim mentioned, the content is going to be king here moving forward. Now, I know they've got other segments of their business that are doing well. The cruise lines, Disney parks are choppy at this point, but if they want to get sticky subscribers and keep that average revenue moving higher, it's going to have to be about content, right?
Yeah, I would tend to agree. You know, we discussed live sports, but they also have made massive investments in other IPs, such as the Marvel franchise and Star Wars, and they continue to churn out very exciting new content in those pieces. But I would kind of return to that live sports piece. In our research, we've seen that 92% of sports are watched live. That is an enormous amount of audiences that you can capture at one time, versus a very fragmented catch-up viewership behavior that we are generally seeing across other verticals. So I think as a company continuing to invest in that area, I think just pivoting to the big game even this weekend with the Super Bowl, this is the first time it'll be actually shown on an ad-supported streaming app. And Nexon research shows that 51% of the viewership will be on a connected television through a streaming app this year versus traditional cable. So I think making those strategic investments in streaming will bear fruit for Disney moving forward.
Yep, let's go Eagles on Sunday, definitely for sure. And I don't like either of those teams. Just somebody else should win this Super Bowl. Jim, real quick here on you know, the segment of their business that actually did pretty well was actually the box office. They had 3 of the top draws so far over the past year or so. Is that an area where they can make actually some inroads here? Because it seems like that is still lagging segment of the industry where people aren't just going to theaters that much anymore.
Yeah, it's a challenge when people can watch things from the comfort of their own home. It's you really need big movies to drive people to go out to the theaters, and so there's competition from streaming certainly, but yeah, they need to do that, and they did that I think with Mufasa and Inside Out too. But they need to up their game, I think, in terms of just getting more content out there. and hitting all the areas that they can make profits with, whether it's streaming, whether it's at the box office. That's where they need to just get people excited, I think.
Yep, content is king. Kenneth, real quick and to wrap it up, we got Netflix as the 800-pound gorilla in the room as far as streaming goes. Do you expect to see that stock continue to do well? Disney's numbers aren't that bad as far as streaming. The 3 straight quarters of profitability for that segment, but it's going to be hard to beat Netflix at this point, right?
Netflix is doing really well. That NFL deal that they signed is a 3-year deal. They saw 65 million subscribers tune in. That's the most watched NFL game streaming to date. We'll see how this weekend goes with your Eagles, but we do believe that Netflix will continue to invest in that area, along with the Tyson fight that did very well for them. So they have a very strong foothold in the franchise business, as you mentioned, Squid Game 2 coming out. But we also see them continuing to invest in this sports arena. I think they're going to do very well.
Yep, they have done well. Stocks just near all-time highs here today, and Disney still lagging. All right, great discussion, guys. It's Jim Worden, CIO of the Wealth Consulting Group, and Kenneth, Chief Strategist Officer at Nexen, joining us for that Disney discussion. We threw some Netflix in there, and go Eagles. That's going to wrap it up for us today here on the Watch List, but stay right here on the Schwab Network. Market on Close is up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Spies at the 200.
Binge watch the market with Schwab Network. Tune in 24 hours.
Got 2 minutes to power hour.
On schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Ameritrade is now part
Boeing.
of Schwab, bringing you an elevated experience tailor-made for traders.
Boeing had a breakout today even.
Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
I'm Oliver Rennick. Get ready to cut the cord. Market on Close is coming up.
Good afternoon. Coming up on 3 p.m. Eastern Time here at the New York Stock Exchange. This is Market on Close. I'm Diane King Hall. I'm in for Oliver Rennick. With an hour left in the trading day, I want to get you a look at where markets stand, especially if you think about how we started the session. We have the bulls really fighting back and putting aside a lot of those worries about the tariffs and the back and forth that we're seeing with regard to the U.S. and China and Canada and Mexico. Obviously, the Canada and Mexico, we've got some kicking of the can down the road. You're certainly...
That other guy got on here, there's been a couple smart ones about the tariffs. It's all about the fentanyl. SPX, we had 400,000 people die of fentanyl in the past 4 years. Bunch of people taking it, thinking it might be a Quaalude or something, that ended up being fentanyl. Drugs are being laced with fentanyl that look like your average Quaalude or whatever you want to call them. If I had any kids, I'd make sure that none of them were taking any kind of pills, that's for sure. I'd lecture him about it. I almost had to beat my nephew to death, finally get it through his head. So he ended up being homeless because of that. And I helped him so many times, and I said, I'm just done. I'm not helping you anymore. You're on your own. If you don't understand, and he's what, 37 now? So he finally got into a homeless shelter and then went through did that for 30 days, and then he got him a job at a call center. Now he's got him he was put in a halfway house, kind of a halfway house where you go out from homelessness and you get into a boarding house, and then he got the job, so he passed that, and I kept telling him for year after year, you got to stop who you're hanging with. You're hanging with trash. I wouldn't hang with that kind of people. And finally, he got enough. I mean, after being homeless and being pounced on and stolen from so many times, and he ended up, every time I try to help him out, I've helped him out, I don't know, a bunch. I bought him clothes, I told him last time I'd help him out, I'd buy him a brand new car and furniture if he'd just get a frickin' job and stick to it. And then he screwed that up. So now he's trying. So last time he was in here, I grabbed him up. I said, you need to get a frickin' job. He said, you don't like to work. He said, oh, I do like to work. And I said, you're lying. And I grabbed him, I threw him up against the wall. And I came within seconds of hurting him. That was about 6 months ago. I was going to beat him to death. Just give him a good licking. And then I just held back. But I threw him up against the wall and my fist came within swinging. I was cocked. I don't like hanging around that kind of trash. I never did. So I bought him a pair of polo shoes this last weekend. So he'd have a pair of shoes, house slippers. We are now into power hour. I've done about 1,200 today, so it's still my limit. ARM.
But importantly, their three largest public clouds have designed ARM-based chips for their data centers, processors from
those
AWS,
itches.
CPUs from Alphabet's Google Cloud, as well as CPUs from Microsoft Azure. And they have the CEO recently saying that 10 of the world's largest hyperscalers are developing and deploying ARM-based chips to their data centers.
We've been going sideways for a very long time.
And this is also named that unlike
I've been waiting for a move, but I just
so
get tired of looking at it.
Dominates alongside NVIDIA. Like, for example, the NVIDIA Grace Blackwell Superchip.
We're back here at the shoulder line of the Head and Shoulders, and that's
Jensen Huang, who's given nothing but all this optimistic commentary around Blackwell.
That's gone on for 5, 10, 15, 20, 25, 30, 35, 40, 2 hours, 2.5, 60, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 60. Yeah, 2 hours from 12:37 to 12:41 to 2.5 hours. And now we're back at a resistance here, so if we break it, we'll go higher. If not, we'll pull back down again to this inverse head and shoulders. It's just not one of them good trading days for me. Although I'm green, I could have been filthy green this morning if I'd have held them calls.
But it's been the focus of investors all week, really since the end of last week, as we get these rising trade tensions between the U.S. and other trading partners, whether we're talking about Canada, Mexico, China. What's your overall view on the tariff actions first enacted by President Trump since they were initially enacted last week?
Yeah, so it does seem like he uses this mainly as a carrot, sort of a negotiating tactic that, I mean, Trump is sort of notorious for making big, bold statements and then using that more as a starting point for a negotiation. So, I mean, you know, if you're familiar with the old real estate negotiation tactics, it's, you know, you go real high and then somebody else comes in real low and you meet in the middle. And Trump is really a master of that. So I think he tends to use the tariffs primarily as that. But the thing that's somewhat worrisome about the way Trump views tariffs is that I'm not sure that he has a super sound economic understanding of them because, I mean, at their core, tariffs are really just corporate taxes. The corporation pays the tariff fee at the border and ultimately passes that on to consumers, shareholders, or labor, in one form or another. And so it's very bizarre for the Republican Party to be so, you know, such a big advocate of this thing that is ultimately a corporate tax. So it's sort of it's a bizarre way to go about the negotiating tactics, in my view.
And I know that you've written that on a fundamental level that tariffs are anti-capitalism. What is it that fuels that view?
Well, you know, they call it free trade, not because it's quite literally free, you know, as in costless. There's always costs in trades. I mean, that's the whole point of foreign trade, really. But the reason we call it free trade is because we allow capitalists and corporations to go out and freely choose who they're going to trade with. So, you know, Apple prefers to build things in China and freely trade with China in order to maximize their margins and then onshore the products back here and sell them at a lower cost here. That's a free market choice for them. So again, it's another sort of weird contradiction where the party of free market capitalism is the one that is sort of imposing the government in a way where they're essentially saying, hey, the government is better at choosing who our trading partners can and cannot be.
Why do you think that tariffs have gained this kind of traction versus the potential economic disruption?
That's a great question. Because I guess calling something a tariff is better than calling it a tax. And, you know, that kind of gets at another, I think, sort of fundamental flaw that I view in terms of tariffs, in that the U.S. economy is no longer a large manufacturing or even export or, you know, trade-driven economy so much in the sense that an emerging market economy would be. So, for instance, China is very sensitive to foreign trade and their ability to manufacture goods and services. The United States is turned much more into a services economy. You can see the chart showing here that manufacturing as a percentage of overall employment is now just 8%. So it's not that manufacturing is insignificant or that it is irrelevant to the United States economy. I mean, we still manufacture $2.5 trillion worth of goods every year. So I mean, we're talking about a part of our economy that is essentially as large as the entire Canadian economy. But at the same time, our core competencies now have evolved. They're good. They're developing services, primarily developing the technologies that go into manufacturing all these things. So I think in terms of the way this is all evolving, there's just, one of the core messages with all this is that you're somehow going to bring back all these manufacturing jobs and reshore everything. And that's just, I think, fundamentally against a huge long-term trend that's evolving in the U.S. economy, where we're evolving away from manufacturing more into intellectual property, technology, and services. And before long, the robots that are inside of all of these intellectual properties are going to be the things that are manufacturing everything. So manufacturing employment, in my view, is in a sort of terminal decline. It's never coming back. You can tariff this and tariff that, tariff everything. It'll never bring back all these manufacturing jobs because that's just simply not what the U.S. economy is anymore.
Okay, I want to go back to an earlier point that you made about it being used as a negotiating tactic. Some have pointed out and argued that it is essentially just a bargaining tactic. It seems to play devil's advocate, for lack of a better way of expressing it, to have worked.
It worked for Biden. It worked for Trump his first 4 years. Why are they so worried about it now? In fact, I mean, Biden got us in wars over it. Or he just couldn't speak.
Hey, if he tries this and the stock market falls 10% and, oil prices go up 10% or something, you rip the Band-Aid off and all those prices just revert right back to where they were before this. No harm, no foul, good try. And, to his credit, this only lasted, 24 hours? I mean, it was the shortest trade war in the history of trade wars. So,
exactly.
I don't know if we quite got the greatest deal in the world.
We're seeing too much rhetoric.
Something.
It's like they're just looking for an excuse. I don't know. I'm just tired of hearing about it. Same thing as I was tired of hearing about the interest rates for 2 years. The market still went up. And they kept saying they were going to knife, we're going to drop, but it kept going up. It kept going up. And companies made a ton of money on high inflation. People still paid for it. I mean, I cut back on a lot of stuff. I stopped going out eating, and started eating healthier. And lost 30 pounds. But I was spending $50, $60 a day going out eating. And that's completely stopped. I go out eat anymore, I get sick or I don't like the food.
Sort of tariff that was ultimately a huge mistake. This is not remotely comparable to that. So I don't think we have.
I mean, we had inflation, and it wasn't. It was because government overspent. And we still had the tariffs on. Just not talked about as much as these guys are talking about it.
That were longer lasting, so.
And it could be just a myth, like a bargaining tool for getting these goddamn fentanyl pills out of here.
ultimately is that I think that all of these tariffs, regardless of how they're implemented, I mean, there's very strategic instances where tariffs can be utilized, I think, in a way that, for instance, in the mid 80s, Reagan negotiated with the Japanese. The Japanese built some, Toyota plants here and things like that. What was the net benefit of that? That's debatable. But there are instances
I'm going to have to stop listening to this. They're going to keep talking about tariffs
like that,
and just go back to analyzing.
But ultimately, we should call this what it is. It's a corporate tax that ultimately gets paid by somebody along the lines of either consumers.
Well, what's the difference of getting our taxes raised then? The threat of raising taxes for 4 years. There's no difference. You could sit here for the last 4 years and complain about wanting to raise our taxes in, but they didn't do that.
Sector, take a look at crude oil continues to move lower. We have both trade tensions and also some inventory data to pay attention to. More market on close coming up after this short break.
Boeing's about to hit my resistance. There goes the SPX.
Download the Schwab Network app and join in on the latest market trends.
Finally broke out.
Anywhere, on any device for free. Schwab Network.
Now we've hit resistance.
Knock, knock. Number one broker here.
Calls that. I didn't even take them. I was looking at
Thanks
them.
for swinging by, Carl.
No problem. So,
Oh my.
This lets me adjust the bass, add more guitar, maybe some
Yeah,
drums.
the 60s, 55s went up $4
I can get
bucks.
full service wealth management, advice, invest on my own, and trade on Thinkorswim.
Carl,
$3 and something.
Oh, I gotta take this, Carl. It's Schwab.
In the 50s, I was looking at the 50s, and they went up about 3
Have a choice in how you invest with Schwab.
off the 200. And the 25s went to 3,400. 6 times that. 6 times 2,800.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Market on Close. I'm Diane King Hall. Or Rennick has the day off. The Trump administration continues to make headlines across the board, but especially when it comes to the threat of tariffs with U.S. trade partners. For more on how that's impacting energy markets, I want to bring in Vikas Trivedi, Global Energy Strategist, Macquarie Group. Vikas, thank you so much for joining us today. Let's talk a little bit about the impact of what we've seen with regard to the threat of tariffs on energy markets, in particular crude oil. I want to get your take on the back and forth we've seen with regard to the U.S. and Canada and China, other trade partners, when it comes to the outlook for the energy sector. What's your view?
Yeah, absolutely. Our view is that the tariffs and the threat of the tariffs have already been doing a lot to the way the market's trading for crude oil. And when just like with all the markets before the initial Mexico deferral for a month, crude was rallying, and it makes sense. There was just a bit of a threat that maybe not all the Canadian crude that comes into the country would flow. We don't think that's going to be the case, meaning even if we somehow end up with a tariff, we think the Canadian crude will flow. It'll just be tariffed on the Canadian side, and they'll have to, live with a lower margin on their end. There could be some disruptions along the way.
We got a lot more ways we could run.
The Canadians are trying to figure out what to do.
It's kind of hard to tell.
Flow. So it shouldn't cost U.S. Motorists much money.
A lot of volatility.
Now, if it doesn't work that way, and let's say the Canadian and the U.S. side end up splitting the difference between U.S. refiners and Canadian producers, you may get 5-6 cents a gallon, something like that, as an increase in the Midwest. So that's Canada. They also export a lot of finished refined products into the U.S., gasoline and diesel into the East Coast. That could have another effect where it's a little bit more direct. It doesn't go through refining. It's just like a higher cost coming in for the Canadians. And if we end up
Hello, Nikki.
the rest of the world as well, which that's a possibility, then the consumer will pay. The East Coast motorist will pay. That would be in the same general range, maybe a little bit higher, 10 cents a gallon.
Good to see you.
Mexico is a little bit different. Most of the crude that we buy from Mexico is under long-term contract. So there, we think the U.S. refiners would end up having to effectively eat the margin, meaning their profits would fall. Probably wouldn't change a lot for the pump price, in those areas.
And then when you think about, let's talk a little bit about China. China hitting back with more targeted tariffs, it seems, on oil, on U.S. oil, LNG, coal. So what are you expecting? Are you expecting to see any shifts in kind of energy trade flows as a result of this?
Yeah, a little bit. I think we export roughly 200,000 barrels a day to China. They import about 13 million barrels a day. So we're a very small fraction of their imports. We won't send it. We'll send it elsewhere, and they'll buy from some other, exporting country. It won't be that big a deal on the crude oil side. LNG, similarly, it's a global market. It's becoming more and more of a spot market versus a only long-term contracted market. So there's good fungibility. If somebody's pricing too high, you have other options. So I think that will probably
Skyworks Solutions.
Two big, commodities.
That's one I've never traded.
Gas, via LNG, and then crude oil.
Ask you about some data we got today. The EIA putting out inventory data as it does, Wednesday is when you get that data. We saw a rise in oil and gas and gasoline inventories. Is that, in your view, is that a seasonal pattern, or is there something, a structural issues that you're paying attention to here?
Yeah, we think it's a little bit of both. We think there is a seasonality. Refiners are going into maintenance now. This is kind of the beginning of the maintenance season, which really accelerates into March. So we're seeing a little bit of an impact of that. And then, we do see a structural oversupply. So even with all the sanctions and the tariffs risk out there, we still think the market is oversupplied. And today's Department of Energy weekly results indicated that. So a short answer, I'd say a little bit of both.
Okay, and a little bit of both. And just really quickly, want to get your thought on level. We're looking at crude oil under some pressure today. What levels are you paying attention to when it comes to crude oil? It's off by 2%. Again, obviously that seems to be, what we had, the data that we got on inventory levels. What levels are you paying attention to in crude oil?
Yeah, we don't worry about what the producers will do until you get to a level of WTI at 65. That's when they'll start rethinking their capital budgeting. And then, as you get closer to TI 60, you can start seeing some producers change their capital spending lower. So from a fundamental perspective, now their break-evens are lower than that. So it's not about whether they can't make money. It's just, do they want to still pursue their full capital plan at a lower margin and a lower return on capital?
All right, we will leave our conversation there. Crude oil down about 2%, trading closer to $71 a barrel today. Our thanks to Vikas Duravetti, Global Energy Strategist, Macquarie Group. Thank you so much, Vikas. Coming up, we'll dive more into the budding trade tensions between the U.S. and China, what it could mean for Chinese stocks. We've got more market on close when we come back.
Doo-doo. End of the day run. The SPY calls that I called out at $1 today are at 234. And I was happy to get 30 cents on them. So that'd been that'd been another 1,000. What do they have a high of today?
Believe me, when it comes
252 a high.
I love Carl's Way. Take a left here, please.
But there's a
Carl's Way is the best way.
Is it?
Those were the
Choosing
603s.
to invest is up to me.
exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
No can do.
Get out here.
No can do.
Where are you going?
Schwab.
Schwab.
Schwab, a modern approach to wealth management.
Do. Yeah, we still go higher. I see the next resistance right up here. Right there. 60.71. I'll have to make a new chart for it. That was a good buy Monday to hold on that dip. Every big dip. So they don't last very long.
Welcome back to
Every one of them been a good buy.
Oliver Rennick has the day off. Vin Harburg, a portfolio manager, Core Values Alpha, joins me here.
That big gap down was a buy. That gap down was a buy. All the gap downs are buys.
Between the U.S. and China. Vin, thank you so much for joining us today.
The guy said yesterday or this morning, he said, keep playing the gap downs until they don't work no more. That's what he said. Is there more tariff talk here or what?
Inflame tensions and really just get to a point where they could have a pragmatic negotiated.
Yep, more tariff talk.
Negotiates and everything. I feel like though they are willing to play a little bit of hardball, especially given the action that China took with some pressure on Apple and the antitrust pressure. Is there?
Trump doesn't want the market to sink. But he also wants to save lives. And I think he's more concerned. He considers any kind of, it's going to be short-lived, is what he says. The pain, if we have any. So far, we ain't had any. Except if you're a swing trader and you're trading options, even stocks. But look at what happened to NVIDIA. Here in the past 20 days. So we just only for a few days went below my support channel. I had 117.86 for my low support, and we were down there just for 2 days, a day and a half, 2 days, and we broke out of it. And resistance is 131 to 139. I'm going to make these channels a little bigger. So I can see them colors. Tesla new low. So I'm going to make that green. I think I'm playing my rule pretty good. You know, if I'm having a real good day, I'll just keep trading and trading and trading. And today I did okay, but I'm kind of upset in two different ways that I didn't hold them calls at morning. And I did say they were going to go up. But I was up $800. Man, I wanted to get out of the trade. And I could have been up 12,000. And then the puts never worked, and I had to negotiate on them. If I didn't have the money, I would have had a big loss. I had to have at least $6,000 just to take that trade. So, you know, I really thought we were going to pull back. So we got to break the 200 for it to be bullish, and we'll run up to that next channel. But listening to these fat cats, they kind of been saying stay away from them. But NVIDIA's done me so well in the past 3 years. I've hardly ever lost a trade on it. And AMD I thought was going to be a good runner today, but again, just wanted it to break out of that wedge, and it did, but it didn't last long. But challenges remain. AI ambitions face NVIDIA's dominance. Analysts see growth, but challenges remain. I'm just not going to trade much for the rest of the day and come in with more sleep and better attitude. I just had a bad feeling today. And I wish I didn't have that feeling, but I could listen to CNBC and it's so negative. I think I'm gonna start avoid listening to them in the morning. And then Intel, what did Intel do? Intel didn't do much. Intel's got to wait for the news of a buyout. We did hit my little support level. I had alert set. We triggered it at $19. So it's only going to pop on news of a buyout. JP Morgan picks winners, losers after DeepSeek debut. How Alphabet, Amazon, Intel, and Oracle rank. Well, I'd say Amazon, Oracle, and Google tied in second, and Intel in last. Well, so we pulled back to support here. I bet you we pull back and hit the 200 and this run stops. It's been going on ever since 10 o'clock, so it's 5 hours to a 4.5 hour run. And it's 2:39, so it's way past my time to trade. Do. I had 5. I had 4 and then I had 1. And I had 24 puts by the end of the trade. And I got out of them right there. Right in the bottom of that channel. I was thinking it was going to drop. Then I said, oh, man, I've been here 5 different times. 6. I'm going to sell them this time. It was a bull flag, so that was a good move to get out of them. And then I just did, I got burned out. I don't hardly ever get burned out, but I did today. I still made 1,200, but that was because of this morning's calls. And if I'd have held the calls, I'd have made 12 grand throughout the day. And I got to learn how to do that. I got to learn how to at least keep one. Especially if I'm up. I can burn, like $340 and take a hit if I have to, but I can always sell it if it don't look good. I sold it when it did look good. So we're coming back to the 200, and we got 16 minutes left. 41, 19. You like to put lotto to the 200 maybe. It'll trick you today. It's tricked me a couple times. This really got me here. This trade right here, that's put me in la-la land. Vegas used to say, Jim, you're breathing hard. Stop it. And I got over that. Okay, here it is right here. Watch it just go all the way back down to the bottom of the flag. Jimmy. They're not moving much. The puts are hardly moving at all, unless you got in way in the money. And still, they ain't moving much either. They hardly moved. 240 to 288 to 605s. That's 40 cents. You'd expect a move like that to give you a couple bucks. But there's right back to the trend line, so that would be it, the exit idea, to the 200. Nikki's here. The 6050s. Oh, SPX. I was looking at the SPYs. Yeah, them what probably moved. It went to what? 80 to 240. Yeah, I traded them. You'd have to be right in that money, out of the money. But that's where I would have got out of the trade. Right in there. It's a megaphone. Rising megaphone. I got 3 of them at least. And that was a 1, 2, 3 top. So out of that list of earnings, I don't think Ford's going to do too well. Although they've turned it, their lots have turned into a con artist scheme. They're probably making profit on used cars over their new cars. Where's that? There it is. Ford, ARM, QCOM, and SWKS. And I don't think I had SWKS on my watch. I had the other ones. Ford. Ford bounced into earnings, and it'll drop into earnings. It's right at $10. That's what I had for Ford. And we dipped down to my support that I called in the video. So that would have been a good little bitty 60-cent trade. Had a bit of buy on Monday. And I about hit my resistance within a couple pennies here. I had 1033 and we hit 1032. Ford Electric Vehicle Executive, next strategy chief, and broader leadership change. So they're getting rid of that. Ford Motor appoints Sherry House to CFO. Let's see what Sherry House looks like. Yeah, she looks like she's smart. She's been in charge of media. Ford hires Sherry House as vice president of finance. May 10th of 2024. So she's getting promoted from finance to CFO. Ford announced leadership changes. That might be a reason for the stock to run. I thought they just changed CEOs on Ford just last year. That's a big promotion for her. And CFO John Lawler will serve as Ford's vice chairman, focused on strategy, partnership, and alliance. They're having a whole big old regime change. This stock could pop on earnings. I've seen that happen before. Right before earnings, they switch everybody around. Then they come out and I complained to Ford last year, called up the main place. I said I did not like the service I got. Although they were pretty good, I mean, I was just not in the best of mood. We'll see how it reacts. We'll know in 6 more minutes. And the other one's ARM. Now, ARM's already had a bounce. ARM's a good one with a lot of volatility. And I called a pullback on ARM, and that didn't happen. There's Ford, AMD, Amazon, Google, Snap. Snap, I said, would be a tough one to break. Merck, Roblox, PayPal. I was right about PayPal. There's ARM.
We got ARM. ARM has a lot of volatility. As you can tell, these candles look real nice. We respect it each year. And we've had a pretty good run this year. So we're going to take this back to the 190, the daily. And we're in a big long Darvis box. So the resistance to break is going to be this gap. Right around 160.68, and support to hold is going to be the 21 or the 9, right about the 9 EMA, and we're going to raise it up to the top of the body of this candle right here.
That's a gap.
Right around 155.27 to stay bullish. If we pull back and hit that 9 on the daily, we can stay bullish and play in this channel right here. This is called a gap. I don't know if you're familiar with what a gap trade is, but once we broke that gap, we run it, we fill that gap in. So it can easily come back down and hit the bottom of that gap and be solid support and still be bullish as long as you're above the 9. If not, we'll come down and hit the 21. And then we're going to use the body of this candle right here, right around 150.07, and then just keep going down to the next body, then on down to the next one. So low support right around 145. But I think if we hold the 9, we can play in this gap. QCOM.
That might be one I had wrong too. Yeah, I had that wrong. We played in the body of that gap until today, last night. So I had that right for 2 days. But we broke out of it. I didn't call a higher resistance. So that's my bad on that trade. And we dipped down Monday morning to 150. So that would have been a good one to take. I would have probably took that if I was paying attention. But then I probably would have said, no, I'm going to wait for 145. I would have said that. Okay, we got 2 more minutes. And the next one is QCOM, and I did that one too. Definitely did that one right. Came back and hit that bottom support, 166, on that pullback Monday morning. And we almost hit a double top. So I have resistance of 178 to break. I did that one good. But I didn't have SWKS. I didn't put that one on there. I got real old trend lines on it. Years ago. 5 years ago. Four years ago, maybe even longer than that. Okay, well, that's it. I kind of wasn't a very good host today. I've had a lot better days of being a host. Where I'm just down. That trade really hurt me. I mean, I held it though. I mean, I held it and I fought it out and I still won, but it was not easy. I went through a lot of emotions. Because I get right to where I was about even. And I did that 5 different times. And I could have got out even or a little bit below and have like a $50, $60, $80, $100 loss. But then I'd turn around 5 minutes later and I'd be down $600 or $700, $400. I'm going, God, just in a few minutes. And I stuck it out, and then we dipped back down to 170 and bought it twice. Ended up with doubling at 170, and then I got back down there again. I had to buy 12 more at 170. I mean, it's a big risk. But I really thought we were going to pull back, and we didn't. We ended up being a very bullish day. And I want to kind of I need to stop listening to CNBC in the morning, especially Squawk Box. Without Joe there, it's a mess. Because Joe will sit there and argue with them. Tesla new lows, yes. You joined Discord? All right. Chris joined our Discord channel. I think he's the one from Spain. So we got to give him a good welcome. He sat here and watched me on YouTube for a long time and liked how I trade. But he probably didn't like how I traded today. That's actually a good pivot point on SWKS. I bet you that thing bounces off earnings. Yep. We're at a solid pivot point. That's why. Adjusted earnings 160 beats 157. Sales 1.6 billion, same as last. Earnings per share a little lower. Here, your earnings per share beats. They beat by 3 cents. Okay. I want to look at Ford. Ford's the one I think is the hard one to call. Yep. Ford's already at support. So this could bounce back up for 25 cents. But look at themselves. That don't look too good. 183,000, 54,000, 71,000 shares, 20, 19,000. Like that ain't too good. But I think it would bounce on the change of CFOs. Then we got QCOM. Revenue beats. QCOM sees gap revenue. QCOM reports 341 on revenue of 11 billion. So yeah, consensus, that's up. Earnings per share is up. It'll all be about guidance, this trade. Then the last one is ARM. arms down. This one's a very volatile stock, and it already had a good run, so I could see it pulling back to support like it did right there, which was resistance at 160.68. Nikki, glad to see you again. I'm going to get out of here. It's a blessing every time I see your name in the chat. Magnificent. Have a great day. Jesse, have a great day. I hope you did better than I did today. I'm going to get out of here. YouTube, thanks a lot for all your support. I'll start my morning off with a song, yes. I had that great steak for lunch. I think that was a good catalyst. That was a really good steak I had today. Real good lunch. Makes me just want to think just go out and buy steaks from now on. But I enjoy my soups too. But that filled me up probably for the rest of the day. I don't really have to eat, but I'm going to snack something. So I take my magnesium in my heart pill, but I'm going to get some sleep. I'm feeling kind of tired. I got up at, 12:30 last night. I'll catch y'all later.